Good morning. Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 28th. All right, just doing a few clerical things here. All right, so Amgen is trying to acquire Horizon Therapeutics. There's some news about that. Horizon is up this morning. We've got most of the FANG stocks look green. Okay. S&P is higher. Futures continue higher highs, higher lows. We're currently trading 44.35 on the futures, 21.50. We're up 21 handles. All right, on the screen is the New York Stock Exchange McClellan volume oscillator. Volume oscillator, not the price oscillator. Oscillator. The New York Stock Exchange common McClellan volume oscillator is oversold, as you can see. And every time it's done this in the past, every time it led to a bottom and a rally. The length of the rally, while irrelevant, is important, of course, but the deeper you go into capitulation or more extreme oversold, the better the odds are for a follow through. Now you can see back here in October, we did like a little double bounce, made a higher low. Okay, this is the daily time frame, of course, and we made a higher low in May, June. That still led to a pivot right around the 200 period moving average. And since then, we've been moving higher after a little dip since the last week of July, where we put in a new high for the year and pull back. So right now, we're waiting for this follow through to continue. Most people are still thinking bearish, or a lot of people are still thinking bearish. Okay, we've got commodities have been, in a weekend video, I talked about commodities. Commodities have been in a range, whereas the S&P 500 bounced. Now, the last time this turned to this degree was 2009. Prior to that was 2003. That led to several years upside. So if you get caught up in the 5-minute, 60-minute daily charts, a lot of times you're going to miss the bigger picture. The bigger picture is things are still improving until they aren't. Okay, industrial production had turned back up. We thought this was going to make a lower low like it did back here in 2014-15, which led to the 2016 drop, 2015 drop into August and September. And then we finally reversed and started moving higher in 2016. Industrial production moving higher is important. Okay, let's go take a look at Michigan consumer sentiment. Okay, that had been making higher highs and higher lows. Okay, it's still doing that. We hit a peak 72.6 on July 14th. We pulled back a little bit. Momentum has turned higher, so that's bullish. AAII bull bear. Okay, when this indicator gets oversold like it was back in October, November last year, bears start capitulating. As they accelerate, this momentum oscillator will turn higher too. We're just now starting to show the first little wiggle. Okay, this has been almost a straight line higher. We've got 7 minutes to go. This is almost a straight line higher. It's finally starting to show a little bit of an inflection point. But for the most part, a lot of bears have capitulated. And we can see that also in skew, okay, which has been dropping, telling you what institutions are actually doing. They're not hedging as strongly as they were the first week of August or in June prior to that dip in late July. Okay, so now we're waiting for this SPY to get back. We got blue elder sticks looking for a follow through. Most of what I'm saying is bullish. You're neutral on VIX VXV. That's the front month versus the 3 month, 3 months out in time. Volatility is neutral. Okay, so they're not looking for big moves in the markets. What else can I tell you? Okay, covered this in the weekend video. The FANG stocks, if they remain bullish today and we manage to get back up to that trend line, look for rejection. We were rejected there at the 50-day on Thursday on the FANGs as well as the S&P. Okay, I have no opinion here. I'm just showing you what the charts are telling me or what the charts are depicting. Subjective in your interpretation, of course, but RSI is rising. We made a higher low. We got rejected at the 50-day. This is the S&P. 4,400 is a major pivot level. That's where most of the volume gamma is. That's the largest gamma strikes. And if we go over here, you can see the spiders, 440 is the major gamma level. Okay, so that's what we're watching, 4,400. We want to stay above 4,400. We bounced at 50% Fibonacci and 236. 236 is a Fibonacci that goes back to October, and the January high. RSI is rising. It's telling the strength of the trend is starting to improve. MACD and stochastics. MACD is turning as a function of price. Stochastics already turned. That's telling you there's more closes in the upper half of the daily range over the last 14 days. This is a trailing indicator, stochastic, but it's telling you what's happening real time. Closes in the upper half of the daily range on average over 14 days and improving. Okay, so we got 4 minutes to go. Let me just get Woody up and running here. You'll hear some what sounds like a woodpecker in the background once I enable it. That's futures. Order flow. Okay, when they're bullish, you'll hear Woody. When it sounds like a clucking sound, that's bearish flow. The reason why I like this is because I don't have to be staring at the screen to know what's going on in the market. Okay, make sure that's up and running. Okay. Let's see, today, Monday the 28th. Let's see what we got. UK has got a holiday today, huh? UK. We got the Dallas Fed Manufacturing Business Index at 10:30. We got a 2-year and a 6-month bill auction at 11:30. We got the Fed's bar speaking at 12:30. And then we have a 3-month and a 5-year note and bill auction at 1 o'clock and 1 o'clock at 1 o'clock. And then we don't have anything the rest of the day. Okay, so we got a light schedule for market moving events, data, with SPY moving a bit higher. Let's see here. Futures in a little range here for the last 30 minutes or so. Little range between 44.34 and 44.38, about a 4-point range. So the 105 is still tilted up into the right. We have green signals. We finished the week with 2-to-1 up volume on the NASDAQ and 1.6 on the NYSE. Tick cumulative has changed direction and is bullish in all time frames except the 4-hour chart. What that's signifying is institutions are buying more than they are selling net. Okay, so they're buying more than they're selling net. Despite what they're saying, that's what they're doing. More stocks being bought on the uptick versus the downtick, net or cumulative, with those time frames from 5 minute, 15, 30, 60, all bullish. Okay, so I'm going to switch to 30-minute, keep an eye on the 30-minute chart. All right, we're about to open here. Good luck. First 15 minutes, I'm not doing much of anything except taking profits off the table where applicable and warranted. If I have profits, I'll do that. Reassess the markets after 940, 950. Look for upward sloping VWAP for bullish trades, downward sloping VWAP for bearish trades, and flat VWAP for no trade. Okay, we've got major support level right around 440. Let me go to the SPY. We're about to open here. Price action's up here at 442. 440 is a major gamma level. All right, we're open. I have no trades on SPY or S&P swings. Semiconductors are pushing higher. Let's see what sectors. All sectors are green. All sectors green. All sectors are green to start. Leading is semis. Okay, all sectors are green. Crude oil is red. Okay, here is the ranking sector-wise. I'll put that in the room. NASDAQ 100 is NASDAQ 100 has 8 stocks red. All right, Gilead, okay, SGen, Micron moving higher. SGen's number 1. Top 30. Okay, focus on the top 30, top 10 for day trades. Extreme high tech alert. All right, we're starting to push a bit higher. We're watching for any signs of a fade back below 440 or 4,400 for the S&P. Okay. Our VIX dropping off. VIX is dropping. Extreme high tech alert. Okay, we want to see the dollar and the 10-year, remember, moving lower. We'd like to see the dollar and the 10-year moving lower. Okay, the dollar is flat at 104. The 10-year is at 4.2%, and VIX is turning down. So these are bullish tailwinds for the markets. Looking for Splunk to follow through. S&P. Give it a few minutes for the markets and the algos to take care of imbalances. Semiconductor index has turned up. Semis on the move. All right, energy stocks moving higher. CVX Energy. Pantera looking for a short on the S&P futures.
High took alert plus 800.
Watch software. It's been a really interesting couple of weeks on the software front because results out of Workday, Splunk, Snow, Autodesk were all a little bit better than expected.
Extreme high took alert.
Webbush Dan Ives comes out on Salesforce, which we'll get on Wednesday, reiterates an outperform. 240 says he sees.
All right, S&P continues higher.
Selling Slack integration, maybe monetizing some of their AI efforts, but that's going to be key. And if Jim were here, I'm sure he'd be talking about the kinds of things we're going to see from the print, and then of course from Dreamforce not too long from now.
Yeah, he'll be out there at Dreamforce as he always is. And again, he did point out last week that things have been rather quiet in terms of any whatever new efforts they're making, for example.
All right, let's look at SMH semiconductors. Continuation. Intel. NVDA. Little spike this morning on NVIDIA. And a little profit taking. Bitcoin on the move. Bitcoin. Bitcoin may be a trade as well. Bitcoin's following through. Bitcoin. BFS. That one's done very well.
Nike today, which we've been talking about on the flip side, that historic lost streak since the IPO, 11 days lower, finally turned it around. Today, Steeple goes to buy, reiterates a buy, I should say, but they cut the target to 135. This, David,
Okay, watch for a reversal here.
The China story, but certainly the Foot Locker quarter last week didn't help concerns about the Americas business either.
No, that Foot Locker quarter was horrible. The stock price obviously reflected.
Extreme high took alert.
When it comes to China, it's so difficult to really be able to ascertain exactly the state of some of the companies that we know so well that do such important business. So whether it's Tesla or Apple or Starbucks or Nike, because the consumer there seems to be affected.
Okay, so we got Bitcoin moving a bit higher. Let's go take a look at the watch list. Okay. Watch list for today, for the week. Caterpillar from the watch list. Cisco, Centos. Centos, a very important economic benchmark or barometer. Centos.
through the way they ship. Or internal there. Internal there. Yes. Also. By the way, speaking of weather, we're going to watch Hurricane Idalia set to become Cat 3 by Tuesday night and looking
Okay.
landfall on Wednesday morning. It's going to hit right in the St. Pete area of the Gulf Coast. We'll see whether that buffets energy at all. We've already been watching that gas on the prospect of strikes in Australia.
All right, tick cumulative is still green on the 30-minute, and fast signals turning upward. Let me look at the 15. Higher highs, higher lows on the 15. That looks good. Spending most of the time up near plus 800, plus 1,000 on tick.
Although only because what had been historically incredibly strong stock performance for such a long period of time seemed to stall. Not just the case for Danaher, but one of its competitors, Thermo as well, TMO. You can see Danaher shares are up, perhaps because they're paying a price that was below what the market had anticipated. 24 is the price. As I said earlier, there may have been a couple of other bidders, perhaps even at a higher level.
Okay, so Bitcoin's grinding a bit higher. S&P 500, little flag at the highs.
So that may have been why AAPL decided to go with Danaher definitive agreement. They kind of put in play as well a while back by I think it was its founder, a gentleman named John Milner, who owns about 6%, not to be confused for us Mets fans who can go back 50 years with John Milner, the Hammer. He hit 22 home runs. We had such high hopes for him back in the early 70s.
He could make a career in professional sports and then
All right, just setting up some sell orders.
High tick alert plus 800.
Good till canceled. I'm not thinking the market's bearish right now. I'm just looking for markets to continue higher. I'm not paying attention. Baozun, a lot of Chinese stocks could follow through today.
Seems to outperform Amazon day after day after day. This week is going to bring us Google next, where the top
With Beijing government talking about cost of trading being reduced. Semiconductors looking for a follow through to push higher. Sectors still all green. Still sectors are still all green, looking for a bounce. Small caps back to 186. Let's take a look at small caps. These are risky assets. So if they're climbing, small caps are climbing, risk on. All right. IWM moving higher. Let me go take a look at the daily S&P. Okay, S&P is right at the 21-day now, getting rejected. Okay, here's the S&P. We just tagged the 21-day and pulling back a bit there. IWM bouncing. That's the 100 period and the 200 period, both in the same location. Magenta is 100. The dotted line is the 200. We got to get back above the 21-day and the 50-day.
High tick alert plus 800.
High tick alert. Tick cumulative still rising.
They reached a new divestiture deal that is now being reviewed by CMA in the UK. Here's what Mr. Smith had to say about it.
I think hope is on the horizon. We have worked very hard, most recently to address the concerns in the UK, the Markets Authority. That's what led us to.
Alrighty. 7-to-1 up volume, 7-to-1 up volume, 7-to-1 up volume, 2.6 NASDAQ up vol. Dollar looks like it's going to put in a lower high. Dollar lower high, 104.13. Looking for that to push back down. The 10 years bouncing a little bit, still hovering around 4.2%. And the VIX looks like it's gapping down a little bit there, just a little. Still very early. It's not 9:45 yet. About to tick to 9:45. Caterpillar on the watch list, looking for a follow through. Okay, here's the watch list. Okay, the watch list. You can see Caterpillar on the move. Cat on the move.
High tickler plus
Caterpillar looks beautiful. Cat, nice looking chart. Follow through day on Caterpillar. Okay, looking good. Okay, Caterpillar looks good. Let's keep an eye on these stocks. Centos, that's a economically sensitive stock. The company has over 1 million customers worldwide. And Mohammed Alarian on CNBC this morning talking about the U.S. is managing to outperform the entire global economies. That said, Centos does have 1 million customers worldwide. And when this is moving higher, it's considered bullish. When it's moving lower, it's bearish. It makes sense. This is tied to economics, the economy. The customers are corporate. They're looking for identity programs for rental, for purchase, and Centos provides that. You may have seen the company trucks running around in the city, especially New York or in San Francisco, whatever. So that's Centos. All right, so Centos, let's keep an eye on Celsius. I'm looking for a breakout on Celsius. Elf Beauty coming off the 50-day. Elf Beauty looking good. Elf. Elf Beauty popping back above the 21-day after bouncing off the 50-day. Walmart bouncing. Tesla, looking for Tesla to follow through. TT, Train, HVAC, construction related. You also have Carrier and Lennox. This is bullish, TT. Okay, just make sure you're using trailing stops on these. If you're entering before 10 o'clock. Okay, Shake Shack. Okay, that looks good. Shake Shack coming off the low. Ross Stores after earnings. They beat earnings bigly. Par Pacific, oil and gas exploration out in the Pacific, as the name implies. Ali, watching for Ollie's to continue. Okay, Lulu. Many of these have beat earnings recently. Interactive Brokers breaking out new 52-week highs. IBKR, new 52-week highs. Okay, we're still looking like we're going to get rejected here on the S&P, so be aware of it. IWM, a little rejection there. S&P 500. Similarly, flat VWAP. Okay, so watching that. Could just chop around. Price action could chop around. I don't like flat VWAP. I like upward sloping VWAP. Upward sloping VWAP stocks. Let's see if Chevron's doing that. Okay, upward sloping VWAP. Caterpillar, upward sloping VWAP. You can see what I'm looking at here. Baozun, SOXL semiconductors, flat VWAP. So right now there's no trade. It's up, but it gapped up and sitting here. Google, a flat VWAP. Okay. Xpeng. All right. Hope everyone's having a good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 28th, the last few trading days of the month. We know that September can be unforgiving as well. Okay. So we want to keep an eye on the markets. Don't get too greedy. Let's wait for a confirmed direction. VWAP up and to the right for bullish trades, down and to the right for bearish trades, flat for range bound trading. The third line, August through September, tends to be a negative return for the indices. Okay, so we're just below VWAP. Google, a lot of stocks seeing a little bit of profit taking at the highs after a gap up. Makes perfect sense. I like to take profits the first 15 minutes as well. It's 9:50 a.m. on the East Coast.
Pretty solid start to the week. Most Dow stocks are up. The only exceptions are J&J and Merck. All sectors are higher, being led by materials and energy. 44.30 on a Monday morning. Don't go away.
All right, Walmart, looking for that directional change on Walmart. Okay, got flat VWAP, market's pulling back. The high of the day, 44.38-ish. S&P, not the futures, S&P. Looking for a bounce, flat VWAP. All right, so sector-wise, all right, SMH just flat for now. Consumer discretionary is flat. Small cap energy, metals and mining, real estate are the top sectors for now. Materials, transports, retail. Okay, flat VWAP, looking for a bounce back into the range. All right, getting a bounce. All right, you can see flat VWAP price has a tendency to oscillate around VWAP. Okay, they're buying the dip. You got a buy signal right there.
High took alert plus 800.
If you're a day trader, you're looking for VWAP to be sloping up and to the right. Okay. That gives you the best opportunity, highest probability. Sloping VWAP either up and to the right or down and to the right. Price below for bearish trades, price above, upward sloping VWAP for bullish trades. Let's take a look at Carvana. Carvana. Okay, flat VWAP. So it's just moving back up into the range. Kava, restaurants, Kava. Look at Kava. Good example, upward sloping VWAP.
And so I think the answer to the question is all three of those things leave a great amount of room for debate. And given this period of significant transition, investors have, largely kind of thrown in the towel and kind of said, wake me up when we're a little further along.
Kava.
Yeah, I get it. As for debate, listen, there's
No news.
debate about the ability of
All right, so looking for that to bounce, a higher low. For now, VWAP up and to the right.
what gives you a more positive sense there in terms of the ability of the
Vornado, real estate. Let's see, Vornado, VNO.
Yeah, to me, this really comes down to what Disney is as a company, which is it's much more of a library of intellectual property that goes back, almost 100 years, rather than a streaming service of originals like a lot of its competitors are. And a lot of its competitors, Netflix especially, has been very successful at providing a lot of content. I think if we had all the data on what Disney Plus consumers
Okay, Vornado, real estate stocks.
High took alert plus 800.
Okay, here's a nice looking. VWAP is up and to the right. Okay, you saw that. Vornado. Now you've got a nice break higher, 921-day turn up and to the right. You're buying near the 9 EMA. We're about 50 cents off of that level right now. Put a stop underneath the 21-day or underneath the low of the day if you wish. Look for a follow through. Fairly inexpensive name, real estate. You can look at names in the group. Ideally, you want all of these moving in the same direction. Boston Properties, yes. JLL, Jones Lang LaSalle, yes. CB Richard Ellis, yes. I did JLL, Boston, Vornado. Okay, Tanger Outlets. Let's see what Tanger looks like. You want to see Airbnb doing the same thing, Airbnb. Okay, so you got a bounce in Tanger. All right. Airbnb. Okay. Holding the 100 period moving average. So real estate stocks, VNO, bullish with all competitors. CBRE, BXP, and Jones Lang LaSalle. Okay, with me, I'm selling covered calls whenever I have a chance. Selling covered calls when I have a chance. Okay, let's look at DLR, Digital Realty Trust. It's a REIT. That looks pretty bullish too. Let's go take a look at REITs very quickly. I'll get back off of this in a second. I just want to see what these are all doing. REITs, American Assets Trust, looks good. All right, let's go to a candle glance. This is where you see all of the charts all at once. And let me enable stochastic 14.1. Okay, update that. Okay. Ideally, what you're looking for is for stochastics to be turning up. Price above. It goes Avalon Bay. Really well-known REIT in the upper northeast. All right, this looks good. Cousins Properties, DLR above the 21-day. You can see all of these have bullish candles for the day. Innovative industrial properties. These guys buy warehouse properties. They retrofit or they build new properties and install climate control systems for the growing of mostly, I would think, mostly cannabis, medical cannabis. I mean, imagine there's certain applications where they can grow other crops besides medical cannabis, but that's what these guys do. And that's a bullish trade there. That's pushing higher. It's off the 50-day. Volume picking up. Not as nice as it was over here in April, May, but starting to pick up. Stochastics turning, MACD turning. All the things we're looking for. Okay, I won't spend much more time on this. I'm watching the S&P. Warehouser. What is LPX doing? Louisiana Pacific. DEA, DLR. All right, so real estate REITs look good. Let me see what else other sectors are leading right now. Metals and mining. Metals and mining. Okay, metals and mining. Most of these look good. Cenex, Alcoa Aluminum, gold. Okay, what's Freeport doing? Freeport McMoran. Okay, the 21-day crossing down through the 50-day. So not very bullish at the moment. Looking for a bounce. XME, the metals and mining sector, is strong. Okay, XME. We're still waiting on the S&P. S&P is flat VWAP, so there's nothing to look at there. Vornado continues to climb. Real estate stocks are working. S&P 500. Flat VWAP. Not much going on there. Okay, NASDAQ 100. All right, so SGen. Okay, flat VWAP, it gapped up. NetEase and TES. All of these stocks are showing strength. NetEase up and to the right. That's the signature of what you're looking for if you're day trading. You want to buy the dip, sell the rip. Micron and Marvell, both in the top 5. That's a flat VWAP. Marvell, upward sloping VWAP. That's more bullish than Micron at the moment. Old Dominion Freight. Okay, upward sloping VWAP. You can see this dip probably going to get bought. Watch for it to happen. Old Dominion Freight. Intuitive Surgical last week was really hot to trot. Flat VWAP now. Let's look at the daily. Okay, daily. This is the hourly chart. Sorry, hourly chart. Okay, reversal. It's about to trigger a buy signal on the daily. All right, so for the last few weeks, Intuitive Surgical's been on a sell. It had earnings. Now it's turning higher. Once it gets through that red line right there, that'll be a buy signal. Okay. Let's say 304. That should be good. S&P still flat. S&P still flat VWAP. Okay, NXPI, semiconductor, upward sloping VWAP, just starting to take off right now. Looks like NXPI is about to take off. VWAP up and to the right. Okay, let's look at, okay, so a reversal looks like a double bottom, tweezer bottom, whatever you want to call it. Okay, what was that level again? NXPI needs to take out 212. Okay, the dollar, the 10-year, still a bit of a headwind right now. So with S&P flat, we're waiting for a verdict. I'm not predicting anything. I'm just watching what's going on here. Flat VWAP. Splunk, Google, Walmart. Okay. Pinduoduo, no follow through yet. S&P is still on a buy signal. AIQ is the robotics ETF and artificial intelligence. That's up and to the right. Okay, looking for this reversal to trigger a buy above 28.25. I have a small position in this in the kids accounts. AI. If AI turns out to be everything it's cranked up to be over the months and years ahead, they'll have a nice entry. You think about Microsoft back in the 80s, Apple in the 80s, Cisco, Intel, having shares of those. If your parents had bought those for you when you were 13, 14, you'd be pretty well off. So I'm watching AI to see if it does what it's all cranked up. All right, so Q's trying to turn Tesla, watching Tesla had a dip this morning, watching for buyers. Okay, so SMCI, Supermicro. Okay, that's flattish. Need to get back above to 302 for a buy. S&P still just chopping around here. Okay. VWAP flat. Meta's on a buy signal. That looks pretty good. Meta so far looks pretty good. VWAP up and to the right. Okay, so we got VWAP up and to the right on Meta. Okay, the stock is already trading 48% of its ATR, 35% of its daily range. It's on a buy signal. Let's go to the 5-minute and 15. These are all on buys as well. Meta looks good. Meta, buy signal. Meta. Let's see. All right, let's try Meta. Let's look at this Friday's calls. All right, Meta looking for a follow through. Meta is on a buy signal. I would look at the 290s for this Friday. That's a 50 delta. Or the 292.50s. That's a 42 delta. Meta. to 92.50. All right, so here we go with Meta. It's on a buy. Okay. Follow through. It's up $4.45. Meta, 51% of its ATR. Relative volume, RVol, Meta RVol is 4.8 times. Meta on the move. All right, Meta, it's on a buy.
All right, David Zervos, great to kick off the hour with you. Thanks for being with us. All the major averages are higher as we head to break. Here's a roadmap for the rest of the hour. More on what's next for the Fed with former
Buy signal, Meta.
George later this hour.
Plus, we will head live to Beijing as Commerce Secretary Raimondo begins meeting with key leaders in that country, and China's regulators also trying to boost confidence in the country's stock market.
And a misinformation attack facing one of the biggest private investors in tech. A big show is still ahead. Don't go away.
Okay, here's Meta. Meta. All right, Meta at the high. Okay, NIMO is another yellow bar, shorter yellow bar as it proceeds towards the zero line. That's telling you NIMO. And more stocks are advancing than declining. Shifting, change in direction. That's a daily time frame, not intraday. Intraday, your guess is good as mine. Meta. Hope everyone's having a good morning. It's Monday, the 28th. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a nice sunny day in Myrtle Beach on the East Coast, the best coast. Seems like everybody's moving here. I see Tennessee plates now. I see California plates. The traffic is like living in New Jersey again. It's like nuts. It is what it is. You know, not much you can do about it except deal with it. All right, so Meta. I don't see any news on Meta on my end. Okay, so trying to follow through. We got the 50-day overhead Meta. So the most I'm seeing is maybe 290, 295, 298, somewhere around there. RSI's turned up. MACD and stochastics could see a little bit better performance if price action continues.
Tuesday in Beijing. Technical discussions on protecting IP and trade secrets, as well as an agreement to meet at the Secretary and Ministerial.
Okay, so Meta looks pretty good. Could look better. For now, it's bullish intraday. Meta. S&P is still flat. Meta taking off to the upside. There goes Meta. All right. Nice trade so far. NIMO, more yellow bars. NIMO is positive. Cool. Yeah, FUTU on the watch list. I really like FUTU a lot. Okay, so keep an eye on that for me, VMV. Thank you. How's your dad doing? He's okay? FUTU looks great. Okay. Okay, Meta, Money Magic giving you the lowdown on on Meta. Meta. Okay, 300 is a big level. We're above 290, so there's a big move between 290 and 300 possible. Never guaranteed, just possible. So stick with the trade as long as it continues. Above 290 Meta.
Therefore, if we just have some incremental small positives, couldn't that draw some of these investors back in? So we are constructive. At the same time, we want to see more significant policy measures implemented by the Chinese government. They're doing little things around the edges on real estate, on domestic consumption. But just as we saw today, where you had a lot of market reforms, market opened up 5% and faded.
Bullish.
Level of skepticism. People want to see real meaningful change, and I think policymakers seem to be attuned to that.
Yeah, well, Isra, I'll come to you in terms of policymakers because there is this hope, I guess, that that there will be something done to really stimulate consumer spending, and yet many of the academics that you read say that's not likely. That she is simply against that. Where do you come down?
It's possible, in fact, that we will see some stimulus, some monetary stimulus has already been put in place, but those are very modest interest rate cuts. We haven't seen much in the way of fiscal stimulus. But I think the real issue is not about stimulus at this stage. It's about what we just spoke about, how to reinstill confidence in the private sector. Private investment has essentially collapsed over the last year. Household consumption is very weak. And that's because there isn't a clear sense of policy direction from the government, and the crackdown on the private sector in 2021 and 2022 has really dented private sector confidence. So what's really key is not just to get words from Beijing, but actions to show that they're willing to support private enterprises, which they really need for both domestic innovation, productivity growth, and in addition, employment growth. But they need a central that is really
You talk about cognitive dissonance, I think, in the recent note between the government and entrepreneurs. What's going to bridge that divide, then, in your opinion?
So we saw very significant crackdowns in the tech sector, the medical sector, and many other parts of the economy of the private enterprises. Now, what Beijing has said that it wants the private enterprise to play an important role, but this is going to mean that they provide financing and encourage the banking system to start making loans to small and medium enterprises, which are very important for both productivity and employment growth. But in addition, if you want innovation, that's been coming from the larger private enterprises. So for Beijing to send a signal that in fact it is willing to not just tolerate but to encourage private enterprises and will not try to come alongside.
Welcome to the new members, by the way. Welcome to new members that joined over the weekend. Dancing Dragon. I believe you were from California. I'm not sure if you're listening or not. Okay, so S&P is still flat. Meta pushing higher. All right, I'm going to keep an eye on Meta for a few minutes if you don't mind. See what Meta can manage today. Meta.
Yeah, I think in general, investors, have really gravitated globally to U.S. equities. I just was in Asia for work, and every institutional investor I met with, overweight U.S. stocks.
Meta looking for a follow through.
My travels to the Middle East, to Europe, to South America, you have this huge overweight to U.S. equities, and some of that is because of what the Chinese government has done in terms of investor confidence. That these crackdowns have really weighed investors have gravitated way. Chinese equities are down to 3% of the all country world index versus the US at 60%. And so it's really about, addressing fundamental issues with the economy, raising domestic consumption.
Just monitoring the markets at the moment. We have all sectors green again. Junk bonds are higher. You know that when you see junk bond, here's FUTU, by the way. FUTU on the watch list. FUTU on the watch list. You can see this is a nice bullish trade setup. IBD 50. FUTU. That one's following through. All right, you can move your stop up from 50 up to 52. FUTU, what do we have here? FUTU, I had 47.50, so I was thinking if we drop below the 50 day. However, support is at 50, okay? So for day traders, FUTU, now that it's following through, let's see, here's FUTU. Here's the VWAP. VWAP up and to the right. I hope you see, if you're a new member or a new trader in general, I hope you see what's going on here. Okay, you got VWAP up and to the right. You got nice relative volume. Look at the volume compared to Friday. Look at how much more it is. So if you have those three ingredients, price above a upward sloping VWAP, 1 and 2, they have volume well above average, you've got a good setup. If you got a news item that's triggering the buying, that's even better. FUTU, no news that I see at the moment. Okay. Yeah, let me get Lee Star with the let me send him the link. Keep forgetting to do that. Let's see. Okay. Let me copy that link. Wow, what was that? Wow, what was that?
Communication and making clear what the two sides are after. I think both sides really recognize that there is benefit to be had from mutual engagement, but the issue seems to be that both sides view how to play the game by the rules and how to interpret the rules very differently. Now, certainly the U.S.-China trade and economic hostilities are not
okay.
At a time when domestic confidence is already faltering. So certainly, I think there is a willingness to engage. And from the U.S. side, I think there is it's good that Secretaries Blinken, Yellen, and Raimondo are there talking to the Chinese, because I think that's really the way to get over some of these tensions that are inevitably going to fester. So I'm hopeful that at least there will be no further escalation of tensions. But I think the hard reality that any escalation is probably not quite on the
Okay, FUTU, IBD 50.
Well, just in Taiwan, I've been to Asia several times, but not to China. I mean, from the East Coast, it's very difficult to get to China because U.S. airlines aren't allowed to fly over Russia, which means that you're flying to San Francisco, and then one of the things I think will come out of the Raimondo visit is an increase in the number of flights. That you went from about 150 flights a week for them to a dozen. So I think the more that the two sides are talking, meeting with one another, the more that you'll see things stabilize.
So hard for you to get on the ground in China.
Very difficult.
Thank you. Appreciate it. Eastward, thanks to you as well.
As we have to break, check out the biggest gainers on the S&P this morning. Got Boston Scientific at the top of the list. Also 3M. The Western Digital and Shenron is actually up almost 4% as well. We've got more on what's driving 3M higher. That's coming up next. Don't go anywhere.
Okay, so FUTU, we got 53. All right, so bullish above 50. Bearish below 47.50. All right, it's kind of a slow start with S&P just flat here, but you know, we're hanging in there for now. Watching that Meta. Okay, FUTU, Meta still going, upward sloping VWAP. Up and to the right, look for higher highs and higher lows. In a minute, I'll check the GAN chart, the GAN spreadsheet. FUTU, we know that 300 is the next level on the options chain. Major gamma, 6 months average. Check Money Magic's levels in his channel.
And Carl, I'm hearing from a source close to settlement talks that 3M's board is soon scheduled to meet. But guys, we knew a settlement was near when 3M CEO Mike Roman was ordered to attend mediation talks in May by the multi-district judge. The reported $5.5 billion settlement is lower than what Wall Street had forecasted, which was between $5 to $20 billion. But it is 5 times larger than 3M's initial attempt to resolve these liabilities by bankrupting its subsidiary, Aero Technologies. That bankruptcy attempt was thrown out by the courts earlier this year. 3M stock sharply higher this morning as a potential settlement would take.
All right, so FUTU still going here. FUTU is looking very strong.
A number of states have sued 3M alleging drinking water contamination. A $10.3 billion settlement was announced in June. However, that does not cover personal injuries as well as property damages. So awaiting clarity on that front. Last week, 3M did appoint Zimmer Biomet's Brian Hansen as CEO of its healthcare division ahead of its highly anticipated spinoff later this year. JP Morgan estimates that this spinoff will bring in about $7 to $9 billion to 3M, which analysts say will be used to resolve these lawsuits. Guys?
Yeah, see, am I gonna have to look back and wonder on whether 2023 is like the inflection year for 3M, given the fact that this is a name that struggled with so many different issues over the past couple years, and it's
FUTU still going. FUTU.
sense on what this deal.
Nice. Okay.
You said that the board
Cool.
was aware
FUTU's up
of
$3.40, 6.68%.
could mean in terms of payouts. 'Cause I've seen some notes saying that it could be over a 5-year period, which would be very unusual. But of course, you take that, you factor it in with PFAS settlements that are
Plus
settled as well. Either way,
6.67%.
it's a huge chunk of change.
You're right. It was a surprise that, according to what we've learned so far through this report, that
Bullish.
it would be a 5-year settlement versus a lump sum. So that was actually seen as a surprise to the upside. Perhaps one of the other reasons shares are higher today. But we still need more comprehensive details as to whether this settlement that is currently in review potentially, whether it covers all 300,000 plaintiffs or a subset. You know, you look back to June when that PFAS announcement came out. That PFAS settlement only includes a subset of the liabilities. We still are awaiting more information on the states that have sued on
Good job.
contamination, personal injuries, and property damages. Not to mention what 3M is also facing overseas in Europe as well. So still a question mark there.
Seema, thank you. Seema Modi.
NASDAQ 100.
Now, former Kansas City Fed President Esther George will get her take on rates, inflation, of course, Powell's remarks at Jackson Hole. She joins us next, so don't go anywhere. We're back in 2.
Okay, we've got up volume is 2.5 to 1 with NASDAQ up vol plus 2.5 to 1. Bullish NASDAQ. The NYSE still 7 to 1. Oh boy.
Welcome back. I'm Silvana Hanau with your CNBC News Update. We learned in the last hour, former President Donald Trump is set to enter a plea in his Georgia election interference case next Wednesday. And
Man, they really don't want him to run, do they? Shit.
Election case. Special counsel Jack Smith has proposed a January start, but the former president's team says it should be pushed to April 2026 after next year's presidential election. Tropical storm Idalia is expected to become a hurricane today. The National Hurricane Center says Idalia could intensify to a category 3.
7 to 1 up volume.
Threatening storm surge and dangerous winds to parts of Florida as early as Tuesday. and hundreds of people took part this weekend in what's being called the largest hunt for the Loch Ness Monster in half a century. The hunt
People got too much time on their hands chasing the Loch Ness Monster now.
Organizers say more than anything, this weekend's hunt had the goal to revive the lore of the Loch Ness Monster for a new generation. Guys, back to you.
I'm sure they're going to find him this time. Silvana.
This time they will.
Yeah, there's no doubt.
Oh yeah, no doubt.
Yeah. All right, you can see there we're just over an hour into trading, having a nice rally here with the Nasdaq leading, despite NVDA down yet again. Let's go to the
All right, so FUTU continuation looking really strong. FUTU, congratulations. BNB, FUTU just gone. Looks good. FUTU, yeah. FUTU. Let's take a look at a couple other things. FUTU 60 minute. All right, you don't want to buy now. You want to wait for the next dip. FUTU 60. Okay, bullish. All right, so you can see the transition. We based out and then we started to move higher. So you want your 20 EMA to be upward sloping. You want price to be above the 20 EMA. The dotted red line is the 20 EMA on the daily. This is the 60-minute chart. So both of these, for reference, price is above, RSI rising. Now let's go to the weekly time frame. Weekly could be argued that it'll most likely run into resistance at around 61.80, then 72. Once it breaks out of this big range, we'll look for a breakout. Remember, JP Morgan did this. JP Morgan broke out of this range above 142, took off to the upside, a good 15 points, pulled back to the 10 EMA. Now we want JP Morgan to bounce. The point is watch the 10 EMA on the weekly. Here's the weekly right here. Weekly FUTU, you got the 60-minute FUTU above the 20 EMA and the dotted red line on the daily. And of course, the daily looks really good. Daily looks really strong. Just don't buy the high right here. Buy on the next dip. Man. Yeah, Rick is strapping everything down again. Down in Florida, headed his way. Oh, man, these guys had so much. Dude, your luck. Maybe you should move to Alaska. I don't mean to be trite or glib. You move there, you probably get ice storms and 18 feet of snow. Remember that year that Buffalo got like 12 foot of snow? People trying to shovel out of that. I mean, almost impossible, even with good snow blowers blowing stuff up in the air. Crazy. Anyway, we still got NASDAQ 100 is 90% green. Yeah, that's good. That's a good one. If they're injecting money, FUTU should benefit. You're absolutely right, Mr. Ivanov. Just don't want to buy right here. You want to buy on the dip.
So does that mean soft landing hopes are premature?
You know, for me, I think it's too soon to say soft landing. There's no question. Things have held up pretty well. The consumer's been resilient. We've seen the job market remain tight. And so,
FUTU.
But of course, as the chairman reminded us in that speech, they have not achieved the target. They are carefully watching to make sure that they arrive at that destination.
Mr. It's David. I'm curious as to your thoughts about the banking industry, particularly smaller communities.
All right, FUTU, let me just check real quick. FUTU. Okay. NIMO is crossing zero line. Okay, S&P is pulling back into the range again. FUTU. Trading 147% of its ATR. 108% of its daily range, FUTU. All right, so you could stand to let this dip a little bit.
Very much going to be not only on the minds of bankers, but I think those that are monitoring the banking situation. So again, this is the soft landing narrative. So far, so good, I think, with the banking system. But I think too soon not to think that some of these adjustments will have an impact.
Jackson Hole is the event that you yourself used to host. So I'm just curious, given the fact that it is such an economic obsession of the markets and investors in the dog days of summer each year, how meaningful is the symposium in terms of officially or unofficially, in terms of sort of setting the stage for where monetary policy is headed for the fall?
Well, the symposium, of course, is focused on economic issues, other issues that are so important to central banks. It is not a policy forum by any means, but its tradition is one where central bankers interact with the academic community to really talk about what's happening. This particular symposium in these structural shifts in our economy. How should central banks take in what's happening and understand what it means for the policy decisions they have to make in the near term? As you heard from both Chairman Powell and President Lagarde at the ECB, those are particularly challenging right now. The uncertainty is high. It signals to them
FUTU. All right, so back to Meta. Little dip there on Meta. Back to VWAP.
Congratulations, I guess, on Kansas City and Jackson Hole, and we'll see you soon, Esther George. Still ahead today, Nike breaking its longest losing streak ever as shares come off.
Meta. All right, keep an eye on S&P.
And a quick programming note, all week long, Mad Money's getting you ready for school with a special series dedicated to Jim's rules of investing and his most important market lessons. That kicks off tonight at 6 p.m. Eastern Time. Look forward to that. Stay with us.
All right. So far, S&P has managed to stay in a tight range.
Welcome back to Squawk the Street. Shares of Nike snapped an 11-day losing streak on Friday, the longest on record. Our next guest is bullish on stock, confident in the quote brand strength opportunity. Shares are higher this morning as well, fractionally. Let's bring in Robert Derwell, Guggenheim Securities retail analyst. Bob has a buy rating on Nike and a price target of 135. Good to have you here on set. Why are you sticking with that rating despite the weakness we've seen this year?
Well, I think it's a great portfolio of brands in addition to Nike. You have the Jordan brand, Converse as well. And I think from like a global opportunity, I don't think there's a better company that operates brand equity and connects with consumers better than Nike does.
All right. The fact that we have seen selling in the name, at least until the last two trading sessions, why? Why the weakness?
I think there's a couple of concerns. I think China has been a big focus for investors and for Nike.
All right, just watching price action. S&P is just sitting here, flat VWAP or below VWAP.
Much cleaner. I think they're probably in the best situation on the inventories within the industry. I feel like there's some concerns on brand Jordan slowing, and I don't really share those concerns. I think that the business has some significant growth opportunities internationally, women's, even in kids, and ultimately, I think the financial strength of this company. I'm never one to bet against Nike, on the future of the business.
Yeah, I mean, China, at least in the last earnings, was a bright spot. It was much stronger than expected. It seems like, and we've seen this with a number of retailers, or international apparel and retail names, or global, I should say, has been some softening or some weakening in the North American market.
Well, North America, I think they're working through a lot of issues. I think athletic generally continues to be a great growth category. There's a lot of movement going on between footwear, apparel, between and ultimately, I feel like we're still working through the last few years of some of the supply chain challenges that the industry has faced. I think Nike's taken some big steps to continue their strength and clean themselves up and clean the industry up over the last few quarters, and I feel like they're in a good spot as we look forward to the next year or so.
Margin declines that took place last quarter, is that over, or do you expect that to continue?
I think that's largely over. I think the inventories they've taken some significant clearance and markdowns on the inventory side. They were also facing supply chain contracts that were a few years old, and now you're starting to roll out of those into next year. So we should start to see some easing of those gross margin pressures into the next few quarters.
Foot Locker, I mean, that stock's been a disaster. It's been hammered this year. How much of a read-through to Nike is that name still?
I think part of Foot Locker's challenges are the relationship and the situation with Nike, where Nike is pulling back on its strength in the Nike distribution platform. Foot Locker is becoming less and less a critical part to it. Nike's been focused more on its DTC. So I think part of the challenge with Foot Locker is the Nike business, but it's also the lack of the non-Nike brand strength. And I feel like the industry's definitely weakened a bit. It's gotten more promotional. And I think Foot Locker's gone into this with a little heavier inventories than they would have anticipated as well.
Bob Durable. Thanks for joining us.
Still ahead this morning, China's Ministry of Finance cutting the tax and levies on all stock trades by half. It's the first time in about 15 years. Is now the time to dive into some Chinese tech? We'll discuss that in the next hour. Don't go away. We're back in a moment.
FUTU. All right, got above 55 there briefly. Okay, S&P still chopping around. Flat VWAP though. Flat VWAP unless we drop off or pop in the other direction. Anticipating price will just be in a narrow range for now. Tick cumulative still rising. And we have 2-to-1 up volume on the NASDAQ, 5-to-1 on the NYSE. Let's go see what the market looks like today. All right, this was Friday. Okay, this was Friday. Okay, looked pretty green on Friday. Let's update this now. Okay. Actually looks a little better, right? With a few exceptions. We've got Merck and Johnson & Johnson off a little bit. Medtronic, which had a good week last week. NVIDIA is off a little bit, but chopping around with a flat VWAP. AMD as well. Communication stocks look good. Meta, Google, T-Mobile, Disney, Netflix, higher. We got materials, energy, real estate looks okay. Industrials look good. Caterpillar was the one that we've been watching on the watch list. Watching on the watch list. Thermo Fisher. I was hearing some conversation about Thermo Fisher this morning. Thermo Fisher. We have a Thermo Fisher. Not sure what they do. I mean, it's huge property. It's got to be 300 acres fronting off of this little small town road in South Carolina, northeast of Conway in Myrtle Beach. It's about an hour away from my house. I passed by it once on the way back to New Jersey. Said, wow, there's Thermo Fisher right there. Anywho, a lot of Chinese stocks are in the top 10. We've got JD.com, Baidu, NetEase in the top 10. Okay.
Yeah, it's a pretty wild story. According to Tiger Global, this all stems essentially from a disgruntled former employee. It's been going on for months now. A source sent me that 9-page, single-spaced, anonymously written document that alleges to be a draft for the New Yorker. Supposedly a predecessor to this PDF has been circling the rumor mill for months, and this version really caught fire in the hedge fund community. You got it, I got it. It's been sharing basically virally across this community. Now, the
Remember the market carpet looks good. S&P still flat, chopping around. We're at 44.25. That's a support level. Next level below is 4,400.
You know who we are, and we are ready. We are here and ready to answer your questions. Now, it's worth noting that the firm.
All right, FUTU started off the day. We said 50 was support, 50. So let me just put that in the GAN calculator. Buy above 42.56, targets 54.39, 56.25. Ventair, this is a great spreadsheet that you put together. Thank you so much for that. Okay, Meta, we had 290, needed to get above 290. So that gives us targets 293, 297, 301. Meta, Gypsy Barroom Queen in Memphis. Meta, okay, a little dip from the highs. Baidu following through. All right, so we're just chopping around. Most of the markets are doing the same thing. Stocks, flat VWAP, Meta off the best levels of the session, back below 290, above 290, look for 300. For now, we're below 290. Caterpillar turning the corner. Cat. Meta. Meta about to trigger a buy signal. There we go. There's your buy signal right there. Meta needs to continue. It's just flickering buy right now. Stochastic RSI oversold and ready to turn. The most we're anticipating is a move back up to 290, 291, top of the range. S&P, same thing. S&P. Okay. We just triggered a buy signal on S&P right at that support resistance level, 44.25. Okay, Caterpillar looking okay. Caterpillar. At VWAP, look for it to push higher. Is this an early ABCD pattern? Potentially. We need to see buyers continue to confirm they're interested. Oh boy. Mhm. Okay, looking for S&P, Caterpillar, Meta. Looking for all these stocks to get back above VWAP, ABCD patterns. We still have 2-to-1 up volume on the the Nasdaq, and almost 5-to-1 on the NYSE. So they're still buying more than they're selling.
Later on, Apple TV's big messy win and the implications for ESPN as Disney stock continues to struggle.
But we're going to start with the market and whether anyone outside the so-called Magnificent Seven will start making a big contribution. Wolf this morning calls the top for both the SMH Semiconductor Index and the Nasdaq 100, meaning NVIDIA's ridiculous run could be coming to an end. In fact, shares are under pressure again today. Goldman Sachs trading desk also saying there could be some bad news out there for tech. Senior markets commentator Mike Santoli joins us now.
FUTU also last week had earnings.
Look, I mean, I don't think you can deny that after yesterday, that reversal to the downside led by the Nasdaq has tech sputtering a little bit. But you look at today, NVIDIA down
$2
this week this morning
on 824. It's on a buy signal on the daily. All right, dips getting bought. Dips keep getting bought. That's a good sign. FUTU. FUTU going again.
And people who are now saying that the chart is broken are likely to say, well, maybe we've broken the little downtrend to the upside and we have a stop here as it's just being a 5% pullback. Morgan mentions this Goldman note, Callahan today saying, look, even those who are graduating out of big tech are facing worries in China, worries in specialty retail, worries in payments, that maybe the Tina effect returns to big tech in the future. Yeah, in other words, if the rest of the market, rest of the economy becomes more complicated, a lot of times you do, go back to the reliable company. But also, I would point out that the forward earnings forecast for the Nasdaq 100 type stocks is steeply on the uptrend, right? So that's been pulling the S&P 500 consensus higher. So it's not just about or rates aren't going to go to the moon. It can just be also we are having upside earnings revisions because of this latest round of reports and how it plays through in the next few quarters.
Okay. So how does that set us up for September, which we know is historically the worst month for stocks and seasonally very weak?
I think it's still kind of a show me market. You have to prove that you can buck the seasonal trend. You have to prove that, the bond yields at this level are not necessarily immediately going to pinch off, the economic growth. And we don't know any of that. I guess it's a wait and see. I've always thought that the issue with higher yields isn't just a straight.
Oh boy. Okay, so we got flat VWAP everywhere. Everywhere I look, flat VWAP. What does that tell you? It tells you don't do anything till we see VWAP up and to the right. So I'm thinking that's going to happen. If it happens, it's going to happen after 11 o'clock, 12, maybe into the evening session, lunch session. We've got stocks flickering on buy signals right now. FUTU on the 60-minute has some nice momentum.
Great to have you on the show. Do want to get your thoughts on the comments we got from Chair Powell on Friday, because to me, the takeaway here is really not how much higher rates go, whether we get another 25 basis points or not. It's for how much longer they stay at these elevated levels.
The chairman was careful, as you would expect. He didn't tip his hand at all, but I would say overall, he's cautious, and I think the FOMC is cautious about the economy. Number one, while it has slowed, it's stronger than people expected. Consumers have been stronger than they thought, and that gives them some pause.
Baidu up 3.5%.
He's committed to the 2% inflation target. So that does raise the issue of whether there'll be additional rate increases. My own view is, listening to him and a little bit of the chatter around it, there will be, unless there's a surprise, inflation surprise in September, it's just as likely they will pause as go forward. and wait and see what might happen before their late October meeting, and then decide. But if they have some upward movement in inflation, then I think there's more likely they will move. The other thing is people are a little more concerned now for the longer run and getting more play at these kinds of meetings in terms of national debt and servicing debt and so forth, and what that affects. So those are the combinations that are going to be affecting the discussion going forward, I think.
Yeah, we get a lot of data this week. We get PC inflation reading, which we know is the Fed's preferred gauge. We get JOLTS, we get jobs report on Friday as well. If we continue to see resilient economic data here, does that signal that structurally the impact that these interest rate increases have had over the last 18 months is different than what we've seen in the past? Or is that we're still operating on these long...
All right, so SPY still sideways. Caterpillar watching. Flat price action, flat VWAP.
Not unusual for this stage of a tightening cycle. I would say that number one. Number two, I think part of it, though, that has not been as much attention has been paid to is the fact the fiscal policy for the last 3 years has been enormously expansionary. I mean, you have several, not only the CARES Act, but then you have the Science and Chips Act. You have all these subsidy programs that are feeding the economy, and that's an offsetting factor, keeping the economy stronger than what people thought it might be.
You know, it's funny, just looking at Dallas Fed this morning and some of the survey comments. I mean, Dallas is always notoriously, I think, nervous, but one reads, the phone is not ringing. Our sales team is working harder with less results. Projects are being postponed, and perhaps even more telling, payments are increasingly protracted. Does that sound like the kind of comment...
All right, we're fading a bit more.
Yes, I think so. We've been in this for a year and a half, and that's not dissimilar from past cycles. Now the slowing begins. There's pressure on long-term interest rates and the concerns about the debt. So uncertainty is growing, frankly. And that's part of the reason I think, depending on what the inflation numbers are in September, the Fed is as likely to...
All right, flat VWAP still chopping around. NVDA looking like it's still flat VWAP, NVIDIA.
We're right where we have been in the past. Things are now, I think, showing real slowdown in activity and concerns for the future.
I'm going to ask you the same question that I asked our guest last hour, Esther George. As the former Kansas City Fed president, someone who used to host these Jackson Hole symposiums, key insights in terms of the dialogues, the debates, the data that's shared, how it helps to shape future economic and monetary policy, even if it is unofficial?
Well, I think it's a great opportunity because people, these policymakers, they're not going to play their hand, but they are going to listen to some pretty established and respected academics. They're also listening to the central bankers from around the world, not just the major central banks, not just the ECB, but South America, Asia. We know Japan is in a transition as well, South America. So all these conversations come in and you pick up the nuances of your world economy, not just the official and not just the statistics, but the real sense of things. And I think there it has important influence, not only on U.S. policymakers, but on policymakers around the world. So I hope and think it's a very valuable experience for the policymaker as well as those academics and others who are there giving their views unofficially, but informed so.
All right, Thomas Honig, thanks for joining us.
Thanks for having me. Good to be with you.
Still to come this morning, U.S. Commerce Secretary Gina Raimondo meets with the Chinese as economic relations between our two countries remain on the edge. We're going to talk with the information's Jessica Lesson, who's on the ground with the Commerce Secretary, plus one China focus portfolio manager on how to be...
All right, a little bounce back to VWAP. Looks like that's the case.
Of last year. Don't go anywhere.
All right. Market's still just flat VWAP. We need a slope in VWAP. Otherwise, it's telling you to just chill. Not much to do.
Commerce Secretary Raimondo kicking off her visit to China, establishing a new dialogue, exchange, and working group focused on export controls as the two countries seek a more stable relationship. That comes as China's been facing economic struggles, 7 straight months of declines in industrial profits over the weekend, as the MSCI China ETF is down nearly 20% versus the S&P year to date. Joining us to break it down this morning, Grow Investment Group Chief Economist Hao Hong, and the Information's founder and editor-in-chief Jessica Lesson, who is part of the pool following the secretary in Beijing. Our thanks to both of you. It's great to see you, Jessica. The fact that you're on the ground says a lot about what the nature of these talks are hopefully going to bring. Are you sensing that the dialogue is real?
I think so, and I know that the Commerce Department is upbeat about how today went, the first day in Beijing. Secretary Raimondo came after 5 years of Commerce not visiting China, and really feels like she wants to promote U.S. business interests here. I think it's notable that there was not as much discussion about an area of much more sensitivity in trade, the U.S.'s semiconductor exports. So there's much tension to be had. She acknowledged at a high level that it's a very tense relationship, but I think everyone's feeling optimistic about how today went.
Are you getting the sense that they're getting to the sweet spot? That is, dealing with trade issues and national security issues. Really, it boils down to chips, I suppose. Are you sensing that dialogue is getting more robust?
Well, I think what the secretary should like is everyone to separate those. She wants to promote U.S. business, grow trade, but around issues that she says don't affect national security. We saw a demonstration of beauty products today as an example of the kind of trade that the U.S. government would like to promote. Commerce claims that last year there was $700 billion in this kind of trade in goods and services, and that's what they would like us to focus on. Now, what China is going to focus on in the conversations may be a little bit different, and I think that's a question whose answer is still to come.
Gotcha. Now, I hear you. I know you have some thoughts. Want to get your insights on this visit, the impact and the importance of it, and whether any changes.
All right. So choppy VWAP, flat VWAP, choppy price action. Making lower highs and lower lows on the indices for now. Stretching away from VWAP.
So I think once that is established, we have really established the communication channel one of the most important between one of the most important relationships in the world. So I would say that we're making good progress, but we're still in early days. This is only the first day of this.
So how does this factor in, from the Chinese perspective, how does this factor into an economy that's reopened from COVID and has not met, at least on the world stage, economic expectations? How does it factor into some of the stimulus efforts or even some of the regulatory changes, for example, slashing the stamp duty on stock trading that was confirmed by the government today? How do all of these fit together? I guess what I'm trying to get to, Hal, is how much leverage does China have? How much do they need in easing a relationship between the two countries from a trade perspective right now?
Yeah, well, I think on the negotiation table, especially when it comes to high-tech chips, there's not that much negotiation chip for China to do. So China really need to rely on the U.S. interest for chips. And this year, as you can see from the import data, China has been importing a lot of mid to low-end chips from the U.S. So I think now if we want to develop AI and also cloud technology, we really need that chip in the U.S. So I think the extra banks from the U.S. government is about. I think going forward, though, China has sort of initiated its own plans on some of the exports to the U.S., including some of the key
Caterpillar. All right, so let's just shift gears here. Go to S&P. Okay, there's another level below 4,400. It's a major gamma level. Looks like we may be headed in that direction, so plan on it if we start to drop off here. Gap would fill right around, what is that, 440-ish? The gap would fill. So we're up 15 handles, futures.
And it's a deceleration from last month as well. So, this sort of a downtrend, you really need to be stand and reversed by some of the policy measures that is already in place. So I think, we're expecting more and more policies are coming, but many of the policies that have been announced has so far failed to lift the economy in the market.
It does make you wonder, Jessica, what's easier for the government there, restoring confidence among domestic entrepreneurs?
What's Baidu doing? Baidu.
Getting trade or some form of investment flows to come back in. I'm not sure which is the quicker fix.
Okay, all time frames buy signal. Baidu. NIMO was above zero earlier.
I think the whole thing is very complicated, but the message from Commerce today is definitely that there are a lot of U.S. businesses that want more access to the China market, and so, let's see what happens, but that's what they're saying.
Yeah, fourth senior official to visit in the past 3 months, Secretary. Jessica Lesson. Jessica, safe travels. Thank you both. Good to see you.
Let's stay with China. U.S. warning that Chinese hackers are positioning themselves to attack critical U.S. infrastructure. Eamon Jowers joins us from D.C. with some exclusive reporting. Eamon.
Hey there, Morgan. That's right. American officials are scrambling to make sure potential weaknesses in the software used to operate American infrastructure have not been penetrated by Chinese and Russian hostile actors. They're focusing on the threat to so-called open source software, which is developed by hobbyists and others and then put into the public domain. Software companies that make infrastructure systems often use large chunks of open source code in their programs, but the fear here is that hackers could be developing this code, releasing it to the public, and seeding vulnerabilities intentionally here. On August 10th, the Cybersecurity Infrastructure and Security Agency, known as CISA, asked the open source community for ideas on how to secure the code. And a government official tells CNBC that CISA plans to release a draft national strategy for open source security in the coming months. Meanwhile, a new report from a cybersecurity firm highlights the potential threat. Researchers at Fortress Information Security discovered that 90% of the America's electric grid contained contributions from developers who said they were working in Russia or China. And they say Russian and Chinese open source
Still flat VWAP.
more likely to have vulnerabilities.
Not much to do until we get more trading under our belt today. Let's see. Let me just check a couple of things here. Nice bounce at the 200-day moving average on the S&P Equal Weight Index. Number of stocks trading above their 50-day is at 36% and starting to rise. CCI gave us a signal. And the number of stocks above the 200-day has risen from 50% up to 53%, well off of the highs. Okay, I'm looking at these three indicators. When all three of these turn up at the same time, like they did back here in June, it led to a nice rally. Here's the 200-day moving average for the S&P Equal Weight Index. That removes the weight of these 15 stocks that make up 32% of the weight of the S&P. So if these are rising, that's another bullish indicator. If it's below the 200-day, then I get more short. If you're trading intraday, that's a different strategy. I'm looking at the bigger trend right now for 401k and IRA type of investments. Okay, so that looks good. All three of these. All right.
This sort of system has just been baked into the cake, and people hadn't been really focused on the security aspects of it. Now, though, people are starting to become aware of it and trying to figure out what to do now that all this code is embedded in some of the system.
So that's that. Let's take a look at the McClellan oscillator, volume oscillator. Okay. All right. So this is turning more. This was minus 66. This was minus 66 last week. Did I save that? Let me just get this real quick. All right, screenshots. 824. All right, so this is turned. This is turned like it did previously. Green arrows starting to turn from capitulation to buying. Checking the tick cumulative. That's in agreement, as well as the up-down volume, which is showing more buying than selling. 4-1 on the NYSE, 2-1 on the NASDAQ. NYMO agrees. NYMO is trying to get back above zero. It was above zero this morning. We got yellow bars. I just posted in the channel, the trading room. Okay, so as all of these indicators start to turn, more and more people start to wake up to the potential for follow through. Let's look at the growth and value. Okay, so we're at the 21-day. Value still below. All right, so these sectors right here are less favored at the moment. Chinese stocks following through, very risky. The only way I would trade Chinese stocks are with options, so you know your maximum loss. I wouldn't be trading with shares. That's just me personally. I can't speak to your needs or goals. I can only tell you what I'm doing. Like Baidu for the follow through, it's above resistance levels. Could see another 3 or 4 points on Baidu. Let's see, NetA's looks good. JD.com's higher. If you hadn't heard the news, Chinese government is reducing the tax on stock trades by 50% to induce buying. Now, that could be detrimental, especially if you're chasing. And I'm not going to get into speculation. I mean, I have no idea, but all I can see is price action right now. Everything's moving higher.
Welcome back to Squawk on the Street. Delinquency rates are rising. Our friend Thorsten Slock at Apollo this morning pointing out that despite the unemployment rate being at its lowest level in 50 years, credit card delinquency rates at small banks are at a record high. This really gets my attention, Carl, because we have been hearing that delinquency rates are rising, but that it was more along the lines of normalization to pre-pandemic levels. But when you look at the small bank impact here, particularly on this chart, it speaks to the weakness we've been seeing. One more aspect of weakness.
All right, so growth and value.
At a time where the KRE is looking.
Okay, let's look at the 1,500 stocks on the S&P 500, mid cap 400, small cap 600. This is the S&P composite. Okay, so we're about to get a bullish cross. You can see once that histogram moves above 2, this is another indicator that's setting up. So many things are setting up. Okay, you got a crossover. You got this histogram. Once it triggers above 2, we'll look for a green candle, and then we look for a move back up to the upper Bollinger Bands. You can set this up for other stocks as well. Let's look at the S&P by itself, S&P 500. Okay. That's a ratio, so it's not going to be telling you much except for the histogram. Okay. NVDA. There goes NVIDIA. Thank you, Corey.
A federal judge ruled out the possibility of a 2026 trial in former President Donald Trump's federal election interference trial. Trump's legal team asked for an April 2026 trial, which would have pushed the trial.
Thank you, Mr. Flood.
Election. Prosecutors requested a January start, but the judge hinted that may be too soon. He has not yet set a date. 4 new astronauts are now calling the International Space Station home. The SpaceX Crew 7 Dragon capsule docked at the ISS on Sunday, completing the nearly 30-hour journey and launching a top-tier mission for the astronauts. The spaceflight marks the 11th manned mission for Elon Musk's space company since its first crewed launch in 2020, Morgan.
Yeah, it's another huge achievement for SpaceX, Silvana, and
fascinating stuff.
Yeah, and it's a truly international crew headed to the International Space Station. We've got an American, a Russian, and then astronauts from Denmark and Japan. So fun one to watch.
It really is. It really is, Morgan. Yeah.
Thank you. Up next, what the availability of live sports outside of the traditional cable bundle means for media stocks, and a check on Apple's entrance to the space.
Oh, they did? Chinese government told state-run banks to also buy stocks. Okay, that's cool. All I'm looking at is price action. Price action is bullish. Okay, so that's tick cumulative, or excuse me, that's the 1500. Let's see, volume oscillator. What else I want to look at here? Vortex. Okay, we're fading again. S&P fading. Don't forget election years, okay? Next year. Lower high on the S&P. Advanced decline percent. Okay, so this is telling you as well, there's more buying than selling when advanced decline percent, taking advancing stocks, declining stocks as a percentage contained within a range most of the time stays between plus and minus 30%. You want to be buying at minus 30% and selling on a swing time frame, selling as we approach plus 30%. This is what I use for the most part. Whenever I'm saying I'm taking profits off into strength, that was back at the end of July. As you can see, we hit the highs here. What was advanced decline percent saying? It was starting to fade from the highs. Okay, mid caps hit the plus 30%. Small caps got there, and NASDAQ almost tagged it as well. So whenever I'm looking to buy, I'm looking at minus 30%. When I'm looking to sell, take profits off into strength, I'm talking swing time frame, weeks, sometimes months. The one caveat, of course, is this is the weakest time of the year, yet we're managing to rally. So I think David Faber had something good to say this morning on CNBC. Pretty obvious to many people that the U.S. is doing very well as far as growth of the economy. We can see that in CENTAS, okay? We can see it in many different indicators if you just know where to look. CENTAS is one. Company has 1 million customers worldwide. The bulk of them are in the U.S. Corporate identity programs, uniforms, and a lot of other products. You can see this is pushing back above the 921.50 day. It's above the 200-day, 100-day. MACD's cross, stochastics rising. So when this is trending, this is saying that companies are hiring, they are employing people. Okay, another indicator is copper. And copper is in a range despite the slowdown in China. Copper's managing to hold up. Silver was looking pretty interesting. Okay. I'm not really interested in silver. It's been in a range since the beginning of the year. January, it's the same level it was in January. So if you were sitting on shares, or worse, if you were sitting on options, or if you were buying silver and you were selling premium, maybe you did okay. But for the most part, silver's just been sitting here. Gold, let's look at the ETF. That's trying to move higher. This is telling you there's not a lot of appetite for a safety trade, if you will. US dollar. We'd really like to see the US dollar roll over a bit, pull back. That would be a tailwind for equities. The US dollar right now is at 104.12. Okay. So this is still in a bullish trend. The 10-year yield, this is, would like to see this fade as well. This is in a bullish trend, 921.50, 200-day. Everything's turned up except the 200 days flat. And what else? What else do I want to show you? So that's the dollar and the 10-year. Oh, I said the 10. Oh, junk bonds. Junk bonds, if you're bullish, you want to see this moving higher. Okay, we gapped up. We're on doji. Could pull back again. So junk bonds are pretty much neutral at the moment. Okay. Not like the signals that we were getting back in 2020. Back in 2020, we had a risk off signal that told us to get out of stocks. We don't have anything like that right now. Okay, back in 2020, you can see that big drop right there. I often talk about this. If, a lot of people try to time the market, what's the high, what's the low? Even if you miss you miss 2 to 5% of the high and you get out when we drop below the 10 EMA, or you buy off of a reversal signal at lows, watch the signals, because back in 2020, this gave you a clear and present danger. It told you to get out, right? Just like this in November, December of 2021 into 2022, clear and present danger. It told you to get out of stocks. What's it saying right now? Saying the opposite. Let's look at something else I want to show you. So, intraday, you can be bullish or bearish. That's not what I'm talking about right now. What I'm talking about is the bigger trend, daily, weekly. You can see with the consumer discretionary versus consumer staples, very clearly, this is not my imagination. I'm not making this up. It peaked and turned in 2022. That vertical line is 2022. Okay, what is it doing now? Looks more like 2020, right? Looks more like 2020 than 2022. And what happened in 2020? Well, 2020, we rolled over. Excuse me. In 2020, we rallied, and every month we kept getting the call wall shifting higher. Call wall shifting higher. Every month, OPEX, we had the call wall shifting higher. Right now, it keeps going back and forth. So the trend isn't as strong. You can see that in the price action. Trend isn't as strong as it was back in 2020, 2021, but it is definitely bullish until we close decisively below the 10 EMA. I'd say this looks pretty good. Risk on, IWM, same idea. Risky asset. This is sideways range, but nothing like over here in 2020. You got IBB, biotechs, same kind of pattern, sideways, but nothing like 2020 or 2021, 2022. Okay, we're sideways. So those risk off signals aren't there. It's just neutral. S&P pushing back up to the highs, and I'll get back on price action with you right here. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday the 28th, last few trading days of the month of August, going into September. Seasonally not the kindest month, meaning trade more cautiously. And okay, so S&P pushing back up. Need to get above 44.25, then VWAP. Then maybe we see the top of the range, flat VWAP. Look for sideways price action. Okay, stocks like Baidu, not recommending Baidu, but stocks like Baidu, VWAP up and to the right. So you can see price action's up and to the right. So that's bullish. Looking for dips to buy. You don't want to buy the high, you want to buy looking for the dips. What kind of dip? You're looking for the kind of dip here where buyers step up and then you get a follow through. Okay, even if you didn't buy on this first green candle, the second green candle gave you 138 up to 138.85. Now, it doesn't seem like a whole lot. 139 doesn't seem like a whole lot, but the concept is what I'm looking at. Over here at the open, you had bullish breakout above opening range. The rule of thumb is if we open and continue through the opening range high, 10 a.m., like we did here on Baidu, the stock is most likely going to stay bullish. So you're looking for bullish entries and a follow through, VWAP up and to the right. Right now, we're entering the period right before lunch where we start to see some profit taking. Maybe that's an A pivot. I'm looking for this pattern, A pivot. I'm looking for this pivot, this pattern right here, where A would be that third sell signal. Okay. Now I'm looking for B and C. Where would I be looking for B and C? Right near VWAP. Stochastics oversold. Looking for buyers to step up. And it'd be nice if the S&P cooperates and moves higher too. Okay, here's Baozun. Baozun, fairly inexpensive Chinese name. E-commerce. Okay, so it started off the day choppy. Now we're starting to see VWAP turn up and to the right. Okay, you see that. It's not my imagination. Where would you buy? Okay, you got a consolidation right in here. You got a buy signal. It breaks out. That's where I would buy, right around $4. It's 407. It's a cheap stock. Not looking to buy it, just pointing it out. VWAP up and to the right. Another Chinese name starting to move. Okay, here's the daily. So Baozun, excuse me, would have to break through 430 to trigger a buy signal on the daily time frame. 60-minute. Again, I'm not suggesting buying Baozun. It's already on a buy signal. 60-minute, 4-hour. It's already on a buy signal on the 4-hour. So the next is the daily. So I'm watching the volume in a different screen. Here is Baozun. Okay, here is okay, you can see the daily reversing off a double bottom. Not my favorite pattern, but you can see VWAP up and to the right. And the volume, look at VWAP, look at the volume compared to Friday, same time.
disagreement with hedge funds underweight, mutual funds overweight. Both type of funds benefited from the recent rally of cyclical names like energy. In terms of individual names, only 6 were both favorites in Goldman's hedge fund and mutual fund baskets, the lowest number in 9 quarters. Some of those names, Cigna, Uber, Workday, and then also bullish on the payment space with names like Visa, MasterCard, and Fiserv. MasterCard in particular has been a pretty good bet today. Another all-time high going back to the IPO, as we were just talking about the consumer and how they're parting with their money.
Yeah, well, turning to the broader market. While Jackson Hole is now behind us, there are still a handful of headwinds standing in the market's way as we wrap up a rocky month of August. Stocks still aren't cheap, rates still look like they want to push higher, and we're continuing to see weakness out of China. So how should investors navigate the volatility? Well, joining us now, portfolio manager at JP Morgan Asset Management, Phil Campriale. Phil, great to have you on.
Morning.
I'm going to start right there with that question. How do investors navigate this?
Yeah, so I think what we got from stock and bond.
Thousand. Let's see, S&P, a little dip there.
And in August, this kind of 3% pullback in the market was not because of growth concerns. It's kind of like a high-class problem. Growth is fine.
Flat VWAP. Got a gap down here we could fill right around 4,400.
The fact that they have to be really careful when they're so restricted. So, too much tightening would risk growth. But Morgan, on a scale of, a hawked up scale, 10 being most hawkish, they're still at about a 7 because, the base case should be that they're going to be on hold. But the risk is that a combination of either very strong housing or employment data just rekindles an inflation concern that they have to.
All right, so you went to your multi strategy. Strong market right now. Especially the 10-year back at what, 15-year longer high?
Yeah, so what we need to see more than stabilization. We're overweight interest rate sensitivity, which means we're overweight duration portfolios. But we have no recession here. Our recession probability is only 20%. So if there's like 3 scenarios, hard landing, no landing, soft landing, you're firmly in the middle of the soft landing camp, which is more than for us. Means that things like high
Okay.
8%, which by the way, is a long-term capital market solution for equities in the near term make a lot of sense. There's the 300 people that everybody thinks is this great story. And cash for us is okay, but we would rather get more yield in credit than in cash. But I want to be underweight equity here. Again, if I think that we're not going to be in recession and we think that the Fed is just about done with their tightening cycle, this broadening out story that Bob talked about, I think makes a lot of sense as well. That kind of keeps equities much higher. So when do you think equity FOMO?
All right.
Dynamic, or you got to wait till? Yeah, so I think we get some really big pieces of information this week on core PCE, which is the Fed's favorite inflation measure, and then payroll. So, the payroll number this Friday, I think, just throw a number out there, 200,000 is probably the line. Below 200,000 like last month, but we got the high.
All right. We're just fading. 4,400 is a gap fill area. Whenever VWAP is flat, I generally do a lot less trading. I want to see upward sloping VWAP. As good as tick cumulative looks, it is making higher high. The fast signal is making higher highs and higher lows. It just dipped. It just dipped from the highs. 3.55 on the NYSE up volume. 3.55. It was 7 for the first half an hour, 45 minutes. We had 7-1 up volume. So I'm sure there was some short in there covering, some new buying, but tick cumulative continues to rise, which is telling you to think bullish as institutions appear to be buying more than they're selling when tick cumulative is rising. The only way that can be green and turn up is for institutions to be buying more than they're selling. It's a pretty straightforward indicator. And you'd want to see it happening, all right, as S&P is pulling back, and you'd want to see it happening with oversold conditions being bought, okay? So here's the NYSE. the volume oscillator. Extreme selling, it's kind of flipped if you think about it. Extreme selling brings this line all the way down into the green zone. That's telling to look for a buy opportunity. This is just getting started, just like it did previously with green arrows. Okay, the other thing to consider is the markets. Note the 200-day moving average peaked in 2022, turned down. 50-day peaked and turned down below the 200-day. And all during October, November, December, we were looking for price action to get back above the 50 and the 200-day, and for those two key moving averages to turn up and to the right. Well, lo and behold, they have, and they continue to move higher, while most people are still looking for the markets to roll over, like Mike Wilson, and retest the low. Okay, so we got a little dip here, the high. The red line is the 12-month moving average. This is a monthly chart. Major trend. Long-term trend is bullish. Intermediate term is bullish. Short term, neutral to bearish. Neutral to bullish, goes back and forth. All right, let's go take a look at TRBCX. I added some TRBCX last week. This is the T. Rowe Price Blue Chip Growth Fund, i.e. quality names that have growth in earnings. Okay, so we bought last week. We had a bounce this week. So we want to create this higher low and continue higher. TRBCX. You can also trade RGAFX, a very similar fund. It's just from American Funds Growth of America. There's a whole bunch of them out there. Just check your 401k provider. Check with HR. Most Vanguard funds, they have something similar. Okay, so for those of you who are actually working for a living that happen to have tuned in over the last 5 minutes, you're not worried about this intraday back and forth, getting zoomed in on a chart and watching the 5-minute chart. You're not concerned about that. You're looking at the bigger trend. So if I can only tell you what I'm doing. If I had missed this entire move here, about a 40% move off the low, we got into December. If I had missed that, I'd be looking to buy on dips. Okay. And I'll be scaling in. So let's say I wanted to put $5,000 in my 401k all in one shot. I'd be looking for a dip, but I would do it with like $2,000 increments, maybe $2,500. Maybe I'd cut it in half. So I'd buy $2,500 worth. And if it does bounce, then I'd add $2,500. If it continues to move higher, I'd set my automatic buy to, target this fund, maybe 10% of what my deposits are for the month. Maybe 10% goes in here and, 25% in something else, and maybe, I don't know, 45, 50% in cash for now, and just continue to watch this trend. If it continues, 10 EMA is what I'm watching, the orange colored line. I want to see that moving higher. Okay, S&P, want that to be above, want that to get that back above the 10 EMA weekly. Okay, so we had our first shot below. Last week, we got rejected at the 50-day. We got rejected at the 50-day, which we initially thought would happen if we got a bounce based on advanced decline percent. We thought we would bounce last week. We got the bounce. Thursday, we got rejected at the 50-day. Now we need to prove that we can get back above the 50-day. Otherwise, this will be a lower high and will most likely drift a bit lower. The 100 period is right there, right below price, right at 618. And then the 200-day is down here near 41.45, 41.45. You got the JP Morgan collar. They're long the 42.10 put. They're short the 35.50 put, and they're short the 46.65 call. So they started this in June, So we've gone up, came back down. So the short calls are probably making money. The puts probably doing a little better. Anyway, it's just benchmarks for now. So I believe the way the fund is designed, they're looking for 5% upside and protect you for 10% downside, something like that. I think Corey knows. 5% upside, the way it's structured, they're looking for 5% upside, protecting you for a 10% downside move. You can also trade other ETFs that JP Morgan has, like JEPI, the income, JP Morgan Equity Premium Income ETF. You could trade that, or you could trade JEPQ, which focuses on the NASDAQ. Okay. So JEPI is doing a little better. It's back above the 50-day. But both of these are pretty much range bound. Watch the RSI. RSI needs to start ticking higher. Then you could add to this if you wanted to. ATRFX. Okay, this is the Catalyst Systematic Alpha Fund. This mirrors or tries to mirror the Ray Dalio method of making billions over his lifetime. He used this method. Basically, it's 5 income streams, uncorrelated, bonds, maybe currencies, stocks, real estate, commodities, and it tends to outperform because stocks are not going to go up all the time. Bonds are not going to go up all the time. Yields are not going to go up all the time. So that's what this is designed to do, ATRFX. It's been fading a little bit since July, looking for this higher low at the 100 period to get bought and start moving higher. Okay, what else can I tell you? Let's see. While we're waiting for the markets are listless, not going anywhere. We talked advanced decline percent. These moving higher are a confirmation of what we're seeing. More stocks advancing than declining, tick cumulative higher, 3 to 1, 4 to 1, 5 to 1 up by them. NIMO, McClellan oscillator, turning from minus 108 back to 0 over the last 7 trading days. It was Thursday, 2 weeks ago, that NIMO turned up, or it hit the extremes and then reversed. Now, what's FUTU doing? FUTU is consolidating. All right. So NIMO is at minus 3, let's say minus 4. Minus 4. And it touched minus 108 2 weeks ago, Thursday. We have histogram bars. Let me show you what I'm talking about here. Okay, so this is last week. Okay, so I noted that last week, I noted that we had our first yellow histogram bar. We're at minus 34. You can see that Thursday we hit the minus 108 level. We closed at, I think it was at minus 98. But that was an extreme low. Like over here in March, which we've been talking about. March was the last reversal. Look at the yellow bars. Looking for cyan colored bars and for price to move higher. All right, so let me go to today's chart to show you the difference over the last few days. So this is longer term, and what you should be thinking about where is it? All right, here we go. Okay, so this is what you should be thinking about in your 401k, IRA, longer term. Okay, now look at what the difference. Okay, we got 3 yellow bars. We had a red bar on Thursday. We had that pullback on Thursday. So look at NIMO. NIMO pushing higher. Here's the previous. Okay, here's it again. Okay, previous once more. Okay, NIMO and TTM. Last time the shift from red bars to yellow and turning bullish was March. We talked about that. and those yellow bars leading to cyan colored bars and a bullish follow through. Everything I'm looking at is telling me to look for a follow through. Sorry, bears. Intraday, we're going to go back and forth. Advanced decline percent, like NIMO, same idea, just a different way of calculating it. And let's go take a look. One last thing. Sorry. I know I spent a few minutes on this, waiting for the markets to bounce. NYSE, the new highs minus new lows. Very simple calculation. Okay. Very simple calculation. You take the new highs, you take out you subtract the new lows, and you get the net result, which is, survey says, positive histogram bar. First positive histogram bar in over a week and a half. We faded from the July highs. Black line is turning higher. This is not my imagination or my opinion. That's what it's doing. So that's telling you, look for dips to buy. Do not buy the high of the day, and you're going to be fine. Okay, look for dips to buy in TRBCX. Look for dips to buy. Oops. Okay. Look for a dip to buy. We bought a dip last week. Looking for the follow through. This is a daily chart. We just talked about the weekly. Okay, let's look at the. All right, let's look at the S&P 500 real quick. All right, checking money flow is still bearish. Okay, that needs to turn up and cross the zero line like it did back over here in March. Last time we had this crossover, look at MACD. Okay, is MACD turning down? No, that happened 3 weeks ago, 4 weeks ago. What's happening now? It's turning back up like March, just like everything else I just got finished showing you. All right, I belabored that enough. I'm sorry. I don't mean to bark too many bullish comments in the room. I'm looking at the longer time frame and intermediate time frame right now. Intraday, I'm not doing anything on S&P. We've got a flat VWAP. Okay, here we go. Flat VWAP, turning back up.
Busy night on overtime tonight. We've got Alexander Wang from OpenAI, CNBC disruptor. Good day to have him to talk China technology dynamics with the U.S. and, of course, a new partnership with OpenAI.
Got some headlines just now saying talk to Roboto, frank and constructive. Let's get to the judge. Carl, thank you. Welcome to the halftime report. I'm Scott Walker, front and center this hour, the final days of a somewhat rocky month for stocks. And what the now famously fragile fall will hold for your money. The investment committee debating whether this two-day rally has some newfound staying power. Joining me for the hour today, Amy Raskin, Jim Leventhal, Steve Weiss, Joe Terranova. Take a look at the markets. Right now, we are green across the board. Yields at 421 on the 10-year. All right, Joe. So we said it was a rocky August. I mean, it hasn't been that bad, though. It hasn't been that bad. I mean, S&P's down 3%. Sure. Here's the craziest stat of the month. The S&P 500 has yet to post consecutive green days in the month. If August finishes that way, it will be the first time in more than 22 years that the S&P 500 failed to post consecutive daily gains in a month. My big question to you, can we get our momentum back?
Yes, and we will. We will. Because if you go back to 1990, there's been 10 instances in which the S&P 500 was up greater than 10% the first half of the year. And in each one of those instances, the second half of the year was positive. I believe that you will get it back. You just have to be patient. You have to wait for time. On Friday, I said we were 0 for 2 in terms of the catalyst. Okay, maybe that was being a little bit of a hyperbolic statement, but in reality, if you place that into context, where was the S&P 500 last Wednesday? Let's pull up a chart and look. The S&P 500 last Wednesday was 4436. Okay, so the market's gone to a lot of different places, Scott, and really gone nowhere after NVIDIA, after Jackson Hole. I think we got as high as 44.55, as low as 43.56, and here we are right around 44.20. But what's the reason for that? The reason that we're going to a lot of different places and ending up nowhere, and why you have to be patient, is Treasury yields. The 10-year Treasury last Wednesday, as we headed into NVIDIA's reporting, it was 419. Where's it today? After NVIDIA, after Jackson Hole, it's 421. That's what's leading the market right now. That's why I think patience is the right position to have in the market, but understand you're in a volatile period that's bumping up against seasonality.
So, Amy, is that the number one factor as we ask the question, can stocks get their momentum back as we head into the fall? Number one on my list, what will yields do? That's the biggest wild card, as Joe says. Do you agree with that?
I do. I do agree with that. Real yields are up 60 basis points this year. Obviously nominal up more, but you would have expected multiples to contract when you get yields up, and instead multiples have expanded. So we are in this period, I think, of digestion, of choppiness. We haven't been particularly bullish of late, and I do think that's going to continue. Maybe we'll get the year-end rally as we usually do, but I would expect the fall to continue to be tricky.
Weiss, I got three things on my list, right? That's the factors, if you will, that are going to make the determination as to whether stocks are Number one, yields. What will they do? Number two, the data has to cooperate, right? You want it to be good. You could say arguably not too good, and you're going to get a flurry of it this week. Confidence tomorrow, GDP revision Wednesday, the Fed's favorite inflation measure.
Oh, it's after 12. Shit, I just heard, I'm hearing Wapner talking. Okay, let me listen to this, what he has to say.
Those are the three most critical factors as we see them as to whether you'll be able to say that stocks can get their momentum back.
Yeah, I agree with that. More important is the PCE number than
I'm going to listen on
everything is relevant that you mentioned.
CNBC for a few minutes.
The market's really got
Rest my throat.
Because the dialogue narrative has changed somewhat. So narrative is now more focusing on the consumer. They're focusing on the depletion of savings that they've built up over the pandemic. They're focusing on high credit card balances and slightly increasing delinquencies. So that really is the issue. Where is the market going to turn? And then, of course, when Powell came in, and what a wild day it was on Friday. I mean, the market just couldn't make heads or tails. Attribute some of that to light volume, but light volume could have taken you either way. And as it turned out, it really did. So look, I think we're in a pause time for the market. September, lots made of it as being a very bad month seasonally, but historically, since 1920, September has been down only 1.1%. That's really nothing. And then October, while it has the largest number of 5% corrections in a month, it's generally an up month. So look, I don't think you can really look at those seasonal aspects of it and say that's going to really dictate the market. To me, it's more, how does the economy move? And right now, you can see the narrative really switching to that.
Looking for a buy signal on the S&P here.
Weekend, you've got inflation continuing to stay high, and the Fed is on watch, not for lowering, that's not going to happen anytime soon, but on watch for increasing to tighten. I personally don't think that they will, but that's enough of an overhang where I think it's going to be quite some time before we regain momentum.
Jimmy, what about you? Will you take into consideration everything that everybody said to this point? What do you think?
There's a balance, always a balance between the positives and the negatives facing the market. We know a lot of the negatives, right? You mentioned yields. I'm surprised nobody mentioned the retailers' reports last week, which kind of cast a sour cloud over the state of the consumer. But on the other hand, there are some positives as well. We see where third quarter GDP is currently tracking. And we've seen macro estimates for the S&P 500 for this year and next finally start to tick up, finally reflect what we've seen in the first two quarters of better than expected earnings. And when you have a balance between the positive and negatives, I find it's very useful to address what the environment of the market is right now. And it might be helpful, Scott, if we pull up a 2-year chart of the S&P 500, compare where we were last year. It was a decidedly negative trend, decidedly negative. Now we've got the 200-day moving up, and we have for most of this year. So the trend is now positive. And in that trend status, the positives in my mind outweigh the negatives once we get through 2 more weeks of this choppiness.
You better get tech to stabilize, though, Joe, right? I mean, it's the worst sector of the month, still the best sector of the year. Those 7 stocks that had done so well, they sputtered a bit in August, obviously. Meta down 10%, Tesla down 10 as well, Apple 9, NVIDIA 2. Those are not tremendous declines. Alphabet 2, Amazon 1. But in the same light, you do need some stabilization there. If you're going to have questions about the economy and where we are and maybe other cyclical areas of the market don't do so hot, you're going to need these to get back on track and find their own momentum, right? That's where the momentum was in the first place.
That's where the leadership was. We had leadership for the very first time that existed in technology and in the mega caps. We've been searching for that since the pandemic. For the market to restore its prevailing bull trend, to go back towards the high for the year, to call into question the possibility of maybe taking out the January of 2022 all-time high, then yes, the participation from mega caps and technology has to be there. I also think that you have to think about two things. Number one, positioning plays to the advantage of the bulls, because at some point, if momentum begins to restart, then you're going to have a lot of portfolio managers that begin to chase.
Well, where are they going to chase? Let me stop you there. They're going to chase mega caps, right? Because as we learned last week from some of the data that was out there regarding either Apple or the mega caps more broadly, they're underowned. They're in terms of institutions, hedge funds, and things like that.
And understand that's the easiest way to capture the passive exposure to the index is through those mega cap names. There's also the possibility that the downside is somewhat buffered because a lot of these companies have strong free cash flow and strong buyback authorization.
Okay, there's just not much follow through right now. We're at the lows. I'm thinking the potential is that we're going to move down to fill this gap.
Understand that NVIDIA, the board authorized an additional $25 billion in buybacks without an expiration. They already have about $4.5 billion on the previous authorization that they haven't bought back. It's about $29.5 billion that buffers the downside on any significant correction.
That's why your admittedly hyperbolic comment about where we were 0 for 2. I could easily come back at you and say we were 2 for 2. NVIDIA delivered. They give you the buyback. Okay. They, in essence, perhaps put a floor under their stock. And then Powell, well, it's not like he trashed the market or rates went to the moon off of his comments. I'll come back and say we were 2 for 2. It would have been a lot different story had either of those things not gone the way they did.
Yeah, maybe I'm just not being patient enough, because maybe it all comes to fruition in the coming weeks once we get out of the seasonal period and once we get out of these distortions between what clearly is a consumer that seems to be decelerating in its spending habits, inflation that's stubbornly high, and an economy that looks a little bit stubbornly high as well because of all the fiscal stimulus.
It brings me back to Weiss. All roads lead to Weiss. Because I see here, as we're talking about these catalysts that you need, the question is, do we get to a dead end at the end of that road, Weiss? But that's neither here nor there. You bought more Meta, I see.
I did.
On Friday. Tell me why you did that.
I did. Look, I changed some a while ago. The stock was down almost 4%. It was down about $10, 3.5% or so. I just thought it was ridiculous. It's the least expensive, most recently priced mid cap tech stock. So that's why I did it. I just thought it was, the summer Friday, late in the weekend, the Friday before the Labor Day, the week before Labor Day. So plenty of reasons for that lack of volume to just drive that stock down. That was crazy. So I took the opportunity to add some back. I didn't buy back everything that I sold, but it's a comfortable position.
Okay, watching these dips this time of day between 12 and 2 o'clock on stocks that are otherwise in a bullish trend. I'm looking for B and C pivots during this time of day. Like S&P 500.
It just got very cheap very quickly. So,
Joe, you have to buy them when it's down. That's what Weiss says. Meta's down 10%, as I recapped a moment ago in the month of August. You own that too?
I do own Meta, and it's
down 15% from its highs.
Yeah. Well, you still would make the argument, Weiss, that it's one of the cheapest stocks of that group. I mean, the PE would obviously validate that thought, but that's part of your thesis here.
Absolutely.
It's leadership. The mega caps are the place, I believe, where you could find the quote unquote definition of quality. And I think everyone wants quality in this marketplace right now. But I also think don't dismiss looking at a lot of reasonably valued semiconductors, whether it's a name like Broadcom, onsemi, Microchip, KLA Corp. These are semiconductor companies that have gone through already a recessionary type of environment in 2022 and come out on the other side better.
Okay, so I'm glad you went there because there's an interesting note, Amy, from Wolf today, where they essentially call the top in semis, and they use NVIDIA as the catalyst to do it. And the earnings that came last week and the lackluster reaction that they saw in the market, unsurprisingly, they say, the results were telling, to say the least. What at first looked like another blowout earnings print that would once again propel the broader market higher quickly turned out to not be the case. Was this the market calling the top? Sure feels like it. What do you think?
I'm not sure if it was calling the top, but I do agree more with that note than not. I thought reaction.
All right, we're technically on a buy signal, S&P.
Very worrying. It was such a blowout. For the stock not to do anything anything big really was a worrying sign. It told you that expectations are much higher than even the whisper numbers were, and the whisper numbers were pretty aggressive, than the whisper numbers were expecting. So I do take it as a worrying sign. I do think if the market comes back, it is not the mega caps that lead. I do think while the cash flows are good, I do think that they're, as a group in general, are overvalued. Notwithstanding Meta being the cheapest, I agree with Steve on that. But this is not where I'd be looking for leadership. I think that's where we had leadership, but I think it's stalled out, and I wouldn't expect it to come right back.
What if, Jim, I took the other side of that and I said, you know what, I don't think it was worrying at all? What if you make the case that it was exactly what you would want to see in a stock that's been hyperbolic, parabolic? The way that stock has moved 50% into the number over the last 3 months, up to 200% year to date. Now, if NVIDIA reports what it did after there was already all of that good feeling in the stock, you'd say, man, this market has just gotten crazy. And that AI group, which was already on fire, now is just a 5-alarm burning mess that needs to come down to earth and settle down. Maybe it's a positive sign, the way that NVIDIA reacted after earnings. Maybe we should look at it a different way.
If you were to say that, Scott, I would say I completely agree. And I think the key element here is that the time frame matters. I can go back 3 weeks ago, a little less than 3 weeks ago, the stock bottomed out at 403. Right now we're seeing it at 458. So, you do the math on that, and that's a good 15% higher, more or less, in 3 weeks. For a stock that, by the way, up until that point had been up 200% year to date. So, Amy makes a perfectly valid point that you can look at it on the day of the earnings or the day after earnings and say, wow, on that one day, it was really lackluster, and especially after that blowout. But I think the perspective matters, and this is to Wolf's comments as well. Maybe it's a top for this week or even this month, but by highs.
FANG stocks trying to turn. Apple coming off the low. Google, Amazon, Microsoft. All right, SMH flat. Semis flat. Up on the day, but flat. Chinese stocks continue to show interest. We've got 95% of sectors are green. Only thing that's not green is pharmaceuticals. They're flat, off 0.1%. Metals and mining, real estate, retail, and the builders leading. Industrials doing well. Caterpillar on the watch list. Materials, software stocks, small cap energy, communications, everything is green except for pharmaceuticals at the moment. VIX still dropping. NIMO trying to pass through zero.
Disney is undoubtedly one of the most dismal stock stories of the month of August. It's our chart of the day for that reason. Down 5% this month, basically at a 9-year closing low. Amy, you own it. What have you been doing with it? What is your outlook for it? Because the price action and the chart itself are just ugly.
Yeah. Well, I've spoken about this a couple of times. We did sell it from our focus portfolio earlier in the year, and we trimmed it back a lot in our core portfolios. Look, this stock has had a lot of bad news being thrown at it. The reason that we sold it was that we're competing against companies that have unlimited cash flows, pretty much, and very low cost of capital, and they're competing for content in that environment, which we didn't like, and we still don't. And
Okay, we're still making lower highs. We're below VWAP. VWAP's starting to flatten out.
and it had a nice reaction to the quarter. I do think they're doing a lot of the right things. As I mentioned before the show, I just spent 2 weeks in Japan. We spent a couple of days at Tokyo Disney.
Okay, we got a few more stocks green, a few more stocks going red on the day on the NASDAQ 100. It's about 30 stocks now. 70 are still green.
It's very, very valuable from a long-term perspective. So I do think that there's a lot of near-term noise. We have to see what happens with ESPN and what deal Iger can pull out with that. But I think from a longer-term perspective, this is a company that has a lot of assets and a lot of goodwill built up for millions of people around the world. Love this company and love their content, and I think that goes a long way. So I do think that at these prices, it's probably more of a buy than a sell. But again, there's a lot of noise in the near term.
I mean, they may love the company, they may love the content, but it's interesting, Amy saying, well, there's a lot of love for this stock because of what she saw out at Tokyo Disney. I mean, the fact of the matter is there's been this disconnect between that alleged love that people have for this company and their content, which others have been critical of late. Josh Brown being, among the loudest voices.
If you want to chat with Lee Star, he's in the
What this business is actually doing moving forward. I think it goes back to part of the pandemic. It goes back to
he's in the YouTube chat.
was in the initial stages, and we were having conversations on the show about Disney being a growth company. And I think what the realization is now is that they were never able to ascertain that element of growth within the
Okay, pushing lower. Looks like a bear flag again. Most likely going to come down and check, what do you call it, the gap down here. The way it looks right now, lower highs, lower lows. Let's see what the 15-minute, it looks like 15-minute. Still on a sell on the 15. 30-minute.
So we'll keep our eyes there too. I want to hit Goldman, Weiss, because Goldman's down 8.5 in August as well. 4 straight negative weeks. It's coming off its 4th straight negative week. That's the first time since March. Worst month since December. You are a shareholder. Give me your thoughts, please.
Well, they did announce the sale of one of their retail businesses today, and they sold it at gains, which may be surprising to some. One of the reasons why the stock's up today. Look, you're having a CEO drama play out in public, and that's never good for confidence in the stock. You also have, people just don't know when that the market is going to open up again, meaning the IPO and secondary market. We're seeing some green shoots, but consensus is from the bankers, whether it's the bankers at Goldman or any of the other firms you talk to, it's really a 2024 issue. And while we've seen the curve, the yield curve be less inverted and some would argue start to steepen, and that's what they really need to see to make money. So I was actually thinking of buying more Goldman today because they're very quick to address their issues. Keep in mind, they make their living primarily advising investors, institutional investors, and ultra high net worth investors. And so they're on show here.
Excuse me.
So very well. They made an investment in retail banking, they're saying, without letting it sit there and fester and decline for years. It was a mistake. Let's get out of it. So I think that's very positive. So if I had to guess, Goldman's going to be higher 6 months.
FYI, I have to start taking lunch a little bit later in the evening, around 2:15. Pick up my son from school and be back here in like 45 minutes. So around I guess about 2:15, I need to leave, go pick up my son, come back, probably be back around 3 o'clock for the last hour of the trading day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 28th, 12:22 on the East Coast. Markets are just listless. Very few blocks have traded. I mean, this is probably the least amount of blocks I've seen in several weeks now. Going into lunch hour, we've got, let's see, 1, 2, 3, 4, 5 blocks on IWM. SPY, we've got 1, 2, 3, 4 on the SPY. And 1, 2, 3, 4, 5 on the Qs. So 5 Qs, 5 IWM, and 4 SPY. There's usually about 3 or 4 times that much by this time of day. When you've got a doji day, up down volume, 3 to 1 up, and the tick cumulative rising, grinding higher, then there's really not a lot of institutional activity, not, super active. The net result is that we're seeing bullish signals, but waiting for more of a trend. The trend is grinding slightly lower at the moment with a potential gap fill down here. NIMO was above 0. It's at 9. Now it's at minus 4.6. So as we ease through lunch, fewer buyers right now.
Well, the next call today, CrowdStrike reports earnings this week. Stock got downgraded today. To equal weight from overweight, Morgan Stanley. Joe, I'm coming to you on this. Price target goes to 167 from 178. We think the slowdown in core endpoint security is likely.
Let's see how choppy we are here. Buy, sell, buy, sell, buy, sell. Zooming out to the 5-minute. 2 sells, 2 buys. Currently on a sell.
So here's the way I think about owning CrowdStrike, owning Palo Alto, owning any cybersecurity name. And here's why I own them. First of all, let's say I owned $1 of CrowdStrike, which I previously did in June. I didn't own Palo Alto. Right now, I own 50 cents of CrowdStrike. I own 50 cents of Palo Alto. I don't own it for the upcoming quarter. I agree. Maybe the risk reward is more balanced. On the street, there's 41 buys, there's 7 holds, there's 0 sells with a 12-month average price target of $179. Here's why I own it. I own it because computer network attacks and computer network exploitation is only going to increase in the coming years. It's state-sponsored attacks. They want the technology that's present here in the United States. And CrowdStrike as a company is really good at threat hunting. What is threat hunting? Threat hunting is basically meeting the attack where it happens. The average attack occurs in 84 minutes. 84 minutes, the average attack. What's the response to that? Utilizing CrowdStrike and their threat hunting presence, you cut down the average response, which could be over the course of 4 days, to literally when that attack ultimately happens. So I'm owning this over the long term because I believe in the cybersecurity thesis. Just like AI is a actionable thesis within the market, so is cybersecurity. Upcoming quarter, Morgan Stanley could be right. And by the way, last week, UBS went 170 to 180 on CrowdStrike. So that offsets that.
Let me go by my memory and correct me if I'm wrong. In
history of you in this space. It was CrowdStrike only, right, for a while. Palo Alto. You did not. Well, that was years ago. Yeah. But more recently, then you didn't have Palo Alto as it sort of outraced CrowdStrike, which you declared at one point either on this show or on Gordon Bell, I own the wrong stock. Now you've lightened up at some point recently on CrowdStrike. You're back in Palo Alto, and that's where we find ourselves. Can we lay that out right? Absolutely. The low in CrowdStrike was in May at around 116. I got in at a very decent price. I pulled out of it somewhere around 146, 147, and just kind of sat back. After Palo Alto's earnings, I realized let's stop trading. Let's stop trading these cybersecurity names. Let's be in the cybersecurity names. Now, by the way, the Joe T ETF owns Fortinet, which it doesn't look good. It's ugly because Fortinet, after earnings, was down significantly. That's more short-term oriented. My holdings, my personal holdings of Palo Alto and CrowdStrike, they are for the long term, and they are because I believe the computer network attacks and exploitation are going to increase in the coming years. Okay, those earnings, by the way, in CrowdStrike are Wednesday in overtime. We'll be looking forward to that this week. Silvana now has our headline for us today. Silvana.
Well, a federal judge in D.C. set former President Donald Trump's election interference trial date for March 4th. That's one day before Super Tuesday. The judge said Trump will have to prioritize the trial and that she wouldn't change the date based on any defendant's professional obligations. FTX's former CEO, Sam Bankman-Fried, appealed a court's decision to jail him before his trial over the failed cryptocurrency. A judge revoked Bankman-Fried's bail earlier this month, finding probable witness tampering after he shared his former partner's personal writings with the New York Times. Bankman-Fried is arguing he is being punished for exercising.
Do you think you got it bad? You could be Sam Bankman-Fried and be a hell of a lot worse. Or anybody for that matter, you know. Always got to keep it in perspective.
Plus, we're just 1 month away now from CNBC's Delivering Alpha Investor Summit in New York. For details, you can scan the QR code on the screen, or you can visit cnbcevents.com/deliveringalpha. Halftime's back after this.
All right, so a bit of a slow day. We popped up in the morning. We're still green on the day, but we popped up in the morning. We faded below VWAP. VWAP is now flattening out. We had the prospect of a dip down to fill the gap. Technically, we pushed a little bit higher here at around 330 on Friday. So I don't know, gap fill people like like Brother Bill. I mean, technically we've traded up to that level. So we're right back to the level now, that horizontal line. There's the close on Friday. So do we technically need to go all the way back down to that level? Yeah, possible. We got plenty of time. It is 12:30 on the East Coast. Again, I'll be taking late lunches this week, pick up my son from school, zip back over here. Should be back by 3 o'clock p.m. at the latest. Probably get back earlier. Bitcoin trying to push higher. Bitcoin. NIMO trying to push. Starting to see more positive numbers now. NIMO was -5. It's minus 3.94 now. And oscillating back and forth. looking for a bounce. All right, NVIDIA. Watch NVIDIA here is about to go. NVIDIA looks like breakout imminent.
We're back. Bob Pisani has today's ETF edge. Hey, Bob.
Hello, Scotty. Welcome to the ETF portion of Halftime Report. The ETF community is abuzz about a new development that could lead to another huge wave of money going into ETF funds. 20 years ago, Vanguard was granted a patent to operate mutual funds and ETFs as essentially the same share class. That allowed access to all of Vanguard's passive mutual funds in an ETF wrapper, one of the factors that helped fuel Vanguard's big rise as an ETF powerhouse. Now, that patent is now expired, and others, led by dimensional funds, are lining up asking the SEC to allow them to essentially copy what Vanguard has done. Let's talk to one of the first guys in that line. Gerard O'Reilly is the co-CEO and Chief Investment Officer of Dimensional Fund Advisors. Gerard, why is this so important, having ETFs and mutual funds in the same share class, and what are the chances the SEC are going to grant approval?
Hey, Bob, thanks for the question. Good to see you again. It's important, I think, for all investors to be able to benefit from the economies of scale that ETF share classes can potentially bring to investors, because you have people saving for retirement, and those are the same people that are investing in ETFs and brokerage accounts. And if they can invest in the same strategies in their retirement account through a mutual fund share class and in their brokerage account through an ETF share class, I think that gives them benefits of economies of scale and benefits of consistent of investment approach across their various different accounts. So we feel very strongly about this one. A lot of our clients are demanding and asking for more strategies to be
BWO
fund and ETF format. And we think working with the SEC to get the required exemptive relief in order to offer investors that structure is the way forward for us and the industry.
If I'm hearing you right, the implication here is that this opens up a whole additional mechanism to enter the ETF space. I mean, there's over 7,000 mutual funds out there. So
yeah, that's true.
To expand the business rather largely here. The biggest piece is this retirement market. It's $6 trillion in retirement funds are out there, but the business is mostly closed to ETFs. It's all mutual fund companies. Could this open up the 401k business to ETFs, for example?
All right, so NVIDIA having difficulty right here at the 460 level. Needs to break above. If we can, you probably got about $5 on NVIDIA from here, 460 to 465. If you're looking at NVIDIA, 460 to 465 looks doable. Technically, it's still on a sell, so it needs to get above 460.50 or so, I guess. No, 460.18. If it does, then we could see a follow-through and a move up towards 465. $5 on NVIDIA potentially. If we get above 460.25 or so.
Vanguard had exemptive relief for passive funds for their funds. Are you asking for passive and active funds to be allowed to have this dual share class?
Yeah, we're asking for exemptive relief under what's called the new ETF rule. And so that would be for active funds only, as well as passive funds. Active funds.
I was going to say this guy's got to be Irish. They finally showed his name. O'Reilly.
Under the ETF rule, so using the existing infrastructure frameworks that exist.
Hope everyone's having a good day. It's kind of slow. Lunchtime. Not much going on.
On ETF Edge, that's 1:10 p.m. Eastern Time. They'll be joined by Ben Slavin. He's the managing director and global head of ETFs for BNY Mellon. Learn why this is a big potential.
Okay, NVIDIA is pushing a little bit harder now. It's about to break higher. NVIDIA.
The ETF space and the retirement space as well. Big areas there. And what are the chances the SEC will grant approval for that? It's not clear yet. ETFedge.cnbc.com coming up, Scott.
All right, you. All right, Bob. Good stuff. Thank you, Bob Pisani. Coming up. Biotech bounce. One big name in that space is rallying. Joe owns it. We'll talk about the reasons behind that move and the look ahead for that space in general. We got a lot of ownership of healthcare stocks on the desk today. We'll do that when we come back.
A lot of green stocks today. Sectors still mostly green. A few of them have gone red. Pharmaceuticals and healthcare go hand in hand. Those are red on the day. Biotechs XBI are red. 0.04%. Not much to be concerned about. It's basically flat Consumer discretionary, healthcare, utilities, biotechs, they're flat at the moment. We're being led by SOXL, semiconductor 3 times. Metals and mining, retail, robotics, and AI. And real estate, those are the top 5. Top 5, looking for S&P to continue this bounce. Still, we only have 5 Q, 5 IWM, and 4 SPY blocks trading today. Very few interested parties. Oh, we got a 5th block. We got a 5th block in SPY. 6 on the Q, 6 on IWM. Okay. So we're starting to build a little bit more. All right, S&P is starting to turn. If you can learn anything from the trading room, it gets quiet when the markets are basically flat VWAP to slightly down sloping. It isn't until we start to see upward sloping VWAPs that the trading room gets more active. So that's kind of a cue in itself to be cautious when VWAP is flat. And you see the room isn't doing much. I'm watching the room, the trading room. Yeah, NVIDIA is right at previous daily close. Yep. That's why I wanted to get above 460. There it goes. There it goes. There goes NVIDIA. All right, the S&P is helping as well. Watch your FANG stocks in order to see NVIDIA ripping higher. I'd like to see Google, Apple, Microsoft, Amazon all pushing higher. They are. Most sectors are pushing higher right now, coming out of squeezes. Semiconductors in particular, coming out of a squeeze on a 2-minute chart.
Coursera.org.
We're watching shares of Horizon Therapeutics today. They're higher. The FTC pauses its challenge to Amgen's $27.8 billion takeover deal. So you own Horizon first. So let's just go over this with you quick, and then we'll expand it to everybody else because we do have a lot of ownership.
Yeah, so obviously this is favorable for closure of the deal. The expectations is now that this deal could close by the end of the year. That's what the pause through September 18th. A lot of the reasoning why we have owned Horizon Therapeutics. Yes, very quality company, biotech focused on immunology, but also have very, very strong momentum. I will add, this is also probably favorable for the Seagen Pfizer deal as well, given the FTC pause. So on both fronts, good news.
So, Jimmy, I've read some.
All right, NVIDIA, what you gonna do? What you gonna do?
Disappointment this year, obviously. You own AbbVie, Bristol Myers, CVS, Thermo Fisher, Vertex Pharmaceuticals. What do you think about this space and some of the names specifically that I mentioned to you?
Yeah, there's not been a lot of love for this space this year. And, I think that was a wide array, as the healthcare sector is, of companies. Thinking about the pharmaceuticals in particular, there's a negative catalyst that's about to get out of the way. I believe it's Friday that the government will announce which 10 drugs they're going to force negotiations on as a result of the IRA Act last year. And I think that's been hanging over a lot of the pharmaceutical space. Once that's out of the way, that could clear the way for these very cheap, high-yielding stocks to start to recover. But the space overall has just lacked attention, and I think that will eventually...
All right, Amazon on the move here. Watch Amazon.
Amy, AbbVie, Editas Medicine. We never talk about that one. Why don't you tell me about that? What is that?
Amazon closed right around 133.25.
We're not talking about it. We'll continue not to talk about that company or that stock. Regeneron.
Okay, NVIDIA going. All right, so you're plus. You're +1 now. NVIDIA +1.
In general has not gotten a lot of love, but I agree with Jim. I think these are underlooked companies right now.
AMD looking good, squeezing. Okay, there goes NVIDIA. There it goes. Goodbye.
space, but hasn't gotten the credit for it in the market. So we like
NVIDIA.
a lot. It was our
Follow through buy signal, push through yesterday's Friday's close, 460.18, +2, +2.
Okay, and then lastly, Weiss, right? We made a big deal of you selling Humana last week. You still own United.
Humana,
You like
Rosanna Dana.
healthcare. Do you still like it now?
Remember Rosanna Dana? Those were the good Saturday Night Lives. I don't know. I wasn't really into politics, so I couldn't tell you if they were politically centric back in the day when Bellucci was still there, Eddie Murphy and stuff. I mean, they might have been. I wasn't paying attention. All right, so the S&P, nice follow through here on the S&P 500. Starting to push on a buy signal. NVIDIA with a nice follow through buy signal as well. Okay, NVIDIA moved above 460. That's $2 +2. Following through.
I took a trading position in a company called Ellis. The stock got crushed when what they do is they basically make a drug that's injected into your eye for advanced macular degeneration, dry eye, which clouds your vision. You're not able to see. It's for older people. You may be experiencing it now, as a matter of fact. But they had a few incidences where it led to an infection. 2 people had irreversible blindness out of the 7 that affected it. But they came out, and it was not related to the drugs, related to the needle. So I bought a little in the 30s. I bought some more for that. And now we came out at that 40. I think the stock will recover back up to
What's the ticker?
Let's trade.
What's the ticker?
APLS. APLS.
All right. I want our viewers to be able to follow that. Can we throw it? There it is. Okay. Appreciate that, Weiss. Better late than never, I guess. But what's going to do? Up next, Mike Santoli joins us with his midday word.
Oh yeah, Corey, that works too. NVDL. NVDL is a alternative to trade. You don't want to do options. You don't want to have to worry about the fade. So it's a fifth of the cost, approximately a fifth of the cost of NVIDIA shares. That's the granted shares 1.5 times long NVDL, NVIDIA ETF. We're getting back to the high, so wouldn't be surprised to see some profit taking up there. It's still on a buy signal. Okay, the FANGs. Okay, let's go look at the FANG index. Talked about this in the weekend video. Okay, so we still got a lot of work to do. It is, we're approaching September, which tends to be not so friendly. Not so friendly. We managed almost 102% gain off the October low. Not me personally. November markets, November 102% to the high. We've given back 236 Fibonacci. Let me just update this. Okay, push this over here. We need RSI, as you can see in the top panel. We need RSI to continue. Okay, and we got this trend line we got to deal with. RSI right there, still red. Looking for that to continue. Stochastics, MACD. Look at MACD. MACD is trying to give us a turn as a function of price. NIMO, or excuse me, STO. Do we dip like we did over here or right here? We're coming off of a oversold condition, so my guess is that with advanced decline percent more bullish, we could see follow through if institutions agree. With most people expecting September to repeat the negative performance we normally see, I'm watching advanced decline percent. I'll be looking to take profits into strength like we did last time into July. When this gets up, getting close to plus 30%, that's what I'll be looking for.
You know, we had a maximum 5+% pullback in the S&P. Obviously, some of the best performing stocks of the year had a deeper setback. We're sitting on that. We're basically where we were 2 months ago, mid-June levels, is kind of when we first got up above 4,400, and where we were 2 years ago as well. I keep pointing out, we keep tracking that 2021 path of the market. I think that the question, which won't be settled today or this week, is, was that enough to just sort of reset things?
All right, so advanced decline percent. Okay, that's looking good. NVDA needs to get above these areas here. NVIDIA. Whoop. NVDA. NVIDIA needs to clear this level right here.
You know, it's a question of not only what's going to be the next catalyst, but you can flip that around and say, what's the next thing that could possibly scare us? And to me,
you got support over here that was lost. We ran right back up to that resistance. Now we're trying to get back above it. Double bottom, which is a good thing. Looking at this double bottom. Let's look at the 60-minute. Okay, 60-minute. Okay, so that's a long way from a buy signal. 60-minute, 30-minute.
The data could be good, but maybe not too great. Yeah, and then you do need tech in some respects to, you know, get. Doesn't necessarily have to run off with things, but at least stabilize.
You're an index investor, for sure. Those are the things you would need. You know, I think all of that.
Fang stocks, a little rejection there.
Don't look like they're going to go galloping higher. It's probably okay, but yeah, things have to go right. It's not about. I always believe that good news is almost always good. In other words, I think if we get a strong jobs report on Friday, the market's not going to over extrapolate that into.
Okay, we got Apple pushing above VWAP right now. Apple pushing above VWAP. Let's check out Apple. Okay, Apple looking for that to push through VWAP here. Currently on a buy signal, looking for a follow through. Flattening VWAP, which is telling you the maximum that I would anticipate is like 180. Okay, so that's $1.75. Is it worth it? VIX, bear flag on the VIX. Once again, I have to leave, take lunch around 2:15, go pick up my son from school. I'll be back here before 3 o'clock power hour. I normally stay here and have lunch. This week I have to do the fatherly duties. Apple trying to push through VWAP. So I'll leave here around 2:15, 2:20, 2:20 at the latest. All right, looking for the S&P to rip higher here. Looking for NVIDIA to break out. Momentum. The main thing I'm watching, well, there's several main things. I'm looking at momentum. Okay, advanced decline percent. Okay. If this was moving lower, I'd be more on board with Mikey's looking for. Mikey's looking for 4,300, 430, I think you said. I'd be looking for that if advanced decline percent wasn't moving in the opposite direction. He's looking for 440. That's where we started the day. So I would be looking for most stocks to turn over the other direction. So I'm watching momentum, momentum-based indicators. Okay. Minus 59.51. Okay, so that's improving. Okay, S&P is moving. NIMO intraday. NIMO intraday is -3. It was -5. Earlier it was above the zero line, +1, I think it was. It dipped down on this little foray into the 44.15 zone around 11 o'clock-ish. And now we're turning the corner, a little rounding bottom, if you will. The FANG stocks are also echoing the same sort of price action. So I'm watching the FANG stocks, a grid of FANG stocks, if you will. Apple, Google, Microsoft, Amazon, Tesla, and NVDA. Watching those six, sorry, can't count. And there goes NVIDIA, breaking higher. NVIDIA, okay. NVIDIA is +3. Oops, +3, not 34.
Alleges everything from internal strife within Tiger, limited partner rebellion to regulatory issues, but
all right, VIX dropping off. VIX dropping off, helping.
packed with lies in a letter to its investors, which was obtained by CNBC and confirmed by the firm.
VIX dropping off is helping.
Contents of the correspondence. It's worth noting that the firm has actually rebounded from a pretty tough 2020.
Okay, the dollar rolling over.
56%. A person familiar with the matter tells me that Tiger's public portfolio is actually up about 20% through July. The firm's biggest public positions, according to its 13F, are Meta, Microsoft, and Apollo, each of which is more than 30% higher.
Yeah, right.
Essentially a microcosm of being leveraged to tech.
I'd like to see it get back up to the highs. 500.
Last year with higher rates and AI hype, which has contributed to the gains this year, Scott.
Yeah, interesting story. Weiss, I know you have thoughts on this.
Yeah, I have fumble fingers. I have big hands, so.
Tiger Global's not a train wreck. Where they had their biggest issues were in the private market, where they were just spreading a lot of money to a lot of different companies at very high valuations. So, of course, some people are going to be unhappy. Some people aren't going to get paid. That's just normal business. But Chase Coleman's a brilliant investor, and they're going to recover. Every hedge fund that has their profile, whether it's Larry Robbins with his fund, he's a great investor, or Tiger Global, they go through rough patches, but you just have to stick with the long term.
All right, Microsoft continues to push. Let's see, Microsoft, Apple. You want to see all these continue like this? NVIDIA.
When there's volatility, you lose some money, you cut some heads, you don't pay people, and unfortunately, one seemed to have gone off the rails, and it's employee, and that's what we're seeing.
Yeah,
so I read the letter. It was not professionally written. It was not drafted in New York. I'd be shocked.
Yeah. Les, I'll let you wrap it up.
Yeah, I agree with that. I mean, Tiger Global is the type of fund that if you're an LP, you don't put money in there that, you expect it to.
All right, nice follow through on S&P, pushing higher.
High returns that are levered to kind of growth and technology, whether it's on the venture side or in the public side. And you kind of see this. I mean, this is a company this is a firm that saw returns decline 56% last year, but on the upswing this year because the market's on the upswing. So they are definitely participating in this AI surge, and you can see that in the returns through July.
All right, good stuff. Leslie, thank you. That's Leslie Picker. Final trades.
All righty. Hope everyone's having a good day. Chinese stocks getting a boost today. Beijing government reducing taxes on stocks traded 50%, along with telling state-owned banks to buy shares. So only thing I would trade Chinese stocks would be options, so I can limit and know exactly how much I can lose. If the markets turn around and start moving lower, then, you have that exposure if you're trading shares. I wouldn't be trading shares. I'd be trading options and maybe even spreads in that case, So you can take a bullish trade by selling puts and buying the next strike down for, a debit or a credit spread. That's another bullish trade if you're thinking the stock's going to continue higher. Apple's still going. NVIDIA looks like it wants to break above the high. That high right there. That was first trade this morning. We got up to 465. Looks like we're headed in that direction. Most FANG stocks are cooperating. Okay, that looks good. Netflix, what are you doing, Netflix? Netflix, okay, that looks good. NVDA, still going. NVIDIA, high of the day. Trying to get back to the high of the day here. Another what, 50 cents? Dollar, another dollar. Baozun, ABCD pattern, cheap stock. Was looking at that one this morning. Somebody asked me about it. I forget who it was. If you can remind me. Let's see. XPEV. That's trying to go. XPEV. I have January calls. So XPEV. I got the 20 call. Thank you for that article, Brian.
3 o'clock Eastern closing bell. Hope you'll join me then. Liz Young will be with me, Brent Hawkington as well, and Dave Albright. Perfect time to have him as we're about to close a month in which yields were a huge story.
Okay, shorts covering.
So I'll see you in a couple hours' time. Let's do final trades. Amy Raskin, you're up first.
I'm going to go with Goldman. I'm going to try to push Steve on his decision making this morning, but we think the stock's trading like capital markets never come back, and we think they do.
Okay, Farmer Jim.
Yeah, Boeing, last week you had one step back on that 737 fuselage news, but now you got 2 steps forward on the news that they're going to start delivering planes to China again. Here's your entry point.
All right, Weiss, Bob has had a tough month, right?
Yeah, I mean, it's finishing on a strong note as China finally gets the message. They're bleeding out these liquidity measures. I think they will continue to do so, and this is a great entry point. And Amy, thank you. I'm glad you said Goldman because people respond to you since you're much smarter than me.
All right. Thank you, Weiss. Joey.
Minor pullback in Marriott. I still believe it's fine.
Okay. Dow's good for 200, and S&P is about 0.5% higher as you see that.
Oh, by the way, if you check out the watch list, in the watch list, I have a section right underneath the summary. In the middle of the watch list, it's called Targets and Expected Move. We had about a 15% contraction in the expected move for the week. This is based on options. This is not in my opinion. It's based solely on the options, the way they close on Friday, and how market makers and dealers are positioning for the following week. So the numbers that I have there are 1 standard deviation move from the close. So if you think of a bell curve, the close, add 1 standard deviation to the upside, 1 standard deviation to the downside, and that is the expected move for the week. This week, the spiders, we have $6.76 or 6.76 points. That gives you 446 on the upside, 439.97 on the downside. 439.97 on the downside. So we're already performing very well. The Qs, we have $7.84, 1 standard deviation, 371.86 is the upside, 356.18 is the downside. IWM, smaller yet, $3.78 move. 180.22 is the breakout level. That's the downside. 187.78 is the upside. Always look at the expected move. That gives you an idea where you're buying. Are you buying near the high? Are you buying near the mean or the center where we were on Friday? Or are you buying at the low? That gives you a barometer on what to expect during the day, because outside of 1 standard deviation, that's where a lot of dealers and market makers will sell premium on either side, put and call, to help neutralize their position. There's a lot more to it, but the trying to get a profit by trading 2 standard deviations out of the money is a losing bet. That's why a lot of option writers will look for calls just outside of standard deviation 1 or puts. And as we're seeing the markets rally here, you should be fine. Okay, the market's moving higher. The main thing here, the main thing I see as the catalyst is we have oversold conditions, extreme low conditions leading to a follow through, advanced decline percent, giving you the same picture. So if you start trusting your indicators and trading less on your opinion or feelings or what somebody said on Stock Twitch, you're going to do a lot better. Okay, let's see. Let's go to. All right, we know this long term looks good. AAPL bull bear. This is a. All right, NVIDIA is going for +5. NVIDIA is about to break out here. NVIDIA.
You say that Chinese President Xi's motivation has been to reestablish the Communist Party's grip on the economy, and that this trip is unlikely to yield measurable results. So, what's the function of these trips for China's leadership?
All right.
Well, I believe that Xi Jinping saw, this is their point of view, saw that the state, the party, was giving up ground and was being overshadowed by other institutions, foreign companies, Chinese companies, universities, NGOs, consultants. And what he's been doing over the last almost decade is restoring the control, the central control. Now, having said that, in the meantime, the economy has not performed, especially now, whether it be COVID, the property market, the stock market, consumers. And this is a sign, I believe, that they are shifting toward the economy after having achieved quite a bit of control. But look, the outcome of this meeting, just the fact the meeting was held, I think is very good news. That means that both sides are talking again and are willing to move forward. So we also took a number of companies off the unverified list. So there are signs that the relationship will be restored to what it once was some time back. It'll take some time.
Is that even possible? I mean, I feel like we in America tend to view engagement as a positive in and of itself, but over time, when it comes to China in particular, engagement hasn't always meant what we thought. But to go to the economy there for a moment, what impact do you expect China's real estate woes are going to have on the economy there and on the public companies based there, which Dom mentioned are higher today?
Yeah, look, property has been one of the drivers from the very beginning. This is something where the central government was raising a lot of money. So absolutely, property will have an impact. It's already having an impact. I expect it will continue to affect companies in the stock market. I saw what you had up there. That could also be just a sign that the U.S. and China are talking, which is a very good sign. I think we've all been expecting this. We've all been asking for this.
All right, nice follow through. All right, so if you took any kind of index trades, you're probably pretty happy. We're at the highs. NVIDIA +5. NVIDIA +5 now. Okay, this looks really good. Shorts covering initially, and then we get the follow through. It looks like buy programs.
You mentioned presidents, allies, and rivals of the U.S. are starting to weigh the likelihood of a second
Okay.
presidency. How does that affect the way that China is going to deal with us now and the way the Biden administration should deal with China?
Well, I think another Trump president.
That looked like a pretty broad-based buy program that just hit the markets. Top of the hour. Okay, Banter is looking for a trend change at 135. Make a note of it. Okay, we got this is not going to go straight up forever. So take a profits off into strength. Always a good idea.
Does that mean China's going to want to try to do certain things to lock in either agreements
All right, Meta, nice move on Meta.
Should there be a president next who's more likely to want to raise tariffs and rattle the saber?
Well, it could be. You know, in terms of formal agreements, I don't know what can be done between now and year end, but these are not congressional bills. This is not signed into law. So if a future president wants to change this, future president can do that. And that, of course, is part of the issue. The one thing that's remained constant, by the way, is export control. And this is part of will be the tension in the meeting. I don't remember a time when export controls were taken off the list. The list started in 1989, and we just added and added. And I think Secretary Raimondo did a great job up front in saying, look, we're not going to negotiate matters of national security. So export controls are off the table. One of the issues in negotiating with China is that we'll go in with 10 different asks, and they will have one, export controls, which makes negotiation somewhat tricky.
All right. Former Secretary Carlos Gutierrez, thanks for joining us here on the exchange. I do want to mention upswing in the Dow
Okay.
S&P.
Looking for a little reversal of this, some of it anyway. We're at the highs. We've got supply up here most likely.
Secretary Raimondo's visit, she's also making it a point to reiterate there's no room for compromise or negotiation on matters of national security. That includes cybersecurity, where the federal government is now warning of a hidden threat to America's infrastructure.
Nice rally there. Nice trade there. Catwalk.
That's right.
Steven.
American officials are scrambling
Nice
to make
trade.
potential weaknesses in the software used to operate American infrastructure have not been penetrated by Chinese and Russian hostile actors. They're focusing on the threat to so-called open source software, which is developed by hobbyists and others and put in the public domain. Software companies that make infrastructure systems often use large chunks of open source code in their programs. But the fear here is that hackers could be developing this code and then releasing it to the public, which seeds vulnerabilities out there in the open world. On August 10th, the Cybersecurity Infrastructure and Security.
Yeah, exactly. Yeah.
Asked the open source community for ideas
100%.
for the code. The government official tells CNBC that CISA plans to release a draft national strategy for open source security in the months to come. Meanwhile, a new report from the cybersecurity firm highlights the potential threat. Researchers at Fortress Information Security discovered that 90% of the products used to manage America's energy grid contained contributions from developers who said they were from Russia or China. And they say Russian and Chinese open source code is 3 times more likely to have vulnerabilities than code from other regions.
FUTU.
Fortress estimates the cost to replace all that could be a staggering $40 billion. And given those huge costs, not likely that companies are going to pay to replace all of that software or bear all of that cost. But CISA is making it clear that it believes software companies that consume open source software should be able to contribute back to the security of that overall software as well, John.
That's complicated. I know there's a specific move.
All right, NVDA is still pushing. That's going to help. We break out here. I'm looking for NVIDIA to run all the way up to 500 again.
Yeah, that's exactly it. And from the hostile actors' point of view, if you're the hacker trying to seed this stuff into the world, you don't necessarily know where it's going to go. You just kind of write code that does specific tasks, put it out there on these open source platforms, and wait for someone to adopt it, and then later on go and check and see if that vulnerability made it into the final product. So it's sort of a speculative, gamble on the part of hackers to do it this way. But there is concern now that may have happened. And the trick is going through all of that code and finding out which lines of code are secure and which lines might have vulnerabilities. That's going to be an expense, and somebody's going to have to pay for it.
Yeah, sounds like a job for AI, maybe, to the degree that this code is signed. Jabbers, thank you. Let's do some more on this.
Okay, nice job. All right, so take some profits off in the strength.
My next guest says the origin of attack is becoming less important than preventing the attack in the first place. AI might offer the best defense. Joining me now to discuss is Amit Duran, the CEO of cybersecurity company Tenable. Amit, welcome. So machine learning in cybersecurity is not new. What can AI do to solve this problem of perhaps open source code being contributed from questionable sources? I think AI, while it holds a lot of promise, is really a double-edged sword. On the one hand, it's reasonable to expect that adversaries, that hackers, will be using AI to more rapidly identify vulnerabilities, more rapidly develop exploit code to weaponize and take advantage of those vulnerabilities, and conduct very large-scale and highly targeted attacks against American infrastructure, American businesses, and steal.
All right, so it looks good.
The inverse of that is true too. We can use AI, as Tenable has been doing, to identify which pieces of software have vulnerability, how severe those vulnerabilities are, and what can be done to help security teams understand both those vulnerabilities and how to prioritize remediations and activities that can help them reduce risk.
I want to take a step back and talk about Tenable itself. You guys had results about a month ago. Right now, enterprise software seems to be hitting this stabilizing moment after a rough couple of quarters, and you seem to express that in your call as well. Cybersecurity is not immune from the impact of this macro environment. What are you seeing in customer willingness to expand their engagement with you? I know you had some good things to say about Tenable One and that package that you've got, more people adopting that, but where's the tension? Where's the friction?
Yeah, well, first we're seeing very strong demand.
NVIDIA got a ways to go, but it's looking good. NVIDIA.
The SEC recently issued new rulings which require public companies in the U.S. to disclose their cybersecurity risk management practices and also disclose breaches. Now, that's going to cause a lot of executives, a lot of CEOs, a lot of audit and risk committees and boards of directors to ask questions, to pay more attention to cybersecurity. How at risk are we? How secure are we? Are we vulnerable? So broadly speaking, these issues aren't going away. Demand is strong. We also believe that in the current macro, we have the opportunity to provide cost reduction and vendor consolidation. When you move to platform-based security like Tenable offers to our
AMD looking good. Nice job there, Steven. Nice job, AMD. NVIDIA. Yeah, we're looking really good.
And there's news in this space all along, so we need hold on for just a minute. We've got an alert on ChatGPT and OpenAI. Steve Kovac has the story. Steve?
Hey there, John. Yeah, so OpenAI just announcing moments ago a new version of ChatGPT for enterprise. You can kind of think of this, John.
Okay, so we hit the highs of the day. We're at the highs of the day right now.
They can upload their proprietary information without using that information to be viewable by ChatGPT or use the training
All right,
models. You might remember over the last
NVIDIA.
I've heard so many companies talk about how they have banned ChatGPT at the workplace. That includes like Apple and Samsung and Google even from banning their coders from uploading code into this. This is supposed to address that. Now, however, they are not giving a price for this, but for a little context, the consumer version of ChatGPT is about $20 a month. And I would also note Microsoft, which is, of course, OpenAI's major investor, they had a version of this, their own version of this, rather, called Bing for Enterprise.
OpenAI launches ChatGPT Enterprise, the company's biggest announcement since ChatGPT's review. Microsoft.
Having to do with AI. We're expecting to hear more from Salesforce later next month. Expecting to hear from ServiceNow as well. Several others. How long does it take to secure this stuff as new products, new versions? Now we're talking about ChatGPT for Enterprise come out.
Well, we see not only ChatGPT, but we see Google, we see other large software companies using and distributing generative AI technologies. It takes a while for this stuff to be secured. You know, Microsoft has had notorious problems with their cloud security. Recently, there was a large intrusion of government email by the Chinese, stealing very sensitive information based on vulnerability in well-known, well-understood Microsoft software cloud products. So I think it's also reasonable to expect some of these newer products, some of these newer applications will have software and there'll be new attack techniques.
NVIDIA looks like it wants to keep going. Nice.
So I wouldn't consider this highly secure and like we've mastered it. but it is an important part of how enterprises are going to be developing software and intellectual property going forward.
I've got a question about that because imagine a scenario where someone inside the organization has a divided loyalty. And
Yeah, it was a nice little run up there. Nice little run. Do I want to?
Take data out of the enterprise and perhaps passing it along. Now, how does zero trust security work in that situation? Does it understand who a person is, what the queries are, and therefore what data they've acquired? Because it seems to me to be a little bit squishier, more difficult to understand exactly which data points have been accessed when there's AI kind of in between pulling different data points together and delivering an answer.
Yeah, with AI, with a lot of modern AIs, you're seeing this abstraction layer. So users don't necessarily know what data is being assessed, what data is being brought together, how the conclusions of the AI are being drawn. So it does make the job of security practitioners trying to detect and ferret out a malicious insider all the more difficult, all the more complex. And when you use terms like zero trust, I think what we're really talking about is layering in techniques, making sure that your security program doesn't rely on any one mechanism for its survival.
All right, I just sold some 180 calls for February right at the top there. That was good.
It's also what vulnerabilities exist in the environment. And it's the combination of things which can lead to disaster, but also which can provide compensating controls and overlapping layers to minimize damage and risk should you have a malicious insider.
Finally, you mentioned in your latest earnings call that there's been a return to the larger six-figure deals as the area normalizes. What is the particular interest that customers have when they're doing those larger deals? Is it trying to get a bigger package of software value-wise?
Which time frame?
Yeah, I think it's a combination of things. One,
I do this. Yoda. Let me show you what I do here.
where you have exposures and addressing those exposures proactively isn't it nice to have in this environment. As the SEC points out with its rulings, like this is a mandatory requirement. Cyber risk is a critical component of business risk, and you have duty of care to understand it and to manage it.
I usually use the 1 or 2 minute, okay, for identifying potential trend changes.
Help them understand their cyber exposure and risk, and also to help them reduce costs through consolidating vendors and delivering them more and greater insights on this platform opportunity.
All right, lots to understand here. More every day. Amit Yoram, the CEO of Tenable. Thanks for joining us.
Thank you.
Coming up, Fed Chair Powell's speech was front and center for investors on Friday. So what's the next thing that should be on investors' radar? We will get the next potential catalysts for stocks.
Okay, so what I usually do, Yoda. All right, let's say NVDA. I was looking at NVDA a few minutes ago. I went down to the 1 minute time frame, and I agree with you. You got this choppy signal. But what are you seeing? Higher highs, higher lows. We're seeing VWAP up and to the right. And back over here, we started to pull away from VWAP. Okay, so we're talking about VWAP and pulling away from VWAP. So that's what we're seeing. So then I would go to the 5 minute. Okay. I know what your question is. I can feel it coming. But which one do you use for the signal? I use them all. To be clear, I use them all. 15 minute. Okay, so using the 1 minute, I'm looking for the next buy signal. I'm looking for a price to be up and to the right. Then I check the 5, then the 15, and I see where am I on the scale. We got the highs of the morning. We're starting to pull away from VWAP right here at 455. We knew that we need to get above 460. Even if you waited for 460, you were on a buy signal already on the 5 minute, 15 minute. And if you go to the 30 minute, same thing. Okay, you could have waited until the last hour, basically. 448 to 460, you made what? 448 right there. All right, you made $7-8. And the options are very very nice. They did that very well. I'm trading. I have shares, by the way. I sold the Apple 180 February call Why so far out? Because I've been rolling them out. Every time I roll them out, I get a credit. I've so far, I started with September, went to October, November, December, January. This will be the 6th trade. Each time I'm collecting a credit of at least $1.75 to $2. In this case, I got $1.75 this time as well. So in the last 2 trades, I've received a credit of $300 per contract. Since I started doing the Apple after earnings, I've accumulated 175. I have to write this down. I've accumulated approximately $8 in credits, right? And I still own the covered calls. So if I get taken out at 180, this time I make $1,400 per contract. Plus, I can buy the shares back. While I'm waiting for Apple to break out, I want to be selling premium as it's basing. All right, so it's still basing here. Okay, at some point this is going to rip to the upside, in which case I can take the February 180s and I can roll them up maybe to 185 or 190 and go out even further. Let's see where we are. Apple. But I'm looking for price action to be moving higher. Okay.
So what's next for the markets?
I want it to be bullish when I'm selling covered calls. All right, Apple. Let's just go. Okay, Apple has calls all the way out into 2025. So I could just keep doing this, putting it off.
So far, August is proving to be a garden variety 4 or 5% correction. Rates have adjusted higher to account for the strong economic reports we've seen in August, and rate-sensitive sectors like tech and communication services have seen a re-rating of their stock prices this month. But mostly, we're still up strongly for the year, particularly in tech. The bad news is stocks are still very expensive by historic standards, particularly tech. Interest rates seem like they want to push a little bit higher, and China is still weak. But the market is still positioned for that gold.
Yeah, exactly. It's the election lockdown season. They want to lock it down so that it can do the what do you call it? Paper ballots, mail-in ballots. And I'll just leave it like that because I know a lot of you could be on the other side of the aisle. I don't want to anger anyone. I wish I had never found out about politics or really focused on it because it's just creating another level of stress I don't need to deal with. I could never be a politician. Anyway, that's not where we are. We are trading the S&P 500. Yes, we are. We're trading NVDA. We're trading Microsoft. We're trading Apple. Quality names. And we're dilly-dallying a little bit in Chinese options. Okay. Once again, if you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, the 28th, last few trading days of the month. If you're just joining us today, I am trading Chinese stocks, but only with options. Okay, only with options. I have some FUTU from this morning. FUTU, 55 calls. Those are currently green on the day. The FUTU September 55s. Buy some in this area. FUTU. 09. 15. 55 calls.
It doesn't even matter, where the number comes in, 182,000 new jobs, 210,000 new jobs. If those wages continue to climb higher, it is not going to be
Filling an average of 220, 215.
deals that are out there in the market right now in terms of negotiating. United Auto Workers, the airline pilots, United Pacific, all
wages. This is not something that the Fed wants to see at this point because clearly they're going to want to.
Okay, so Banter was looking for a trend change right around 130, 135.
Retail or whether it's business.
So which should investors pay more attention to? The number that we get on Friday where wages are concerned, or what we can see unfolding?
All right, FUTU on the move here, coming out of a squeeze, starting to rip higher.
Asking for some really big numbers, 40% raise it, and perhaps more likely than ever to get them because UPS drivers did so well.
Exactly, and this is a side pressure on the market. The Treasury market is going to be picking up on this. That wages are going higher. We'll probably start to see prices climbing even more. We started to see prices paid components of the ISM manufacturing, the ISM service sector, starting to inch higher. But that is nothing compared with what could happen as the auto workers get higher wages. The car prices are high enough. The new car prices are high enough.
Okay, so you know what the ABCD pattern looks like, okay?
Out of reach for most Americans.
So stop underneath this area.
To be, I think, dangerous for the overall economy. I don't want to sound like Paul Volcker.
Okay, FUTU, ABCD pattern. Looking for D now.
And you know, the Doves and the Hawks are watching this. This is not something they want to see.
So is that effectively, you think, a floor under yields then, and a potential ceiling on equities?
Well, yeah, I mean, if you start to see the yields climb above 4.4, climbing higher, it is
FUTU.
that we're moving into a higher range. We had 70 years of just about 5% on the 10-year. It is the quick move, the quick pace that we're seeing. We went cold turkey from zero negative rates to now rates that we haven't seen in many years. And what that means is that those that took out loans at a lower rate suddenly are facing higher rates so quickly. That's the issue. It is the speed at which this is happening. The calculus is changing. And as we go to that transition in calculus, it's going to cause pain for private equity firms, for commercial real estate, and individuals who've taken out variable loans on a number of products, including their homes.
Yeah, the winds are picking up out there economically for sure. Thank you. For more investment ideas, be sure to tune into a special back to school edition of Mad Money with Jim Cramer. That series starts tonight and continues all week long at 6 p.m. Eastern. Now, coming up, Messi Mania hit the Big Apple this weekend.
Messi Mania.
Apple is betting on him to boost its bottom line. Apple's streaming goal and the ripple effects on the media landscape ahead. The exchange is back after this.
Dum, 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 dum. Ah. Right when I was trying to take a screen cap, somebody post something else. All right, that's good. Pum, 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 pum. All right, NVIDIA still going. NVIDIA +8. NVIDIA's +8. All right, looks good. Hope everyone's having a good day. I see Heart Pumper posting, watching call flow. If you looking for a free way to watch this information, you can use Traditics free. You can use Mikey's posts as well, Gamma channel, and Gamma Open Interest. Have you posted anything in there lately? Let's see. Yeah, this morning. Okay, cool. So there's a lot of ways to follow it. You want to pay attention to Gamma. I posted in the alerts channel. A primer on Gamma. I'll post it again. Post it again.
In response to Maui County's lawsuit, saying its power lines fell in high wind, likely causing the fire. The company added that the power lines had been turned off 6 hours before the second blaze started. Hawaiian Electric faulted firefighters who allegedly declared the fire contained and left the scene, only for the fire to reignite that afternoon. The Department of Transportation fining American Airlines more than $4 million for keeping passengers on board during long ground delays. The department said this is the largest fine issued against an airline since ground delay rules were created a decade ago. John, back to you.
Tyler, thank you. And coming up, Neo, Best Buy, J.M. Smucker on deck with results before the bell. We will get you the numbers and the narratives to know ahead of those reports next. The exchange is back after this.
And now, CNBC Trend Tracker.
All right, NVIDIA is still going. NVIDIA is still going. +9. NVIDIA +9. NVIDIA is still going. +9. All right, so we're looking for a trend change right around this time. So maybe take some profits off NVIDIA. That was a nice move. NVDL also. Excuse me. Excuse me. Excuse me while I kiss the sky. Wow, 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 wow. Purple haze. Miss Jimi Hendrix. You miss Jimi Hendrix? I do. Not everybody's kind of music, but you know. You know. All right, so we're just sitting here consolidating at the highs. Take some profits off here. Look for a little reversal. S&P. Take profits. Take profits. Watching for it. We're about to trigger a sell signal back to VWAP. We're at the top of the range. 442.50, 442.60 would give us a sell signal right here. All right, S&P 500. Okay, we're watching. Okay, so Yoda, here's another example. All right, so I'm looking for sell signals. We're already on one on the 1 minute, but that's a lot. There's a lot of noise there, so I wouldn't sell on that. But that's my first alert, basically. And then I go to the 5 minute. Okay, I know that that's on a sell already, and then the 15 minute. Okay, so I could give this a little bit more room. It's been on a buy, needs to stay above VWAP. This would have to drop below 44.26. That would give me another sell signal. So that'd be the 1 minute, 5 minute, 15 minute. So this is less noisy. So I'm still on a buy, knowing that Banter is looking for a trend change intraday at around 135. We're right there right now. Yep. Okay, stocks are fading a little bit now. All right, the bears might say, "Ha ha ha, bulls, you just got caught." No, not really, because we bought near the lows and selling near the highs, not the other way around. We're not buying at the highs, getting excited, looking for a breakout. We're looking for supply overhead to impart a little selling up here, and that's what we're seeing for now. If they didn't show up and sell and we just broke out above the highs like we did with NVIDIA, then we'd have a pretty good follow-through signal. NVIDIA didn't stop. NVIDIA went right through this 480 level that we were looking at on the 5-minute chart. So here's NVIDIA. We were looking at the 5-minute. We were looking for a trigger for a buy signal right along this level here at 480. I'm sorry, 460. I'm looking at one thing and saying another. Right along 460, we're looking for the break higher. We had a buy signal, pushed away from VWAP. VWAP turned up and to the right. We went from 460 to 468. That's +8. Actually +9 if you got it just below the breakout level. And doing really well. NVIDIA is still looking good. Just a reminder, I have to leave here briefly. I'll be back. I have to leave here at 2:15 to go pick up my son. Be back here in like 45 minutes. I'll take lunch, go pick him up, and come right back for the close, the power hour. I'll be doing that at 2:15.
Technically, it has support at the 20-moving average just down at 10. But I think if it gets back above its 50-moving average at 1135, it could go back to where it was a year ago at 16, 17, 18. That's 50% higher. So I think a lot of the bad news is priced in NEO. And I think if you want exposure, and we really had a hard time measuring. Any asset manager, money manager out there has had a very difficult time measuring the reboot out of China and the zero COVID ramifications. This is why it's priced in. That's why it's down 45% over the last year, and that's why I want to be a buyer here from a trade perspective. But also, John, from a longer-term exposure to the Chinese EV market. Okay, well, from electric vehicles.
All right, so it looks like NVIDIA doesn't want to stop. So that's a good sign. Looking for Microsoft with news about ChatGPT. Apple, looking for those to push higher. I rolled out my Apple calls for a net credit of $1.75. Second time in the past 3 trading sessions, I did that at the highs. $1,400 per contract. I think it's $1,440. $1,400 per contract. At some point, I'll have to roll those calls up because I don't want to give my Apple away, even if I did. And price actually pulls back, I'll go ahead and sell those calls that I sold for $1,400. I'll buy them back, maybe for $1,000 in profits on the next dip, if Apple does make a dip at all. Lots of ways to trade this. NVIDIA still pushing higher. Corey's trading NVDL. You could trade calls too, not now, but earlier when we started seeing a buy signal. Okay, so Vantair is looking for 55 now. Okay. All right, thanks, Vantair. Noted. Wants to ping 55. Okay. So it'd be 20 handles. More than 20 handles from here. That'd be good. Okay, trying to get back above the zero line on the NYMO. I don't know if we'll do it today. But all of the cycles have turned. Locking in profits, good idea, Stephen. Good job. Good job. Spreads. Nice spread. Okay, SPY. What's Tesla doing? Tesla, nice bounce on Tesla. Back to VWAP, got rejected.
U.S., but also internationally. More on that next.
All right. Hope everyone's having a good day. A little bit more action than I thought we were going to have today. Usually Mondays are kind of slow. We started off slow, we dipped, and then we got some buy signals on all the FANG stocks. Then it looks like right around 1 o'clock we had, or 12:30, we got a buy program. Okay, those tend to happen near the half of the hour or the top of the hour. So 12:30, 12, 12:31, 1:32, thereabouts. Not always, but we look for them. You trade long enough, you start to learn a lot of techniques that other experienced traders over the years, Danny Riley in particular, look for. Once you see the confirmation, you take the trade. If it doesn't work, you stop. It's that simple. Okay, right now we're not doing anything, just sitting here. Taking profits off is a wise thing to do. FUTU, no follow through on that D pivot. FUTU. Okay, looking for that to gap up tomorrow. Maybe some more news overnight. Amazon looking for a higher low. Splunk higher, Splunk. Okay, I'm going to take Splunk off. I bought that on Friday and I got moved against me. So I'm going to take that off, Splunk, at the highs. Okay. Let's take a look at Splunk. SPLK, Splunk. It's had a nice run. Oops. Sorry about that. This had a nice run. Splunk, SPLK, a little pop. What was it, Thursday? Dipped. Now we're moving higher. We go to SPLK. SPLK. Okay. So we gapped up on Thursday, dipped a little bit, and followed through on Friday. Now we're continuing higher. You might say, why don't you just hold on to it and see how far it goes? I will, but I'll buy it on the next dip. I wound up buying it on Thursday, and it faded. And then it gapped down, not gapped down, but it pushed lower on Friday and then started to rise. So I got back to zero. I got back to a profit, but I need a better entry. I do like it though. Moving forward, Splunk, Vornado, I like that one. Okay, all of these are following through. Vornado.
And last week, as you mentioned before the break, they voted overwhelmingly to authorize their leadership to call for a strike if there's no negotiation or an agreement on a contract by midnight on the 14th. What does that mean for production in Mexico?
JLL.
Well, keep in mind that Mexico plants 4G installations under UAW.
By the way, when I go get my son, I'll be monitoring the chat room in the on the YouTube channel and on Slack. Audio, I won't be looking at my phone. So, in case you're worried about me. All right, BFS is turning up. VFS, B pivot. BFS just printed B.
Out of Mexico, and the bottom line is that whether it's something like the Ram 1500 pickup truck, Chevy Silverado, the Ford Bronco, these vehicles would not be flowing from Mexico here to the United States. And ultimately, most believe within a matter of 5 or 6 days, you would see Mexico production grind to a halt. And again, it depends on if there is a strike and where is the strike at.
Is it across the entire automaker, or is it only at key plants? Take a look at shares of GM, Ford, and Stellantis.
I have some GM puts, by the way. GM, I have puts. I think I have the 30 put 2 weeks from now. All right, they keep talking this kind of rhetoric. GM, I expect to pull back a little bit more. GM.
I think that most people are looking at we're probably going to see a strike of some sort.
These are asks that would have seemed unthinkable a decade ago, and I just wonder, should a strike happen? You're saying the likelihood is that a strike will happen. How big are the economic ripple effects of a potential strike here? We're talking suppliers, we're talking community impacts that are different from what we would see with a UPS.
Sure. Well, yeah, especially in the upper Midwest. That's where you can see the biggest impact. You can only immediately look at the big three. And
Oh, man, I have water going down the wrong way. I'll take a break here. I'll be right back.
beyond the auto industry,
Yeah, it seems particularly for this industry. Phil LeBeau on the case as always. We appreciate it. Still ahead, Inter Miami, not the only entity winning thanks to Lionel Messi. Why Apple could be another beneficiary of Messi Mania is next.
Will.com.
Welcome back. It's been a little more than a month since Lionel Messi signed with Major League Soccer team Inter Miami. And while he is boosting the sport's profile here in the U.S., Messi could also mean big bucks for Apple's streaming service, which announced a 10-year deal with Major League Soccer back in February. Joining me now is Evercore's Mark Mahaney, who says streamers will become increasingly more competitive for sports rights, along with our Steve Kovac and Julia Borston. Julia, how could Apple's leverage with Messi help its popularity?
Well, John, Apple is already benefiting from what we're calling the Lionel Messi effect. After Messi joined Inter Miami mid-July, that month, web and mobile traffic to Apple TV Plus surged 45% globally and 87% in the US. That's according to new data we just got from SimilarWeb. Now, so far in August through Saturday, traffic is up 53% from a year earlier. And within a month of Messi joining the team, its owner tweeted out that subscribers to Apple's MLS season pass have more than doubled. It's worth noting that Messi is an ambassador for the league and also for the subscription service. His deal with Inter Miami includes a share of MLS season pass revenue. John.
Interesting. Mark Mahaney, what does this mean for where the money for the streamers looks like it's going to go, especially given that we've got a strike from actors and writers, and Lionel Messi himself is like a hit show?
Well, streaming platforms are going after live sports rights. That's very clear. This is Apple's, I think, first major exclusive live sports deal. They're joining the club. They're joining Amazon and Google YouTube, which have been aggressively bidding for sports rights now for a couple of years. The one company that's not in there is Netflix. I think Netflix is going to hit this through shows like Quarterback, Drive to Survive, kind of through the 30 for 30 shows. That's ESPN, but that kind of show rather than live sports. But yeah, given the writer's strike, which is a real issue for all streaming companies, maybe there's a small relative advantage for Netflix, but it's just small. Overall, it's a negative development that they can't get this resolved. It does make people who've got live sports, they're going to be more attractive to audiences through the balance of the year when there's probably going to be a deficit of new content.
Okay, back below VWAP.
There's a real issue here.
Steve Kovac, this is an interesting feather in Apple's cap, given that the Apple TV strategy for them has been spend
Low
less.
tick alert minus 800.
Set of things. They were doing that before it became popular, to just spend less.
That's right. They're trying to be like what HBO used to be back in the day under Richard Butler, just this high quality, Oscar bait, Emmy bait content. But when I think of sports, John, I also think of Vision Pro. Now that's further out, of course, before this actually becomes a thing. But when I got a demo of that back in June when they first announced it, one of the demo reels they showed me was an NBA game and an MLB game. The MLB game, I was sitting right there on third base. It looked like the ball was coming right at me. The NBA game behind the basket. So you can imagine where they're thinking about this. We heard from Charlie Silver of the NBA talk about how they're already thinking about adding this kind of stuff or NBA content to the Vision Pro. So it's more than just like, let's get more.
S&P still on a sell signal for now.
Could be a huge thing for this next computing platform that they're trying to make happen next year.
Julia, Amazon said to be talking to Disney about ESPN, and the discipline on spending, I think, is a question. Apple seems to have kind of struck gold here, or maybe struck oil, right, with Messi. You couldn't see it beneath the surface until it sort of happened. Do you think this makes a deal like ESPN, Amazon more likely to happen, or less, just because it's going to be so expensive relative to what Apple's managed to spend?
Well, I think the question here is whether Apple might be interested in talking to ESPN as well. Of course, we have to remember that Apple and Disney ESPN have had these long-standing relationships. Obviously, Bob Iger used to be very close with Steve Jobs, and those relationships go back a long way. I do have to point out that Wedbush issued a note saying, given the success of MLS, they believe that ESPN would be a good strategic fit for Apple. So we'll have to see what comes there. But I would be surprised if Disney, ESPN are not talking to all the potential platform partners here that are interested in sports. One thing is for sure, John, live sports are valuable. They've found success with this. Apple's going to be watching very closely to see if the people who sign up for Lionel Messi end up sticking around to watch their other shows and whether they become long-term subscribers to the platform or whether this is more of a short-term blip. And I think that's going to be the key thing that may really influence how much more they want to invest in sports.
Mark, Apple has a lot of money, but they don't necessarily like to spend it. Are they going to force others to spend the money in this situation?
I don't know if they will, but I think there's maybe the broad mega point here is that you've got more bidders now for live sports. So the live sports ticket, I think, and I'm not an expert in it, but with three bigger bidders, that is three
Low
companies
tick
with
alert
massive
-800.
cash piles and highly profitable businesses. That's Google, that's Amazon, and it's now Apple. It's got to be great for the people who have the sports rights. And I think those tickets will go up in part because streaming does allow a broader audience. Just the ability to watch these shows. I know they have to be real time, but on any device and globally, it's just easier to stream it globally. So I've been feeling that's really the big win here. It's people who own the sports rights holders. They have more bidders for their content from very large platforms. Good for them, and it just means competitive dynamics are going to be rising. Probably content costs are going to be rising for the Apples, Googles, and Amazons, but they can afford it.
Mark Mahaney, Steve Kodak, Julia Borston, thanks so much. That's going to do it for the exchange. Power Lunch starts after this quick break.
Hey, Carmen, how you doing?
Good day, everyone, and welcome to Power Lunch. I'm Tyler Matheson. Contessa Brewer joining me today. Coming up, Commerce Secretary Raimondo visits China as the country's real estate market takes another hit. Big company in trouble over there. Third trip by a cabinet member to China this summer. Is anything actually getting accomplished? We'll explore that. Plus, a hedge fund defending itself from what it calls misinformation attacks by a disgruntled employee. We'll dig into allegations, but also look at what might be an even bigger problem, and that would be, Contessa, its recent performance.
Tyler, let's get a check on the markets right now, and we're looking at green across the board. Dow Industrials up 1/3%. You've got the S&P 500 up 1/4%, and the Nasdaq Composite up 51 points, or 0.3%. Okay, 3M, a big contributor to the Dow's gains after reaching a settlement on litigation related to earplugs. We have more on that coming up, and you can see 3M shares up 5%. Amgen, another Dow stock in the news. The FTC is suspending its challenge of Amgen's deal to buy Horizon Therapeutics. That will give the agency time to review concessions Amgen made to help the deal go through. It's off by 1/3%, and Horizon Therapeutics up 5.5%, Tyler.
Contessa, the big story we're following today is Commerce Secretary Gina Raimondo's visit to China beginning today. Secretary of State Blinken went in June, Secretary of Treasury Yellen in July. So let's bring in Eunice Yoon now, live from Beijing. Eunice, is this parade of U.S. cabinet members to China having any concrete results, or is it just a sign, maybe a positive sign, that the two sides are at least continuing or maybe even beginning to talk?
Tyler, I think it depends on your definition of concrete. For the first day of her meetings here in China, the Commerce Secretary had said that the overwhelming message that she has been receiving from the American business community is that there needs to be more channels of communication between the U.S. and China. So she said that after 4 hours of discussion with her Chinese counterpart, she was ready to announce different ways in which the U.S. and China would engage. So one was a commercial issues working group. A second is an export control enforcement information exchange, which would be more of a dialogue. She said this is going to be the first held Tuesday in Beijing. Technical discussions on protecting IP and trade secrets, and then an agreement to meet at the secretary and ministerial level at least once a year. Now, since she's arrived, her message has largely been that the U.S. and China could continue to have a very strong trading relationship despite the tensions and despite her department's export controls. Before she arrived, she had also made a point to reporters that the export controls really only impact, from their assessment, about 1% of trade between the U.S. and China. She also told her counterpart that $700 billion of trade and stable ties are profoundly important, in her words. At the same time, she said to reporters today that several sticky issues did come up in those discussions. For example, the ban on some sales from Micron, a scrap merger with Intel and Chinese export curbs on 2 key metals for the chip industry. Now, the Chinese Commerce Minister had said that China was ready to work to foster, he said, a more favorable policy environment. It's still unclear, though, as to how much leeway and compromise both sides are willing to give on some of the core policies that have really been a point of a contention between the two countries. The Chinese state media has been saying and complaining that the Chinese concern is very, very serious about the American export curbs imposing on investment into Chinese advanced technology. And also what was, I thought, interesting about Raimondo's discussions with the Commerce Minister, that is matters of national security.
All right. Looks like a bear flag until it's not. So we're still on a sell signal.
Thank you very much, Eunice. Let's talk a little bit about
Short time frames, 1 minute, 5 minutes, still on a sell. The 3 a.m. candle that Carmen mentioned is down there near 40, what's that, 44.15 or so?
And this is after about a 17-month hiatus of the stock price because the company hasn't been filing its financial results. It did file its first half financial results, and they weren't very pretty. Better than the year prior, but still a loss of $4.5 billion.
3 a.m.
There. The company also
Okay, 44, somewhere around 44.20 futures, 44.20.
They said just a couple hours before I decided that they're going to postpone it by a month. The company argues that it does allow the creditors to assess and evaluate the situation much more accurately, but because it was pulled so last minute, it really rattled as it stands as it is.
All right, thank you so much, Eunice Yoon, reporting in the middle of the night in Beijing for us. We appreciate it. Once again. Our next guest says he's not expecting major breakthroughs to occur on Secretary Raimondo's trip. It says it could be more important to the Chinese than Secretary Vinny.
Well, looks like a bear flag. Looks like we'll drop again. What's your target on futures, Anter? 44.10. Futures 44.10. 44.15ish. We're still on a cycle down. 60 minutes still on a downward cycle, a bearish cycle on the 60 minute at the moment. Tick cumulative have been rising all morning from Friday. Tick cumulative went green on Friday.
Where do you think, Dennis, they could find common ground?
Contessa, I think the Chinese have very little leverage at this point.
Okay, 1 minute's trying to go on a buy.
They cannot, I think the last thing that Eunice said a minute ago.
2 minute.
The commerce
Looks like a bear flag. Big drop, bear flag, drop again.
controls as they apply to national security. And so that is really the most important thing that I think has come out here. The Chinese economy, as was pointed out a minute ago with Evergrande and the rest, has very serious economic problems. And so at the end of the day, the Chinese have got to give something up to the U.S. because I don't think the U.S. is in a position to really offer them anything.
So let's talk about what Secretary Raimondo, as reported by Eunice, just said, and that is that, hey, let's not lose track of the fact that the export controls affect or touch really only about 1% of U.S.-China trade. But it's an important 1%. Are we, I guess my question is, are we keeping those export controls in the proper perspective vis-a-vis their size in the trade relationship?
Two things. I think in the past we didn't take very seriously the importance of export controls, and so a lot of the problems we have in the microchip industry.
VWAP is at 44.27. We got this sideways range.
Those limitations on export controls are not.
So we're starting off the week. Testing the high, testing the low, doji.
That's a step in the direction that China wants.
Our economy may only be 1% related.
Spinning top on the S&P.
The thing that the U.S. has decided to do under Biden is to be more aggressive, Contessa, in making technology the leading edge of America's economy. And I think that's why it's not a 1% issue, it's much larger. And the Chinese, as you know, have cut off people like Micron who were selling chips to them and replaced them with Chinese suppliers. So I really don't see a very good way forward at this point.
Let's talk about the Chinese economy more generally. As you assess it right now on a scale of 1 to 10, with 10 being very troubled and 1 being sort of not troubled at all, where would you put the Chinese economy right now?
I'd give it an 8.5.
So you see it as deeply, and these are structural flaws, or are they circumstantial flaws, or a little of each?
Well, Tyler, a third of their economy is based upon real estate. And you mentioned a few minutes ago, Evergrande, they lost $83 billion in 2 years between 2021 and 2022. They've only lost $4 billion this year, but that is a third of their economy. If they don't get their economy working from the real estate standpoint, there's nothing else they can do to really buffer it up.
No, I was saying you only lost $4 billion compared with 5 billion. It's like saying I only threw 4 interceptions in this game. Last week I threw 6. I mean, it's relatively. I guess it's a relative mark of progress, but not a particularly encouraging one.
You know what's interesting? In addition to the high-level cabinet secretaries we've seen visiting China, we've also seen American CEOs making this trek to China and trying to work on the relationship because they've got business in stake. And some of the companies that I cover closely rely on their revenues from China. Let me just ask, do you think when you're looking at the outlook and the tension that exists between these two nations, do you think that investors should be wary of where their money goes if it's being put in to work in China?
Contessa, I think you follow Tesla. 40% of what goes into the Tesla electric automobiles is from China. So yes, if somebody's not already concerned about the percentage of the China involvement, they should be. So I think if I'm an investor looking at China today, I'm going to be very wary.
All right, Dennis, thanks very much. As always, good to see you, sir.
Thank you.
Dennis Unkovic.
Coming up, 3M helping to lead the Dow higher, even though it's agreeing to pay a $5.5 billion settlement. We'll get the latest on that. And a check on the bond market today. The 10-year yield falling to just a little more than 4.2 today, coming off those 16-year highs. Up next, we'll hear from someone who says yields, stock prices can rise together. Power lunch. We'll be right
All right, looking for S&P bear flag to continue lower. Okay, shoot, I got to leave here. All right, so keep an eye on downside and keep an eye on what Van Ter is saying in the trading room. I'll be back in about 40 minutes. I have to go pick up my son from school. I'll be monitoring the stream for any kind of wild action. Not expecting a whole lot. Expecting a little bit more downside potentially. All right, so I'll be right back. Give me a few minutes. Let's see, S&P. Okay, let me zoom out a little bit so I can see this. If we okay, so we got support and resistance levels noted. I shall return.
Welcome back, everybody. 3M reaching a settlement in a long-running litigation involving earplugs for the military. Seema Modi joins us now with the details. Hi, Seema.
This mass tort in U.S. history involving 300,000 plaintiffs who alleged 3M's earplugs were defective and led to hearing loss. 3M's board meeting today to discuss a settlement which reports suggest amounts to $5.5 billion. Wall Street had estimated between $5 to $20 billion. It follows a separate $10.3 billion settlement involving water utilities that sued 3M for contaminating public water drinking systems with toxic chemicals known as PFAS, which have been linked to health risks. Final approval is still pending, as well as lawsuits revolving around personal injuries. As to how 3M will fund these settlements, well, the company's on track to spin off its healthcare division by the end of this year, and JP Morgan is betting 3M will receive about $7 to $9 billion from this transaction. Following the spinoff, analysts at UBS, expect 3M to lower its dividend, which currently pays a nice yield of 6.1%. Leadership, guys, is also in focus. Last week, 3M's current chief financial officer, Manish Patawala, added president to his title, and RBC writes that this arguably positions him as the heir apparent to CEO Mike Roman, who has been at the helm since July 2018, so roughly 5 years, and during that time, we've seen 3M shares fall about 50%. Tyler and Contessa?
You know, Seema, are they talking at all about whether insurance will kick in and pay for part of the settlement?
You know, not yet, Contessa, but it's a great point. I think longer term understanding how insurance could be one vehicle it uses will certainly come up in discussion. Right now, it's looking towards that spinoff, first finalizing the settlement, then looking at the spinoff of healthcare, and again, the dividend being very much in focus as well.
Only asking because then I'll need to follow up with the insurance.
The insurance
companies, of
store,
course.
yeah.
SEMA, thank you for that. 3M helping to lead the Dow higher today, but the Dow and the major averages are in the last few days of a down month. One big reason, fears of rising interest rates. Traders now pricing in nearly a 20% chance the Fed will hike rates again in September, and concerns the Fed could keep them higher for longer. Well, even though the 10-year yield is near 16-year highs, our next guest says rates are not too high. He says rallies can and have happened along with higher interest rates. Let's bring in Peter Anderson, Chief Investment Officer of Anderson Capital Management, ranked among the top performing managers of U.S. growth equity for the second quarter of this year, returning, I'm looking now, 46%. So that's notable, Peter. It sounds to me when I'm reading through your thesis on a lot of this that you must be watching CNBC's coverage and reading through the financial press a lot and just yelling back at the talking heads.
Well, thanks for the candor. I have always marched to a different drum, the beat of a different drum, and this past year has been no different. I am on record for saying there was not going to be a recession, and I still am in that camp. Also, rising interest rates, I have been pounding the table for that. I know all the theoretical textbooks tell you about the simple dividend discount model. As rates rise, stock prices decline, but it's an oversimplification. So it's a more complex problem to look at. And this time I was lucky and happened to call it the right direction for the past several years, actually.
I mean, you say luck. Other people in your shoes would be very quick to claim credit. If you're a voice crying in the wilderness, then how do you see positioning your investments for the second half of this year, Peter?
Well, to continue crying in that wilderness, I'm singing the same song, actually. I haven't made many changes to the portfolio. Some of the disappointments, it's just incredible, I would say, this past month. With NVDA, I was heartbroken that after it reported such strong, insanely good results, I went to bed that night thinking the next day was going to be one of the happiest days of my career in terms of investing, because I have a large position in NVIDIA, and as we all know, it just kind of flopped. And the market is filled with illogical reactions like that. Even Palo Alto, remember that 2 weeks ago? These things have been driving people crazy. And I think it's just emblematic of how frightened we are about the interest rate hikes and where poor Powell is and how he's trying to navigate that and saying a lot of words but not saying too much. So this is all something that you have to take in stride, and going through the rest of this year, I don't presently think I'm going to make any changes in the portfolio.
Did you just add super micro comp?
I have recently added that, yes, over the past 2 quarters, and that has been it's also very related to NVIDIA. A lot of investors are not realizing that, and it has been off the radar screen. But as NVIDIA goes, so does super microcomputer. So that's been a bit of a disappointment too for this past month. But I have conviction that AI. Oh, here's the other thing. So what people said was, when NVIDIA didn't pop the next day, they were quick to make the conclusion that AI is over. It just was a flash in the pan, and I couldn't disagree more. I mean, AI is just beginning, and it's our urge to have these immediate ramifications of news reflected in stock. And I think you just have to take a breather sometime and say, look, we don't get it right all the time, but over the long term, I think we should be optimistic.
A lot of people, I take your point that some people were saying AI is over. There's another group who are saying that maybe NVIDIA has had its best, most sprightly days. Remember that on the prior 2 earnings announcements, it gapped up something like 25, 28% each time. This time that did not happen. What does that tell you from a technical standpoint? I know that's not your necessarily your discipline, but what does that tell you about the stock's performance going forward? Can you expect it to do what it's been doing, or is this a time where it's going to be a little more flattish?
I tend to think that we are in the first inning of artificial intelligence. We might not have it right, Tyler, in terms of the actual eventual solution to discovering how human thought can be replicated by machine. But until we solve that problem, the only game in town is throwing more computational power at this. And I think we're just beginning to see, even with NVIDIA's incredible numbers now, I think it will be actually more incredible as we go forward, because there is no other solution. And more companies are realizing that at every level, they can improve their operations. Now, certainly with manufacturing, it goes a little bit more subtle in terms of how AI can work. But in terms of service, I think we're just at the beginning. So I would expect continued strong numbers with NVIDIA.
So you run, as I recall, a pretty concentrated portfolio, maybe 20 some stocks. Am I remembering correctly?
Well, that's way too much for me. Actually, about 14 or 15 stocks.
14 or 15 stocks. So what percentage of your total portfolio is represented by NVIDIA now? And at what point would you say that's too much?
Yes. Actually, I let these stocks run unless there's new factual information. I usually start with a 5% position and then let the stock run. So believe it or not, NVIDIA became 20% of the portfolio. And even somebody as highly convicted as myself in that name realized that that's just way too much risk on one name. So I reduced it to about 10%. But that's unusual for me to reduce just because of weight risk. Normally I just sell. I either hold the position or sell. But with that situation, it was so unusual that I do feel like I had to be a little bit more
really interesting insight, Peter, about how you think and how you work, and that you're willing to let those stocks run. And in this case, you were so convicted, or convinced that we don't want to talk. I say convicted in associated with Peter Anderson. So convinced in the stock's long-term prospects that you would stick with it.
That's correct. Yes, absolutely. And I do have a physics background, a background that I never thought actually would be utilized in investing. But here we are now talking about artificial intelligence and mathematical modeling of drug discovery with a company like Schrodinger's, which is another holding in the portfolio. So all these things that I had thought I would forget are actually coming back to annoy me in a way, but it's actually favorable now in this environment.
All right, Peter. Yeah, you never know where your training is going to come in helpful. Peter Anderson, is always good to see you. Thank you. All right, all week long, Mad Money will get you ready for back to school with a special series dedicated to Jim's rules of investing and his most important market lessons. Professor Kramer has the perfect syllabus for investors of all levels. It kicks off tonight at 6 p.m. Eastern Time. Don't miss it. Back to school series all this week on Mad Money. We'll be right back. Welcome back, everybody, to Power Lunch. Shares of Hawaiian Electric rebounding today. Dom Chu has the details for us. Dom, this is a complicated story.
It's very complicated and nuanced right now, but in many ways it's also the opposite because of the actions that have been taken so far. So what we're seeing right now is this surge that Tyler mentioned. It's up just around 42% right now. At the highs of the session, it was up around 52 to 53% shortly after the opening bell. So this is the electric utility at the center of the controversy surrounding the tragic and deadly Maui wildfires. Well, it's fighting back against the lawsuit being brought against it by the Maui County government. That suit alleges the utility company is responsible for the deadliest wildfire in America in over a century. Now, Hawaii Electric said that while power lines had been down by high winds and likely caused a brush fire near Lahaina earlier in the day, which was later fully contained by firefighters, power to those lines in the area had then been turned off and were off for hours when a second fire broke out later on that afternoon. The cause of the fire is still under investigation by local, state, and federal authorities. Hawaiian Electric has now told federal authorities that it has records that demonstrate no electricity was flowing through the power lines when that second fire broke out. And the company's CEO, Shelly Kimura, said in a statement that they believe the Maui County complaint is factually and legally irresponsible. Now, we should point out, as you're seeing here, that despite that massive rally that we're seeing today, the shares have lost around 2/3 of their value in the last month on that souring investor sentiment around its potential future liabilities tied to those wildfires. But this is a very interesting development in what's now a legal situation between Maui County and Hawaii Electric.
And there obviously there have been precedents where utility companies, Pacific Gas, PG&E,
yes, absolutely,
were found liable for fires.
But one of the differences there is that they were blamed for having faulty equipment and for not going in and maintaining and upgrading the equipment when and where they should have. In this case, they're really saying you should have known that the winds were so high that it posed a threat. And the utility in Hawaii saying, wait a minute, but if we didn't keep the electric on, then the water pumps don't run and you can't fight, which was a problem.
Well, it wasn't just that, too. It was also that first of all, the investigation, we should point out, is still ongoing.
Yes.
The idea right now is that there was a fire that was contained fully by the firefighters and everyone else. They had basically established that it had been extinguished.
And that fire was not the one, says the firefighters, that led to the main fire that destroyed so many homes.
When that second fire started to flare up and happen, the crews at Hawaii Electric had told authorities that this fire was going. And at that point, Hawaii Electric says that they had already shut down power to all the lines in the area, and that they have proof or documentation that no power was flowing through to those lines. So was it really their responsibility, or was it really the cause of the fire? That's still being determined by a number of regulators right now. And by the way, on the federal side, the Bureau of Alcohol, Tobacco, and Firearms is now involved as part of this investigation process. They have electrical engineers that are working to establish what the chain of events was and what actually caused the fire. But again, this is an interesting move in the stock only because it is a massive move higher, but it's nowhere near where it was before these wildfires broke out. So there's a tremendous amount of stress being brought on this company. And we already know what the ratings agencies have said about what the potential stress could be on their balance sheets in the future. So this is a scenario where we are talking about a tragic event and the deadliest wildfire in about 100 years plus in America. But now, because of the moves that have happened so far, there is now a scenario developing where the company is blaming the county because the county had already proactively blamed the company for what happened there.
We will be continuing to watch the fallout from this for months.
And hundreds of souls still unaccounted for.
Unaccounted for, absolutely.
All right, Dom, thank you very much.
Let's get to Julia Borstein now for the CNBC News Update. Julia?
Contessa, President Biden won't spend the anniversary of the 9/11 terror attacks in New York, Virginia, or Pennsylvania. Instead, the White House says he will observe at the anniversary at the military base in Alaska with service members and their families. It marks the first time a president has not attended any of the observances. He will make the stop in Alaska after a visit to Vietnam following the G20 summit in India. Spanish prosecutors opened an investigation into the country's soccer chief for kissing a player on the lips shortly after the women's team won the World Cup. She has said the kiss was not consensual. Meanwhile, the soccer chief's mother started a hunger strike to protest what she calls his inhumane treatment. The official results are in. Sony's Gran Turismo unseated Barbie at the box office, bringing in just over $17 million to Barbie's $15 million. However, Gran Turismo did include earnings from Thursday night pre-shows and other preview screenings, which helped it capture the top spot. Contessa, back
And
up to you.
Barbie at some point has got to give up the #1 spot. You know what I'm saying, Julia? Thank you.
Yeah, it's lasted for a while.
I had on Power Lunch, trading places. OpenAI says it needs more office space. Uber reportedly is looking to unload some of its own square footage. Could this be a real estate match made in tech heaven? We'll bring you those details when we return. Stay with Power Lunch.
Era.org.
Time for today's tech check and a little bit of intrigue in the San Francisco commercial real estate market. Who's looking for more space and who's leasing it to them? Deirdre Bosa has more on this. Hi, Deirdre. It sounds like a realtor's matchmaker paradise. It could be. Very much could be. Well, a source familiar with negotiations, Contessa, tells me that AI darling OpenAI is in talks to sublease nearly 3,000 square feet of space in the city from Uber, who has been quietly marketing one of 4 new buildings that is making up its Mission Bay campus, not far from where I am right now in the heart of the financial district. Now, this is intriguing for a few different reasons. One, it would represent a major expansion from OpenAI's current headquarters, really underpinning the enormous growth and funding that ChatGPT has seen this year. Two, it feeds into this idea of an AI boom rescuing San Francisco from its so-called doom loop of record vacancy rates, crime, and homelessness. OpenAI is, of course, the buzziest generative AI company out there, but There are others here that are scooping up commercial real estate in the city, like Scale AI, with a more than $7 billion valuation, whose headquarters I visited a few weeks ago in downtown San Francisco. Now, third, there's this idea that ChatGPT would be taking the space from Uber, and perhaps that says something about changing sentiment in tech at large. Now, years ago, when Uber was planning this huge new campus, the gig economy was humming, and it was seen as one of the most attractive places for investors to find growth. Over the last few years, so profitability has become the priority, and you've seen layoffs and reduced office space, leading to Uber putting up one of its buildings for sublease. Generative AI, meanwhile, has really taken up the mantle of growth and disruption, and certainly investor dollars. So, guys, it needs the space now to accommodate that. Mission Bay, it's close to where the Warriors play, too. So, bonus for employees. They could go
That
catch
would
a
be
game
nice.
pretty easily.
Yeah, slip out and go to the ball game and see the best player in pro basketball, Steph Curry. Hey, let me ask you this. You said it was 3,000 square feet. I mean, that would be just really a cottage in Nashville.
300. Thank you.
Oh, 300. That's
Did I say 3,000?
That's several cottages in Nashville.
Clarification.
Because I think it said
$1 million.
Maybe I
think I
misheard
might
it.
have.
So it is a big piece of property.
That's
We're not talking
cottages.
about.
It's a whole building.
I'm looking at 3,000 square feet. Contessa's apartment is bigger than that. Yeah.
Here's the question, though. What does it say about the? I mean, you sort of set this up with. There's so much vacancy in San Francisco. Where the neighborhood that it's going into? Yeah. Does it do anything for the most problem-ridden parts of San Francisco? It's a good question. No, it's not. It's not the Tenderloin, but we've been talking about this whole idea of Cerebral Valley, which is centered around this neighborhood. Kate Rogers actually lives. It's called Hayes Valley, and you've seen a lot of AI companies move in there, and you've seen it become an attractive place, but there's just not enough space there. So this is interesting. OpenAI currently, it's in the Mission, which, it's close to some of the most problematic parts of the city. Moving over to Mission Bay would be kind of interesting because, again, it's where sort of you've seen big companies like Uber build new campuses. It's really come from nowhere, from the ground up. So it's moving away from sort of the areas that have the worst reputation. But again, it's just kind of adding fuel. There's other AI companies that are looking for space in the Mission, in Hayes Valley, where you see some of the homelessness and crime really take root. So again, if you talk to the people that are optimistic, they say this is just the start. If generative AI is going to be as big as everyone thinks it is, and companies are building here in San Francisco, which certainly there's evidence of, then this could just be the beginning.
All right, Deirdre, thank you very much. And 300,000 is a lot more than 3,000. Appreciate it.
Sure is.
Still ahead, damage control. The investment firm Tiger Global claiming it is the victim of misinformation attacks, saying a disgruntled former employee is to blame for a series of unflattering reports about its business. We'll get the latest details when Power Lunch returns. Welcome back to Power Lunch. The investment firm Tiger Global says it's been targeted by a series of misinformation attacks and that it's likely coming from someone with a specific agenda. Leslie Picker joins us now with the details. Hi, Leslie.
Hey, Tyler. This is a pretty wild story here. According to Tiger Global, this all stems from a disgruntled former employee. It's been going on for months behind the scenes. A source sent me a 9-page, single-spaced, anonymously written document that alleges to be a draft for the New Yorker. It's not. Supposedly, a predecessor of this PDF had been circling the rumor mill for months, and this version caught fire in the hedge fund community, which has been sharing it virally. The piece essentially alleges everything from internal strife within Tiger to limited partner rebellion to regulatory issues, among other things. Tiger calls all of this, quote, a pack of lies in a letter to its investors, which was obtained by CNBC and confirmed by the firm, who declined to comment beyond the contents of that correspondence. Tiger says it's been, quote, engaged with experts to assist in responding to these malicious attacks. The letter goes on to tell LPs, quote, unlike the anonymous cowards spreading this false narrative on the internet, you know who we are, and we are here and ready to answer your questions. Now, in terms of performance, it's worth noting that the firm has actually rebounded from a very tough 2022 after last year's losses of about 56% in its public portfolio. A person familiar with the matter tells me that Tiger's portfolio is up about 20% through July. The firm's biggest public positions, according to its 13F, are Meta, Microsoft, and Apollo, each of which is up more than 30% year to date. The firm is essentially a microcosm of being levered to tech and growth, therefore it's susceptible to swings of monetary policy. That was the case last year with higher rates, and then AI hype this year has helped driven it to the upside, guys.
Leslie, is there any indication it's done any damage to Tiger, this anonymous correspondence letter?
There's no indication at this point in time. AUM is down relative to where they started the year in 2022, but in talking to sources, that's largely due to performance, that they haven't actually seen as much in the way of withdrawals. Now, that said, this is a very reputation-oriented business. So, when it comes to investing in certain startups, when it comes to generating fundraising, which they had a first close for their venture fund, but it's only the first close. So theoretically, they'll be out in the market fundraising for more on the venture side of things. It possibly could come up in these conversations. So it was important that they really send a letter out to their LPs and have that, more kind of putting their foot down that this is all lies, according to the firm, and not to make too much of it.
All right, Leslie, thank you very much. We appreciate it. And be sure to join us for the Delivering Alpha Summit on September 28th in New York City, just a month away. Visit cnbcevents.com/now, Delivering Alpha. And if you can't wait that long to hear from some of the biggest names in investing, scan the QR code on your screen. We're going to leave it up there for just a few seconds. I'm going to talk slowly here. And sign up for Leslie's Delivering Alpha newsletter. This week, she has a rare interview with Sixth Street's Alan Waxman. You can also sign up at cnbc.com/Delivering Alpha newsletter.
3M is one of the best performers on both the Dow and the S&P today. Higher on reports, it's ready to settle the earplug lawsuits. We'll trade that and other movers of the day in 3-Stock Lunch. Power Lunch. We'll be right back.
I'll try. All right, time for today's three-stock lunch. First up on the menu, now we've talked about it earlier today, 3M up about 5% on news it is tentatively agreed to pay $5.5 billion to resolve lawsuits regarding earplugs in the military. Let's get the trade on that and other names in the news. Our trader today is Danielle Shea, Simpler Trading VP of Options. Danielle, what do you think of 3M?
So when you're looking at 3M, Tyler, this one has been in a downtrend since September of 21. And when you look at it on the longer term charts, you have that 200 symbol that's a pretty strong area of resistance, and that's going to come in right around 110. So, yes, it's up today. It's looking pretty strong. The news is positive. But when you're looking at this overhead resistance, you have to keep in mind that 110 is a pretty strict line in the sand. So, I think that you could trade it on a short-term basis up into that zone, but I would rather short it from there because of the longer-term downtrend. I will say above 115, that's where I'm wrong, and that's where we have a trend reversal in play.
Daniel, up next we have pharma giant Amgen. The FTC says it will pause its challenge of Amgen's takeover bid of Horizon Therapeutics, a deal worth nearly $28 billion. And the pause will give the agency until September 18th to weigh a settlement case. What we're seeing right now is that Amgen is lower by 1/3%, but we saw Horizon up on the day. What would you do with Amgen?
So when you look at Amgen, I like the longer term uptrend in this stock. They've done relatively well with earnings, and this quarter in particular, they had this nice breakaway gap post earnings. Now, when we have a breakaway gap like that, I typically trade it to the upside for about a week and a half. Now, this one has traded higher for 9 days before it started pulling back. So I think it's pretty typical what it's doing here. And when you have that post earnings pullback, you generally want to wait for a nice support zone. So I think that looking at about 247 is a great area of support to start buying this along with the uptrend. But I will tell you that if that breaks, your next level is going to be 238. So I think you buy this one along with the trend. It's just a function of where it holds when this pullback ends.
All right, let's move on to CrowdStrike, down about 3% today. Downgrade from Morgan Stanley ahead of its earnings, saying consensus estimates for a rebound seem high in light of a more difficult demand environment. Pick that one apart for us, Danielle.
So when you look at CrowdStrike, this space has had a really challenging time over the last year and a half. I do like the stock on a long-term basis. I think that they have done really well on earnings, especially recently, even though the technicals aren't as favorable. Now, with today and the pullback, it's just barely clinging on to a critical zone of support right around 144. So, 142, 144, it's got to hold there. And if it doesn't, it's going to flush down into 131. So I would like to buy more of this. I do own the stock. I think, obviously the lower, the better, as long as it's holding critical support. So I would say it's good for additional buys between 131 and here, but just be cautious because we have earnings coming up and we have a market maker expected move of about $11. So I think it's pretty possible that it could fall down into that 131 zone, especially with the earnings report upcoming.
All right, Danielle, thank you very much. Appreciate it as always. Danielle Shea.
Thank you.
Coming up, the SALT shortfall, the deduction tax cap that was supposed to generate revenue, actually is costing the government billions. We'll discuss that and much more when Powerline returns.
Rental.
We've got 3 minutes and 5 seconds left in the program. A bunch more stories you need to know about, so let's get right to it. The so-called SALT cap is back in the spotlight as a new study says that loopholes have cost the government billions of dollars. SALT meaning state and local taxes and the deductions that used to apply to them. Robert Frank joins us with more. Hi, Robert.
Hey, Tyler. Well, that's right. The $10,000 cap on state and local tax deductions, that is known as the SALT cap, was supposed to raise around $100 billion a year in tax revenue. But a new study out this morning from the Tax Policy Center found that loopholes are costing the government about $20 billion a year in lost revenue. So it's only raising about 80% of its total projection. The reason is that 36 states allow owners of pass-through companies and partnerships to avoid the cap on their state taxes. That means the pass-through where the firm pays an elective tax, gets the full deduction, passes that deduction on to the owner. As a result, the wealthiest business owners are avoiding this cap while wage earners and property owners are footing the bill. What else is new, right? Well, this all comes to a head after Congress, after the election, when the cap and all the provisions of the 2017 tax cuts for individuals are set to expire. The question here is, do they close the loophole and keep the cap? Let it expire. Either way, this is not raising as much as they expected.
Is the tactic sometimes described to as payments in lieu of taxes? Is that what we're talking about here?
It's called a pass-through entity, but basically you're right. That entity pays a voluntary tax, an extra tax that it wouldn't otherwise owe, and the states have allowed that to then be passed through to the owner. But that's exactly right.
And deductible in one way or another. Okay, Robert, thanks very much. Appreciate it.
Well, from taxes to insurance, the Wall Street Journal highlighting how an increasing number of homeowners decided to forego home insurance altogether, instead gambling that the likelihood of a disaster isn't high enough to justify the cost of a policy. What we're seeing is, in a survey that was done by Munich Re and the Insurance Information Institute, that 12% of homeowners say, no thanks. Half of them, their household income is less than $40,000. So they may own the home outright since they don't have a mortgage, but they can't afford to pay the insurance on it and instead just keep their fingers crossed.
And if the house was destroyed in a flood or a hurricane or something like that, they would just walk away from it.
That's exactly right. It's shocking, but given where we are with the insurance industry and everybody is seeing their policies go up, it is problematic.
All right, movie theaters are going to try just about anything to get people to watch a movie. Now, a small chain in Britain is letting people bring their dogs to the theater. The first movie they're offering this for is Strays, live-action comedy with the dogs voiced by Jamie Foxx, another canine, and Will Ferrell, among others. And we should note it is distributed by Universal Pictures. Folks, that's going to do it for this part, and Universal Pictures was part of the concept. That's going to do it for Power Lunch. Thanks for watching. Closing Bell starts right now.
All right, Ty, thanks so much. Welcome to Closing Bell. I'm Scott Wander, live from Post 9 here at the New York Stock Exchange. This make-or-break hour begins with the hunt for momentum. Whether this market can wrestle it back from the bears in the weeks ahead. Stocks are rallying as the final stretch to August gets going. There's your scorecard with 60 minutes to go in regulation. Green across the board. Dow looking for rare back-to-back gains. So far, so good. 3M, the big winner there, along with a nice bounce for Goldman. And even Nike, which recently ended its historic losing streak. The drop in yields helping stocks broadly today. The industrials, tech, and comm services, the three best sectors. And speaking of, NASDAQ pretty strong too, as names like Apple, Microsoft, and NVIDIA all see gains. Well, there's Microsoft, it's tipped negative, but the other two are still green. We'll keep our eye there. It does take us to our talk to the tape, what a seasonably saggy September might hold for your money. Let's ask Liz Young, SoFi's head of investment strategy, here live with us at Post 9. Welcome, it's good to see you.
Good to be here.
So it's not like August.
Really
August's been rocky. It hasn't been horrible. But what does it mean as we close this month and the next couple of days that we move on?
Well, I mean, we talked about this ahead of the show, really low volume. This is pretty normal for this time of year, kind of boring. The one thing that low volume does present the opportunity for, though, is that if there's a surprise or a bad data point or some sort of shock, it's that things move much more quickly in either direction, particularly on the downside. And there is a lot of data coming in this week. We've got some GDP data, we've got PCE, we've got jobs coming. So there's still a lot going on, despite the fact that we're closing out summer, getting into what usually is a pretty trepidatious period for the market in September and October.
It is, but as Bespoke points out today, when you have a year like you had up until
September, not so much. I mean, it's sort of overhyped how bad the fall can be. They say it's not typically a weak month when the S&P is already up double-digit percentage points year to date through the end of August. So maybe if things fall in the right way, and you hit on one thing, and that's the data, right? The data's got to cooperate. Yields have to cooperate. The data's got to be good, but not too good on the economy, right? Earnings estimates can't get revised lower. I'm going down this checklist I made for what has to happen for September not to be bad, for it to go right. And then you need tech to perform, don't you?
You do, but I think what's happened since July, I mean, July was such a strong month. Coming into August, I think most people expected that there would be some give back. Even the bulls, even the tech bulls expected that there would be some give back. So a lot of this decline that we've seen since the end of July has been pretty orderly. That's not a bad thing. I think it's healthy for the market. I don't know that there's going to be a lot of earnings revisions or things that go on in that camp looking out through the end of the year into 2024. This week, I would expect earnings revisions to come in September, maybe, if they're going to come at all.
No, that's what I'm thinking in September. For September to go right, I mean, you can't have earnings revisions lower. You can't have yields continue to go up.
That's right.
You can't have inflation data coming on the wrong side of what the narrative has been. And maybe some would say you can't have good economic data because that is now bad. Good is bad again, or not.
I think good is bad from the Fed's perspective, but now we've all just sort of accepted the idea, and Jerome Powell reiterated this in Jackson Hole last week, accepted the idea that rates were going to be higher for longer, that they are not done fighting this. I think the PCE data is going to be really important because he reiterated that as well. We talk about CPI all the time. We're going to get PCE data. He's acknowledged that it's been good for a couple months, but a couple months does not a victory make, and they're still going to continue on this path. Still a 65% chance of a hike in November. So we might see another pause through September. Then you got a built-in pause in October. In November, if they hike again, personally, I don't think they need to, but if they hike again, that could be a part where you get to the market gets to the point where it says, now we really cannot sustain these valuations anymore. And one or two of those lines has to move to get back into jive with what it's supposed to do from a relationship standpoint.
I mean, you gave a list of things to our producers and said that none of them suggest there's any positive signals about the near to medium term. Do you really feel that way? I mean, we're down. What's the S&P down in a month? 3%?
3 or 4%.
Maybe the Nasdaq's down 5%. So tech stocks have obviously had a bit more of a rough month than the others. Here's your major averages through August. The Dow's down not even 3%. S&P 3.5%. You really feel like there's no positive signals about the near to medium term?
I think a lot of the signals that we rest on right now that are positive are still backward looking. I acknowledge that the momentum in inflation has been cooling. That is positive. The fact that consumer confidence is rising, also positive.
That's not backward looking.
But it's very coincident, right? Consumers answer that survey based on the idea, okay, the market is up, inflation is down, I still have a job. So I don't think that it's really that much of a surprise that confidence and sentiment has risen after a really strong July, after we passed the peak in inflation year over year and we had some of these lower readings and we're nearing 3%, 2%, we're hoping for a 2 handle. All of that is good. Those are good signs. The parts that, from a market perspective, still bother me and still worry me as far as signals go. I talk about the yield curve so often. I know I'm even sick of talking about the yield curve, but the fact that this inversion continues to be here and has actually gotten deeper again, at some point it does have to right itself.
I mean, you say
that usually is a problem.
You can't get positive on the equity market until the yield curve is no longer inverted. Is that what you're saying?
Somewhat, yes, because as the yield curve re-steepens, we have to even out borrowing costs. We have to even out the constriction of capital that's happened in the economy. The re-steepening that happened recently was actually a bearish re-steepening. So that doesn't make me positive on equities either. If a re-steepening happens because the short end of the curve comes down, it's likely because the Fed finally says, okay, you know what? We're done with hikes. We probably have to cut sooner rather than later. Hopefully that happens not for a bad reason. Hopefully that happens because they can just normalize rates.
Sure.
I'm not optimistic that they'll be able to wait that long to just normalize everything without something breaking in the meantime.
But I mean, we know they're getting towards the end. Does it really make a difference if there's 1 or 2 more hikes?
I don't think so. I don't think it makes a difference. I think it's all about messaging right now. And if Jerome Powell feels like he needs to continue to send the message that that he might hike again in order to not let financial conditions loosen too much, then he'll keep sending that message. I don't think it makes much of a difference whatsoever. I think the damage, or at least the hiking that's been done, is really it, right? We went as far as we could, as fast as we could. The idea is to constrict capital and constrict demand. It just hasn't happened in its entirety yet, and I still think there's more to come.
All right, let's bring in CNBC contributor Bryn Talkington now of Requisite Capital Management, also here at Post 9. It's good to see you. You heard the case that Liz made. Do you agree with it or disagree?
Well, y'all made a few cases. Let's start with the
Well, she's
recession.
definitely cautious.
Yeah.
I mean, there's no question about that.
Yeah. Let's start with the yield curve inversion, because that was the last comment.
All right, we're back. All right, a lot of stocks are moving. Looks good. All right, so I'll leave it a little bit earlier next time. 205 should get me back here before 3. Okay, so hope everyone's having a good evening. We had a nice little bounce, a buy signal on the S&P 500. Okay, looking good.
We are late stage economic cycle, right? And I think Jay Powell thought that as well, right? When he says, as is often the case, we are navigating by the stars under cloudy skies. I just had to laugh because that's like the opposite of Greenspan speak, which you couldn't understand any word he was saying. He was so human about it. Like, this is so hard, and we are on such uncharted waters.
Carvana pushing higher.
I agree with Liz about being defensive. The way we're playing it is, we're long equities. We do like energy, which is not defensive, by the way. That's very, very cyclical. But we also own a lot of covered calls, which clearly in the first half of the year, when you have the NASDAQ and the S&P going straight up, you're getting consistently called out of those names and not capturing the full upside. But as I heard Jay Powell last week, I just still am staunchly ultimately, I do think we're late cycle. Because at the end of the day, the question I ask myself, do rates matter? Do rates matter? And that there's no way in my mind you can have 13 years of zero rates. We're a creditor economy, whether it's at fiscal level or at the consumer level.
Semiconductors back above VWAP. SOXL is back above VWAP. S&P continuation.
We're going to reaccelerate and have this new burst of growth, just because I do think there's going to ultimately need to be a resetting of rates, because most people still in general have very, very low yields on their credit, whether it's a consumer or at the corporate level.
What if we're, Liz, not as late cycle as Bryn and others think, in fact, that we are? That if, inflation continues to come down, growth is still pretty reasonable. I mean, you look at the Atlanta Fed GDP now. Yeah. Now, I granted, that's not a definitive read of anything, but it sure as heck is better than a terrible read. Mm-hmm. And it at least suggests that the economy's growing far better, even still, than most had expected it would.
All right, so
It could be, or it could be that this part of the late cycle is just lasting a really
tomorrow we got Best Buy. Thank you, Stephen. Best Buy and Big Lots.
So it could be that this
Scotiabank.
Longer, and there's a whole laundry list of reasons why that is, stimulus and all the things that we talk about ad nauseum.
Box, HP, Hewlett Packard, Umbrella.
Or it's the early part of the late cycle. Who knows where exactly? At some point, we do have to transition back to
Dell on Thursday. What's Dell doing? I haven't looked at Dell in a while. Dell. Not a bad start to the week. I mean, it's a spinning top. We're trying to get back to the top of the range. Ooh, look at Dell. Dell reports on Thursday. Look at the trend.
But there needs to be some kind of resetting that brings all of this back into balance.
What's the most important thing, Brent, for whether September is this historically bad month or if it's not as bad as some people expect it to be? Does it boil down to just simply what yields do, first and foremost?
I do. I think it's the long end, because when the yield, just basic yield formula, is when that long end is going higher, it's telling you the economy is improving. Okay, that's the typical base case. The economy is improving. So I don't know about that Atlanta GDP number. I think everyone's scratching their head on that. But so I think that if yields, the 2-year and the 10-year, especially the 10-year, continue to go higher, that's what really everything's priced off of. I think you're really going to challenge. I think tech specifically, especially like smaller mid-cap tech specifically, will be challenged. And I think going into, especially September, no one's talking about this budget impasse that I promise we will be talking about in the next few weeks. I think September and October will, as they have been historically, will be the bulls will be in hibernation over the next couple of months, just because of not only seasonality, but
All right.
also the budget.
Looking good.
I think great news happening with the Fed's not going to be cutting rates unless something happens. And that's not good news either.
What if the better economy than expected is already in rates? That's why rates have gone up 50 to 60 basis points since the beginning of earnings season.
Right.
Yeah, it's already in there.
Right.
So why should we assume that if the Fed's closer to the end, which I think we believe that it is, that rates are just going to continue to go up
Yeah.
here?
Well, they may not. I mean, so technically, the 2 and the 10-year, that 5 and that 4 1/4 are like very strong ceilings, and they've been bouncing around it. And so I think you'd have to have an economic fundamental like thrush to get them to move over that, and that to become now support. And so I'm not in the camp that they will move above it. But you asked what's the most important thing. I definitely think yields come up there. You really don't have any like massive
All right.
data. To me, the JOLTS is gonna. I know what the JOLTS is gonna say. It's like there's still.
All right. So S&P.
They're less plentiful. I don't think we're gonna get these big surprises.
Oh, okay.
So I just think that going back to those yields, and that we're just gonna have to muddle.
S&P. The highs of the day right over here at about 43.38 on the S&P, not the futures. S&P.
Positive return. Get steam again.
Can we discuss tech and the importance that it has? After I said Nasdaq's down 5% or whatever the exact number is at this point.
It's about a 9-handle difference. About a 9-handle difference. The S&P futures above cash. Cash is 44.26. ES is at 44.35. 9 points. Futures 9 points above S&P cash at the moment.
Tech is clearly very important to this market. I think it's even more important to investor sentiment.
Oh boy. So for those of you down in Florida, I hope the best for you. Hurricane Idalia. Yeah, Dell looked pretty good. Nice trend. Ollie's has earnings on Thursday as well. Ollie's up and to the right. Ollie's. NVDA back. NVIDIA back to the highs of the day. Nice. The highs right there is about 469.60, 469.60. And a lower high.
Well, and single stock analysis is different than broad market analysis, but coming into that earnings report, NVIDIA was 70% above its 200-day moving average, right? Something like that. If the S&P was 70% above its 200-day moving average, people would be screaming that it was way overvalued, right? So you have to think about that just from what are you willing to pay for something. I think the pause is probably warranted in big tech, but I also think that there's a pullback warranted in order to get valuations back to a more reasonable level, especially in the stocks that are being driven by this big AI craze. I think I've said this before on this program, we're not going to get gratification that AI has changed the world in the next 6 to 12 months. So those valuations that are placed on
NVIDIA might, by the virtue of the kind of business and the guidance that they've given, they may actually realize it a lot earlier than we thought.
Well, but then they'd have to come out as the definitive winner in that space. And I don't think that we're going to be there yet. We're not sure how this is all going to play out over the next 2 years.
The definitive winners.
Right now.
Probably say that.
Right now.
One
yes.
of. They may not be
Sure.
the, but
sure.
they're going to be at the top of the list.
Maybe. I mean, look back to the dot-com bubble, right? The ones that we maybe thought were winners 2 or 3 years later, maybe they weren't. So if it's a winner today, perhaps, but I don't think we're going to have a definitive answer of this is the one, this is the company that did it right and pulled ahead.
Looking for a higher low. S&P looking for a higher low.
Listen, there's an AI craze. NVIDIA is the definitive winner. Let's just be clear there, okay? Their year-over-year revenues were up 101%. Their expenses were only up 10%. What does that tell you? They can charge whatever they want. The use cases for all of the H100, devices they're selling is the big question. and how these other companies will be able to monetize that is the big question mark. But as this craze is happening, definitively, NVIDIA will monetize it until we all find out. And so I just think by the time we find out, the AMDs and the other companies, I just think they're too far behind all of this forward buying that everyone around the world is doing.
And look at the forward PE of NVIDIA, which is below 36 now.
Right.
So people have looked at that. They've looked at the incredible decline in the stock, and it's always, oh, it's so expensive, it's so expensive, it's so expensive. The PE has actually been coming down over the last 2 quarters worth of earnings periods after they reported earnings and after they gave.
Yeah, PE used to be about what, 65, something like that. It's down to 35. Forward PE. Interesting.
Incredible visibility into 2024. He's not just like, that's just real. Those are orders that are coming. And so I think that NVIDIA continues to be, I think for investors who are wanting to play the AI space, that to me is like the
Alphabet has, Google has 23 forward PE. Wow. Microsoft 30.
To me, NVIDIA still is like the best way to play. But I agree with Liz, is an unknown application of those H100 chips in the future.
By the way, all of those PEs have come in since, Apple was what, 33. Now you see where it is now. It's under 29. I mean, so you have had a bit of a reset, not a full reset, obviously, relative to the multiple expansion you got in those names to get you where you were. But it's a little bit.
Speaking of multiple expansion, let's go take a look at that. See what the millennials and others are doing.
Let's get to our question of the day. We want to know, will the S&P 500 rise or fall in September? Head to @CNBC Closing Bell on X to vote. The results later on in the hour. In the meantime, a check on some top stocks to watch as we head into the close. Christina Partsinevelos is here with that. Christina.
Well, let's start with shares of Horizon Therapeutics. They're jumping about 5% right now after the Federal Trade Commission said it would pause its challenge to Amgen's.
Okay, so growth value looks okay. What do I want to look at? I wanted to look at equal weight. Okay. All right, so by tomorrow we should have a good sense of what the cycle is going to tell us. All right, multiple expansion. Okay, so we're just talking about multiple expansion. You can see to start January how multiples had contracted. I'm looking at the green as it drops below the red line. It gets dark green, like spruce green. That dip right there represents multiple expansion PE. All right, so it pulls back and then we start moving higher, but we're nowhere near a peak compared to what we saw during the boomers years. And you had 6 peaks into 2009 and 2 more. This will be the 3rd. So we're working on number 9. Working on a number 9 multiple expansion. So we could see multiples expand a lot more. Let's look at the S&P from that perspective. Where are we? Earnings. Okay. S&P. Okay, so the red line is overvalued. That's a PE of 20. Blue is fair value. That's down there at 26, 27. When we started the year, the Mike Wilson over at Morgan Stanley said we're going to revisit 2,800. Okay. We got down to 3,600 and reversed. Continue to move higher. The point I'm trying to make is if you look at the red line and you look at the black line, there's a lot of times where we've been overvalued in these uptrends. Back in 1997 through 2000, overvalued, then we finally turned. In 2007, we were just between overvalued and fair valued. Then we dropped off during the financial crisis. Then we started rallying again. And back in 2015-16, after that dip, we were overvalued all during the Trump years. And we pulled back in 2020 and then into 2021 for Biden, right? We've been overvalued. Market's moving higher. We're still overvalued. And it could go either way. So I'm watching the trends right now. NIMO, NAMO. Okay, so I didn't review NIMO this morning with you. I think I did in the weekend video. Okay, so we hit the extremes Thursday 2 weeks ago. And whenever we hit these extremes in the past, in September, October, and March, we hit down below -80 at the close, hitting extremes -108, reversing. We're looking for this black line to start turning. It's starting to turn. And looking for NYSE in the lower panel to start to turn. Once we see that, we can be pretty aggressive into the meat of the move. We're still in the beginning stages. We could drop again, like over here. Okay. Back over here, that was March. We did a little double pump, and then we took off to the upside. So I'm looking for the green candles to start, get a full-on turn, NYSE to turn, and then we can be aggressive with our trades for maybe a few weeks. At least that's what I'm planning on doing if it turns out. That's still left to be seen. All right, so the monthly NYSE. I reviewed this chart with you not too long ago. This is the monthly chart, and the black line is a summation or NYSE on the monthly time frame. You can see it's making higher highs and higher lows, like it did back over here, 2009, and it rallied. What else happened in 2009 as we pull back? 2009, we had back in 2009, we had AAPL bull bear. Okay, hit the extremes in 2009. What's it doing now? Same thing, ripping higher. So the more cycles that you can produce in your favor, the better your odds are. Right now, let's see. Just had a thought there. Fang. How's Fang doing? Okay, so we got rejected. We got a doji. So this could go either way. It could go higher or go lower. We got a doji. No one's winning. On the New York Fang Index, 236. All right, that's okay. Need to see RSI above 50. UUP, the dollar. The dollar is down there at 104.05, 104. Dollar. All right, so it's fading a little bit. Okay, that's good. And junk bonds. We want to make sure we have junk bonds moving higher. Okay, so junk bonds are clearing Wednesday's high. See that, junk bonds? So if we follow through tomorrow, that's going to be a bullish signal. People who trade junk bonds and high yield corporate debt are risk averse. So if there's any hint or any thought that the market's going to pull back, they'll start selling. You saw that last week on Thursday when we hit the 50-day on the S&P. So S&P 500, OG. All right, so tomorrow's going to be a good one. Do we retest the 50-day again? Volume pickup. MACD's turning. All right, the momentum is shifting in favor of the bulls. Bears are losing control after 3 weeks down, 4 weeks down. Bears are losing control. Momentum is shifting. Stochastics, that'll turn back up tomorrow if we get price action to continue and MACD turns. RSI will be moving higher. All right, so it looks pretty good for tomorrow. As long as we don't have anything crazy happen overnight. Looks okay. Bitcoin just pulled back. I don't know what's going on there. Bitcoin's no follow through. What's IBB doing? IBB, biotechs, flat, range bound. IWM, 180 is support. 182, 180. Okay, got rejected at the highs. So small cap energy, small cap energy. Okay. Small cap information technology, looking for a follow through. All right. Okay. All right, we got 32 minutes to go. 32 minutes to go. Let's see if we can get a rally here. A rally into the close. Higher low printing. We're hugging VWAP now. NVDA just off the highs of the session. Looking for gap ups tomorrow. Looking for gaps higher tomorrow. If you're swinging some of your positions, I'm looking for gap ups. In particular, I'm watching the Chinese stocks. I'd like to see them all gap up. Maybe get some good news. XPEV, XPing, that is near the highs of the session right here. XPing. KWeb, looking for that to follow through. Kohl's had a nice run today. Retail is doing well. Retail's doing well. There's Kohl's. Note VWAP up and to the right. KSS, Kohl's. VWAP up and to the right. Looking really good. Let's see what the daily looks like. Daily. All right, daily, nice reversal. Looking like it could get up to 27 and change. This is a 30-minute. Let's take a look at the daily. Daily, 27 and change. Yeah, that's what I would think, 27.
Well, I'm not sure how much this is going to mean for Tesla because that's basically a deal that is structured for the Chinese market. But when you talk about Tesla, the shares were moving earlier in the day, Scott, in part because of a note from Canaccord looking at full self-driving technology and how far along Tesla is and optimism that, well, look, as they continue to develop this, especially as they focus on AI neural nets, the potential is going to be substantial. There is a buy rating, by the way, by Canaccord on shares of Tesla. Earlier in the session, the stocks moved a little bit higher. Today, in the last hour or so, they've given a little bit of that back. Not a whole lot of movement in shares of Tesla. Whether it was the XPeng news or whether or not you look at other news out of China, the fact that we'll get the NIO quarterly results tomorrow morning, a number of the foreign EV stocks were moving higher today. As you take a look at shares, we're going to show you also Rivian and Fisker. VinFast, keep in mind, Scott, VinFast has a very thin float. This is going to be a very volatile stock. We saw it drop by double digits after its SPAC IPO last week. Now it's up by 19%. Take that one with a major grain of salt. Do not count on that one continuing either higher or lower. It is all over the place. And remember, it's a very, very thin float on that stock.
Sure, but I think the implication from the way we came into you in this story is that, you know, Tesla's made no secret that they want a greater share of the Chinese market too, and that's why they've been cutting prices there like everywhere else.
Yes, but so has XPeng, so has NIO, so have all the Chinese automakers.
Well, you got a price
and the
war.
interesting thing here,
Right,
Scott,
you got
is
a
that
price
they
war.
all talked about. Yeah, absolutely. And that does not seem to be ending anytime soon, despite earlier in the year, Tesla and a number of the other automakers signing an agreement that there would not be major moves in pricing. The market is what the market is. And as long as that pricing continues to be challenged by others in that market, and there's scores of them, we're not even talking about smaller EV makers in that market. As long as that happens, Tesla and XPeng and NIO and the others will have to respond.
Yeah, good stuff, Phil. Appreciate it very much. That's Phil LeBeau. Requisites. We're talking to she's back with us because she owns Tesla. Thinking this story. I mean, it is arguably the most competitive EV market in the world. Tesla wants a bigger piece of it, and Musk, you know what? He doesn't care about profitability so much as he does growth.
Well, first of all, the DD story, this should be a cautionary tale for U.S. investors to steer clear of these Chinese stocks because in 2021, DD was at 18. It's at 3, right? It's a terrible investment. So that's number one. Number two is that I think that you are very right. This is a price war. But why this war? I think we'll have. In 2022,
Trying to push back up to the higher low, looking for a higher high. The last few minutes.
U.S. market, we all talk about Ford, GM, and Tesla. It doesn't really, I mean, it matters because Tesla's an American company. You really have to put your footprint and sell volume in China.
You know what China's share of the EV market is?
Tesla trying to get back to flat. Tesla. Okay, this morning Tesla was up there at 244 and change. We're $6 off of that level. All right, so that's okay. Let's see what the rest of the FANG stocks look. I'm, looking forward to tomorrow. Apple, okay. I told you I rolled out some calls to the 14 strike, or excuse me, the February 180, and sold those for $14.40 per contract, or $1,440 per contract. That gave me a net $1.75 credit. That's the second time in a row, $1.75 credit. $3 already. Plus another $3 over some other trades. So about $6 in total cost basis credit, 6 points, or $600 per 100 shares. So that's helping out. Okay, now we're starting to rally. Let's see if we can get an end of day. Okay, end of day run. Looks like it's in the cards. All right, so if they paint this green, they being institutions, do they paint this? We got blocks, but not like I was anticipating. Very few blocks today. I have to say, IWM's got a lot of blocks at the bid. 184, 184, 185, 185. Okay, largest trade today looks like a SPY, 455,000 shares, but no million share blocks. So it's okay. All right, so 455,000 shares of SPY traded earlier at 439.97. And we rallied on that into the lunch hour. Okay, so S&P 500. I'm looking forward to tomorrow. I'm thinking that we might see some continuation cycle-wise with the money flow that we've been seeing in advanced decline percent, NIMO, S&P equal weight index, etc. New highs, new lows. Let's go see what we look like right now. New highs, new lows. New highs, new lows. Okay, 59.50. All right, so new highs, new lows. Let's look at the 60-minute. New highs, new lows. Okay, so all of last couple of weeks, we've been trending lower. Now we're turning the corner, trending higher. So you don't top in one day and you don't bottom in one day. So we're looking for multiple days of upside potentially. You got the NYSE elder sticks are green and blue, not red, making higher lows, higher highs. All right, so let's go on the daily. New highs minus new lows. We got a nice green stick here. The summation line is turning, and we've got 90 stocks net. So you take all the new highs on the New York Stock Exchange, you'll subtract all the new lows, and you come up with a result of 90 plus, 219%. So that's a positive, and obviously, and another reason to believe that we could follow through tomorrow. So if you're thinking about swinging some options or shares, I'm thinking the same thing. Looking for a gap up in the morning. We can take profits first 15 minutes, reassess the markets after 9:45, and then look for another day, maybe a follow through and a trend day on VWAP instead of this back and forth nonsense. Got to consolidate every once in a while. I call it nonsense, but flat VWAP, highs, lows. Van Ter talking about taking out the stops at the highs, taking out the stops at the lows. That's pretty much what they've been doing. I think I'm going to make Caesar salad for the kids with grilled chicken. Yeah, that's a good idea. I haven't had a Caesar salad in a while. Big one. Okay, VIX is trying to make a new low and bouncing. Sorry. 10-year is down at 4.2%. It's about 30 basis points lower. We've got the dollar. Looks like it's making lower highs. The lows right around 104 found support. So we'll see what happens into the close. Okay. They're not going to make it back up to the high. All right, they're just killing premium here. Okay, killing premium. Provided we don't like sell off or rip higher. Well, sell off mostly. Provided we don't sell off in the last 15, 20 minutes and close at the low of the day. Feeling pretty good about a follow-through day tomorrow. Let's take a quick look at how the watch list did today. Today's watch list for the week. Okay, let's rank these by performance. FUTU, number 1. FUTU. Okay, nice follow through. FUTU. Okay, so here's what I'm thinking. FUTU. All right, FUTU has got bullish follow through. You got the Chinese government reducing taxes. That's not going to be a one-day thing. One-day thing, I don't believe. And you got banks buying shares. You got RSI rising. So that's telling you right there, RSI is saying, okay, while we can see, a little dip and run higher lows, higher highs, RSI generally is telling you the strength of this particular trend these last 3 days is pretty strong. Volume says a lot. MACD is about to cross. There are people that just take a trade when you get a MACD cross. So they're probably setting up, if they haven't taken FUTU already, these traders that like a MACD cross for a signal are most likely ready. You got stochastics rising. That's another plus. So you got 1, 2, 3, 4, 5 bullish signals. Price above the 921 day, 9 crossing up through the 21 day, RSI rising, volume present, MACD about to cross, and stochastics rising. So you got 5 good signals there. Apple's about to go here. Apple looking pretty good. Okay, Apple. Look at the buyers. Look at the buyers today. Low of the day, all the way back up to the high of the day. That's awesome. That is awesome, Apple. Okay, VWAP starting to turn up and to the right with 17 minutes to go. 17 minutes to go. I'm your host, Cousin Vinny, coming to you from closingprint.com. We're looking for a run into the closing bell. 1543 on the East Coast, 343. Monday, the 28th, the last couple of trading days of the month. You got the 60-minute price above. All last week and the week before, what we were looking for on this pullback, price action stay below your 20 EMA on the 60-minute. Then on the start, 21st, 22nd, 23rd, into last week, we started to move above the 20 EMA. Today, we're trying to move and close above the 20 EMA on Apple. Okay, so that looks really good. SPY, same thing. We were looking for a move above 20 EMA. Okay, we got above the 20 EMA. Now we need to get above the 20 EMA on the daily. That's for reference. That's that dotted line, red line. So we're above the 20 EMA on the 60-minute. That looks good. Let's take a look at some other names like NVDA. Okay, so NVIDIA above the 20 EMA, making a higher low, looking for a higher high. I got shares only, no options. I'll probably take an options trade tomorrow on NVIDIA if we can follow through. Most likely we will. NVIDIA is finishing strong. It's at the high of the day. And S&P is trying to break through this pivot right here that we put in on this last pivot right there. There's a pivot right there at 310. And we're pushing through that level right now. Same like what we did with NVIDIA earlier. NVIDIA, we pushed through this pivot over here at 460. That gave us an 8-point, 9-point run on that breakout. You got a buy signal, follow through, VWAP up and to the right. You know the rest of the story. All right, we've been moving sideways, looking for NVIDIA to push to the upside. Apple going. Microsoft is going. Microsoft, good news about ChatGPT. Amazon trying to take out the high of the day. This is looking like a really nice close here, folks. We're starting to run higher into the close. Okay, let's have some shorts cover. A la Vantair is looking for shorts to cover at the high and at the low of the day. Longs at the low of the day, shorts at the high of the day. Take the stops out in reverse. Amazon on the, okay, all the FANG stocks are getting bought. High tech alert, high tech alert. FANG stocks, FANG bid. Okay, here we go. Giddy up, giddy up, giddy up, giddy up. S&P, nice.
Extreme high took alert.
All right, that was a nice surge there. That was a nice one. Nice. Take some profits off into strength, folks. Into this strength, take profits. Maybe keep some on for a gap up tomorrow, but take some profits off into strength. You can always buy a little bit higher tomorrow. Or keep some on. Keep some on, take some off. As the trend strengthens, we'll have a better opportunity. I would say in the next couple of days, we should have enough confirmation that we can have a really aggressive trade, maybe Tuesday, Wednesday, Thursday. That'd be fun this week. All of the FANG stocks are coming out of squeezes, back above VWAP, blasting higher. Microsoft, Google, Amazon, Apple ripping higher here. Apple, thank you.
Extreme high took alert.
I made a mistake. I sold those February calls, 180s. They're $1,413 per contract. $1,413 per contract, not 40. Misstated there. But $1,400 per contract. So that's good. So somebody bought those. I sold them to them. I'm okay. we'd hit that. We'd have to hit 194. I would still be doing well, and I'd just buy my shares back. Alternatively, you could sell put credit spreads, sell the near the money put like the 178, something like that, and buy the 176 for protection for a credit. That's a bullish trade setup. Okay, we're seeing profit. Okay, people taking profits. You can see it. Look at the wick on that candle. Look at the wick, S&P. All right, nice way to close up today. See that wick there? Okay, there's your wick. There's your wick right there. Okay. So we come up and test supply up here. Do we follow through? Be nice if we did. Tick cumulative turning back up. Okay, bullish at the close. And we're doing it on 5-to-1 up volume, almost 5-to-1 up volume on the NYSE, 2-to-1 on the NASDAQ. Way to go, bulls. All right, I'm going to beat this to death, but I'm going to say it anyway. NYSE. We've got NIMO turning. We've got advanced decline percent turning. Okay, until we get to plus 30%, we can get aggressive in here now. Okay, so tomorrow, I'm looking for some aggressive trades on the FANG stocks. If we get a nice follow through, like I'm thinking we're going to, you've got 20% upside on this indicator. So plus 20%, plus 20%, more to go. All right, so we're at plus 10%, looking for plus 30%. Once we start to get to plus 30% on the S&P in the top panel, mid caps, small caps, and a NASDAQ in the lower panel, once we get to plus 30, that's where we're going to start taking profits off in the strength on the swing time frame. Okay, always taking profits in the strength into your best, highest probability. So, looking good, looking good. Okay, we're on a buy signal in the last 11, 12 minutes. S&P buy signal. These are 5-minute candles. Got that big wick up there up to almost to 44.40. All right, what's Fantair saying? 44.26. 44.26, that's VWAP. Oh, you're looking at futures. That's right. Sorry. Futures, 44.26 would be a pullback from here. $44.40. There's a 10-handle difference between the futures right now and S&P cash. A 10-handle difference. No, it's still a 9-handle. 9-handle difference. Okay. 9 handles. Futures are at 44.40. S&P is 44.31. S&P cash 44.31. Futures 44.40. 9-handle premium on the futures. Dollar pulling back again. 10-year trying to bounce. VIX is trying to bounce. All right, take profits, folks. Take profits. All right, so what I'm looking for, what I would love to see tomorrow is another trade like we had on NVIDIA today. NVIDIA was a great trade. I still have shares, so I'm not really worried. But if you have options, you might want to take some off. NVIDIA. Okay. So we had this move through 44.60 was where I was looking for a buy signal right here. Whoops. Sorry about that. Okay, right here. You had 3 higher lows. You had 2 higher highs. And that last higher high right there at 1140, that's where we were looking for the breakout. Price started to move away from VWAP. If you can just get used to that idea. Okay, here's your Here's your high right here. Okay. We got that last buy signal. Price was above VWAP. We started to trend. Often I'll say, I don't buy on the first green candle. I look for the second and third candle. They started to accelerate, break out through 460. That breakout gave you a 9-point run. And for those of you trading options, did very well. I just didn't trade options today. I had some shares. Yeah, Fran, I wouldn't be worried.
Well, Scott, it's no doubt seen as a positive development, this potential settlement, as JP Morgan analyst Stephen Tusa wrote in his note to clients. This earplugs lawsuit involving roughly 300,000 veterans, Scott, has weighed on the stock. It's down about 13% so far this year, underperforming its peers in the industrial space. So, again, this potential settlement is giving investors a sense that the end is near. I'm hearing that Ring's board is meeting today to discuss and finalize.
All right, so it's a beautiful morning. Mm-hmm. All right, higher. Looking for a higher high. We're putting in a higher low. All right, so look at price action. I want to show you something here. Okay, so Corey often asked me about this. How do you tell if it's just profit taking? Well, look at price action. Higher highs, higher lows. And we got a couple of minutes of selling right there. Okay, so just keep an eye on it. If we take it out and we start moving higher, obviously that was just profit taking. Always look at the end of the day for a couple of small candles, 2-minute candles. I'm not looking for like a dozen in the opposite direction. This is just profit taking right here. Apple, Microsoft, looking for a follow through. Okay, looks good. All right, let me take a look at Microsoft Daily. Microsoft. Yeah, Microsoft firmly above the 100 period now for the last 6 trading days. Next, it has to get back above the 50-day at 332. 50 days, let's say 333. 332.93 is the 50-day moving average for Microsoft. I'm looking for Microsoft price to get above that. Once it gets above 332, 333, I'm probably going to start adding to my position that I had from earnings over here. If you remember, I got in some shares at 338. I bought some down here near 325. My average is right back here at 50. So once we get above the 50-day, I'll start to add Microsoft. And I'll probably start selling some covered calls. If you can, get used to selling premium against your positions. It's like a dividend while you're waiting for the stock to do what you want it, what you're looking for it to do. I'm looking for Microsoft to get back to 366. In the meantime, I want to sell covered calls or credit put spreads to add to what the equivalent of a dividend while I'm doing this, every 30 days. Instead of waiting for the quarter, every month I'm looking for these dividends, aka covered calls, to pay me a dividend. Sometimes you'll get called away, your stock will get called away. You just have to rebuy. You keep your option premium, and in the case of Apple, I sold some calls, the February calls, for $1,400. I don't see myself holding on to those calls until February. At some point, Apple's going to do, run up and then move back down. I'll buy those covered calls back, and then just keep repeating the process. But do that, and you can add premium monthly to your positions. All right, 2-minute warning. Less than a minute to go. All right, folks, I'm your host, Cousin Vinny, coming to you from theclosingprint.com, Monday the 28th at the closing bell. I bid you adieu. I got to run out and buy some organic chicken strips. I thought I bought some for Caesar salad tonight. So the kids are looking forward to it. I'm looking forward to making it. Maybe I'll get a little Pinot Grigio. Got some in the fridge. All right, folks. Take care. Got a hard stop. See you tomorrow. Ciao, Bella.